welcome to Fintech Summit 6.0.
I think that deserves
Yes.
a round of applause.
Absolutely. It's such a beautiful morning, and it's a great privilege to be here. I mean, I'm actually having some sort of nostalgia, to be honest, because this dashing, gentle young man who stands beside me, looking all dapper, used to be my senior secondary school head boy some 25 years ago. So this is like a coming full
She actually used to call me Senior Godson back in the day.
No,
But
it's such a privilege and a pure delight to stand on the stage this morning and be your host at this August occasion of the FirstBank Fintech Summit.
just to give you perspective, the last time I stood next to her in the same space must have been about 20 years ago. The first time we met was in secondary school. We actually went to the same secondary school and were in medical school together.
Yeah,
So
that's some history
meeting
down
here
there.
again after all these years is really very delightful. Nice to see you. My name is Tony Usidamen, and I will be co-hosting this event today with
My name is Ademorayo Akpara. I'm a proud first banker, and you can please call me Mo. I think it's just short, simple, and sweet. You agree?
Great.
Yes, thank you very much.
For being such a wonderful audience, for arriving early, I think you deserve a round of applause.
Sure.
Without further ado, ladies and gentlemen, we would like to get the program started. As patriotic Nigerians, I would like to invite us to please stand as we take the Nigerian national anthem.
Nigeria, we hail thee, our own dear native land. Though tribes and tongue may differ, in brotherhood we stand. Nigerians all are proud to serve our sovereign motherland. Our flag shall be a symbol that truth and justice reign. In peace, oh, bow to honor it, and this we count as gain. To hand unto our children a banner without stain. O God of all creation, grant these our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
Thank you very much, ladies and gentlemen. May we please be seated.
Thank you again and welcome to this occasion of the FirstBank FinTech Summit 6.0. It's such a beautiful day to be in this room with distinguished ladies and gentlemen. The FirstBank Summit, it's a collaboration of the industry players and everything that happens within the FinTech Summit. Now, FirstBank has been around for 130 years. I mean, this is our 130th year of being in existence. This is 130 years of legacy, 130 years of impact, 130 years of making everyone a giant in their different corners. I thought I was going to get a round of applause for that. Thank you very much. So this 130 years of legacy is built on partnerships. We say that we put you first. And in putting you first, we are woven intricately into the fabrics of the society. And that's one of the reasons why we are here this morning, as we put together this conversation and discussion around driving financial inclusion and what the future really holds in the financial space and for the fintech industry. So this summit will take us through diverse panel sessions, industry roundtable discussions, master classes, right? There is a lot that we have put together in this summit, and I'm sure that you are going to absolutely have highlight moments, insightful conversations, and we'll present to you the roadmap really to take the next future as we take on this industry and do the best for ourselves. Over the next 2 days, we would have virtual sessions. I'm sure that we do have people joining us online. Very shortly, we would have them. Welcome to everyone who is joining online. We would have sessions here physically. We would also have sessions virtually for our virtual attendants. There will be breakout sessions in the course of these 2-day summits that will feature keynote speeches from industry experts telling us exactly what we need to do and the roadmap as we chart the path. I mean, FirstBank is known for leading the way and being the first all the time. I'm a proud FirstBanker, and really gives me joy to stand on this stage this morning. And to kick off the conversations today, I'd like to welcome to the podium the head of corporate transformation, FirstBank of Nigeria Limited, and person of Olayinka Shitso. A round of applause, please.
Thank you very much for the welcome, and good morning, everyone. And I also want to acknowledge all the people, the growing number of people that are joining us online. We're running a hybrid session, and I'll walk us through what to expect. First and foremost, and I think our host would do that, we do have a number of eminent guests. And right after my opening remarks, we'll acknowledge them and thank you personally for attending. So in terms of Fintech Summit 6.0, banking on partnerships, we deliberated a lot. I think we've not had this for about 2-3 years. And we do recognize, as Mo said, that FirstBank does play a very critical role in the Nigeria, Africa, and the global financial space. And you cannot be in finance, that means you're really at the core of industry and economy. Fintech, as it is, and we've had a lot of discussions and would explore this a lot more, that what is the Fintech bank dynamic? Our keynote speaker will talk to this. A lot of our topics and workshops will explore this a lot more. But we think it's really high potential for both sides, obviously, and a lot of potential and a growth engine, particularly in Nigeria and Africa. Again, not to preempt a lot of the discussions we'll have, but that's, if you will, starting hypothesis. We'll explore some more. So more specifically, I think Joe has spoken, Mo has spoken through this. We'll have some keynote speakers, and I'll let Mo and Tim come and introduce him. Our keynote speaker, Emmanuel Daniel, he will be taking our keynote speaker. And then after that, we're running a pitch session as we speak. I think that has started. We ran a venture competition, and lots of really, really promising ideas, startups joined. We shortlisted 10, and as we speak, they're doing their pitch session. So we're going to award them tomorrow. So as we speak, they're doing their pitch sessions. We'll start with more panels, and by the way, we can all go to fintech.firstbanknigeria.com. So we have a detailed agenda there. So I'm not going to take much more time. Just to say, look, we look forward to a really engaging, exciting 2 days plus, because we believe this is a start of the engagement, this is a start of the conversation. It doesn't stop. So feel free, engage. A lot of us are wearing our FirstBank T-shirts or brands. We really look forward to engaging with you some more. And please, we're not going to lecture you. It's going to be a series of interactive workshops. So we want to keep it as a two-way summit. So I'll leave it at that. And then Mo, will you come back up? So I'll leave it at that and put you back in the hands of Mo. Once again, good morning and thank you for joining us. We look forward to our summit. Thank you.
Thank you so very much, YS. A round of applause, please do it better. Great. What an opening remark. I'm really excited about the next 2 days and the insights, the conversations, the depth, really, of what we are going to hear, encounter, and also take away. At this juncture, I'd like to acknowledge with whole deep joy and gratitude, really, the Chief Executive Officer, Managing Director, FirstBank Nigeria Limited, Mr. Olusegun Alebiosho. He's not just a visionary, but a father. Please continue to clap. He's a visionary, he's a leader, he's a father, he's a friend. Everybody knows him. Accessible, ready to carry you. He's the partner that you require. Please keep clapping as he comes on stage to take his opening remark. Good morning, sir, and welcome.
Thank you, okay, they said Emo, right? It's Mo. Ademurayo. He said Mo. Me, I will call you Ademurayo, not Mo. Because I know you very well, not Mo. Ademurayo. Good morning, ladies and gentlemen. Esteemed guests, fellow industry leaders, and innovators. I'm excited to see many pioneers and disruptors in Fintech space gathered here today. On behalf of FirstBank Group, it's my honor to welcome everyone to the 6th edition of our Fintech Summit program, Fintech Summit 6.0, Banking on Partnerships. Our digital transformation agenda. I want to especially welcome the representative of the Central Bank of Nigeria. No speaker. I do know that many of the government functionaries are on their way. The governor of Lagos State, governor of Ogun State. I do know that many commissioners of states are on their way. I know some of them that arrived yesterday. I'm sure they'll find their way into this meeting. And there's so many other government functionaries that will be part of this event today. I equally express appreciation to invited distinguished guests, partners, and speakers. I also welcome all in-person and virtual participants. Today, we gather to explore the transformative power of partnerships in shaping the future of financial services. As we navigate the rapidly evolving landscape of the financial services industry, it has become increasingly clear that collaboration and partnerships are key for the banking sector to unlock the full potential of its digital and information age offerings. The intersection of technology and finance presents unparalleled opportunities for growth, innovation, and improvement. That is why we are excited to bring together the brightest minds and most forward-thinking organizations to share ideas, explore opportunities, and tackle challenges. FirstBank Fintech Summit serves as a platform for meaningful dialogue, fostering connections among industry pioneers, entrepreneurs, innovators, and thought leaders. The banking industry has long benefited from technological innovations. Think about the automated teller machine, ATM, internet banking, mobile banking apps, practical applications of asset pricing models, and credit scoring technologies that have been around for some years. But the pace of technological change seems to be accelerating as financial services, institutions, and startups embrace more sophisticated, predictive algorithms, develop new products and consumer interfaces, and leverage new tools such as cloud computing, artificial intelligence, blockchain, and hyper-personalization technologies. At FirstBank, we recognize the imperative of digital transformation through partnership with various industry ecosystems like fintechs, telcos, regulators, and technological solution providers. Strategic partnerships have been instrumental in our journey in delivering many innovative-led milestones, such as introduction of the first ATM in Nigeria in 1991, the launch of the first biometric ATM and cash deposit ATM in Nigeria in 2011. Recognized by InterSwitch as the first financial institution in the country to achieve 100 million sustained monthly transactions in electronic payment in December 2015 and again in May 2016. Establishment of our Digital Innovation Lab in 2018, and more recently, the development of our AI-enabled chatbot virtual assistant called Fibani, amongst other notable achievements. This Fibani, we actually deploy Fibani in some of our branches, but now we require regulators' approval or regulatory approval for us to deploy widely. So the rep of the central bank governor will help us communicate this because we need to accelerate this and allow our Fibani to be on the street. We have seen how digital transformation can expand access, improve efficiency, create new markets for all, and enhance customer experience across touchpoints. But we also know that its potential is not yet fully realized. There are still barriers to break down, technologies to develop, and more importantly, customers to empower. Over the next 2 days, you will engage with visionary keynote speakers, participate in master classes, provocative panel discussions, connect with cutting-edge inhibitors, and witness the unveiling of new startups. This summit will delve into pivotal topics such as banking on the future, bank stability and fintech agility, driving innovation through partnerships, cybersecurity and data privacy in partnerships, navigating financial regulation for fintech innovations, open banking and EPI economies, scaling for success, and many more. FirstBank Fintech Summit 6.0 is more than a conference. It's a catalyst for change. We aim to foster partnerships, spark creativity, and drive progress. We believe that by working together, we can unlock new possibilities and create a more inclusive, resilient, and innovative financial ecosystem. Without further ado, I declare the FirstBank Fintech Summit 6.0 officially open. Thank you for joining us on this exciting journey. I look forward to sharing insights, exploring opportunities, and shaping the future of financial services alongside you. Let's get started. Thank you.
Hello there. Welcome to our Digital Experience Center. As you know, we love putting you first in everything we do. We've got the ATMs, so you don't have to walk into any banking hall. And if you want to deposit, you can too with the Telecash Recycler. We have a self-service kiosk available for your personal banking services like your statement request, card block, PIN reset, and other requests. The self-service kiosk offers these various services for all your banking queries and needs. There is the card issuance machine for your new ATM card on the go with no hassles. For our trendy customers, we've got video banking available. With ease, you can sit and carry out all your banking needs. FirstBank Digital Experience Center is innovative, automated, and interactive. It's your one-stop banking solution to a fully digital banking experience. Step in and enjoy a world of possibilities. You first, FirstBank.
Okay, distinguished ladies and gentlemen, it is the FirstBank Annual Fintech Summit 6.0 themed Banking on Partnerships. Would like to once again welcome you, our guests seated here, and all those joining us virtually. As the MD CEO mentioned earlier, our work here is more like the biblical John the Baptist. I and my co-host Moriah are not fit enough to tie the laces of the shoes of those coming after us. We have joining us, some already seated in the hall, banking executives from across the industry. We have fintech leaders and leaders of startups. We have regulators and policy makers, as well as investors and venture capitalists amongst us. To set the tone for our discussion over the next 2 days, I would like to invite to deliver the keynote address for today, Mr. Emmanuel Daniel. A round of applause as he comes. Mr. Emmanuel Daniel is the founder of the Asian Banker. He will be speaking on the theme, Banking on the Future, how strategic partnerships can foster innovation and growth. Mr. Emmanuel Daniel, please join us on stage to kickstart our summit discussions. May we keep clapping till he gets here, please? Thank you so much for being a wonderful audience. Welcome, sir. Thank you.
Banking is beautiful, isn't it? There is a reason why it's beautiful. If I've never met you in my life, and all I had was a piece of paper that told me that you were 1.7 meters tall, that you were 86 kilograms, that your blood pressure was 140/90, I'll have a mental picture of who you are. I will have an idea that you're about this tall, you're a little bit pudgy, and maybe you've got bloodshot eyes because your blood pressure is a little bit on the high side. It's the same thing with financial institutions. I have visited many financial institutions around the world, and very often, just before I visit these banks, I have a look at their financial statements. And a lot of the beauty of what banking is actually seen in the financial statement of the bank. Here we go. This is the financial statement of First Bank. And I've put the financial statements of other banks around the world that are similar in size or in importance and substance in the local economy. One of the first numbers I look at, the cost to income ratio. The cost to income ratio gives me a sense of what the bank looks like at an operational level. Your cost to income ratio is pretty good for a bank of your size. It compares well with other banks in the country, in the region and around the world of a similar constitution. The best cost to income ratio of any banks that I've come across are two banks, one in Hong Kong and another in Kuala Lumpur, Malaysia, which had cost to income ratios of less than about 30%. And before I visit the bank, I already know how conservative the bank is. They don't use consultants, they use their furniture for a very long time, and they have employees who have been with them for a very long time and so on. Got it? It's fine. You want to aspire to a lowest cost to income ratio in order that you are run efficiently. And this is one area where the conversation between the bank and its partners needs to take place. If you are a partner of FirstBank, you need to be able to tell the bank that I'm here to help work with you to keep your cost to income ratio as low as possible. The second profile that I look at is the net interest margin. The net interest margin is a very big story. It tells the story of the bank's place in the local economy, the overall economy, and how banking is an important part of holding the economy together. You will notice that banks in more developing countries where the currencies are at risk have a much wider net interest margin relative to banks in much more developed markets which have a much more robust financial system. So the developed markets like in Spain or in Singapore, net interest margins are very, very narrow. And so banks have to work very hard by using technology in order to retain their leadership in the respective markets. You have a much wider net interest margin, but that is given to you in exchange for holding the economy together. And you have to make up for it in other forms, for example, in the exchange rate of the country. And the third is the net fee income. What's interesting is that a lot of financial institutions around the world wish that they could have higher fee incomes. We are now in a phase in the evolution of the banking industry where fee incomes are below 20%. In the good old days, when the capital markets were well developed, when banks were making good money from credit card transaction fees and so on, fee incomes can be as high as 25%. The best bank with the highest fee income in the world is a bank in the US, State Street Bank, which has a fee income of 75%. And for that reason, sometimes State Street Bank is seen as a technology company more than a bank. And that's because it makes more money processing transactions and processing securities transactions around the world. Banks aspire to become more fee income driven institutions and to become more like IT companies than they are traditional banks. And again, this is a level of conversation that it should have with its partners that you are working with. The non-performing loan ratio tells you how close the bank is with its customer base, how much it knows its customers, and the relationship it has that will not result in surprises. It is not a bad thing to have a high non-performing loans if the bank is going into new areas or high-risk areas where it requires to face or provide communal service to the local community. And in return, the bank is given greater access to the community. My most favorite number that tells me a bank's strength is the loans to deposit ratio. In any business, the asset size of the business is the number that tells you how profitable the business is, because the asset is where the income is generated. The assets in the banking industry are the loans that you give out to the customers. But the interesting thing is that a bank that is fully leveraged on its asset, fully leveraged in lending out to its customers, are not necessarily the most profitable banks in the world. In fact, the banks with a lower loan-to-deposit ratio are very often the most profitable banks in the world because their deposit base tells me that they have a much stronger linkage with the community, and their cost of funds as a result is among the lowest in the marketplace. And because of its low cost-to-income ratio and because of its low cost of funds, the bank is able to navigate through many different decisions that it needs to make and prepare for shocks in terms of the non-performing loans that comes back to the bank. And it can also focus on the high profitable customers, the low risk customers, which is where a bank wants to perform in order to be profitable. Now, all of these are numbers that tells me what a bank looks like in its local community. A bank with a good loan-to-deposit ratio, when I visit the bank, it has a good distribution base. Very often, it is a bricks and mortars branch base that has been built over many, many years. Despite the onslaught of technology, the bank's most profitable customers are your oldest customers, are your most secure customers, your customers with incredible personal wealth and who are not interested in moving their relationships around. And these relationships takes a long time to build, and it shows up in the balance sheet because you have a low cost of funding. Even when you grow your credit business, you're able to grow it with confidence because you're going back to customers you already know. The Nigerian market is a highly competitive market. Among the top 5 banks, none of you actually dominate the market. And so just by looking at the numbers, I can see that this is a highly competitive market, both on the deposit side as well as on the lending side of the business. And here's where the story starts. On the fintech side, we classify fintechs in falling into one of 3 different categories. You're either disruptors, originators, or vendors. Many fintechs start their business thinking that they're going to upset the banking industry, that you're going to overtake the banks, and soon there will be no need for banks. Many of these fintechs, over a period of time, come to realize that banking is not a technology game. It is a balance sheet game. You're only as good as what you look like on the balance sheet that I've just shared with you. Having said that, there are fintechs like Nubank in Brazil, which are revolutionizing finance in that country. Nubank is introducing access to finance to millions, in fact, hundreds of millions of people who've not had access before. And in that same way, Tencent and Alibaba, for example, entered the market in the mid-2020s and 2010s and 2000s, and build a payment network which is ubiquitous in China today that the banks cannot compete with. And you can go down that list and look at Kakao Bank, which started as a digital-only bank and dominated the foreign exchange market and so on. And each of these players have a story of their own. Many fintechs have now relegated themselves to becoming originators of business for banks and some vendors. In other words, you're nothing more than an IT company that serves to build the bank's own infrastructure. But a new form of players are coming on stream, and these are ecosystem builders. It starts with players like Amazon Web Services, and in China you have Ali Cloud, but also the communal platforms on which programming is done, GitHub, and other platforms like that. And in the AI space, you see a lot more collaboration in order to be able to share data and to generate the knowledge that comes out of that. And these ecosystems are new, and they are transforming how finance is delivered at the communal level. There used to be a time when finance was all about a static P&L, a general ledger that sat in the core banking system of each bank. But increasingly, the collaboration to be able to share data and to access a wide community is becoming very important. The best form of collaboration that I've seen is when banks take stakes in their partners. And the best of these models that exist in the world is run by Standard Chartered Bank. It's an organization called SC Ventures, which is the venture capital division of Standard Chartered Bank that actually sits within the bank. It's not a separate institution, and the investments that it makes in its partner organizations, in its fintech that it wants to believe in, are actually reflected in the bank's overall statements. In fact, right now, SC Ventures has about $1 billion of investments in fintech startups. When a bank does this, what it's saying to itself is that we don't know where innovation is going to take us, but we will take a bet on players that we think will make it, whether or not they are our friend or our foe. A number of the companies that SC Ventures has invested in are potential competitors to SC Ventures. So you have Nubank, as I mentioned, in Brazil, or Kiva, which is an online lending platform to small businesses, and OpenFin and Bamboo here in Nigeria. And it takes an investment which then puts it at risk with its investors, who keeps questioning StanChart as to the quality of its investments, which investments it will divest, and how they will perform. And in some of the investments, StanChart is actually facilitating the growth of its own competitors in the marketplace. And over time, SC Ventures has 26 investments. They're not all doing well, but the bank is learning from its investments. And SC Ventures sits inside the bank's own headquarters, where they interact with the bank's own staff who are focused on areas like innovation and strategy. And through that process, they learn from each other and contribute to each other's growth. Now this, I think, is perhaps one of the highest form of collaboration that the bank can have, and it comes when the bank has capital to play with and also has the confidence to want to learn from the innovations taking place in the industry today. There is something that the buy now, pay later phenomenon did not realize originally, but then over time we found that they learned their lesson. When the buy now, pay later phenomenon first evolved, Many of the technology players thought that buy now, pay later is all about technology, about making the lending business as frictionless as possible. But as I said in the beginning of my presentation, the banking business is a balance sheet business. It's not a technology business first. The technology comes later to be able to support that. And many of the buy now, pay later players were motivated on the platform industry, where the idea was to generate as many customers as possible and then to monetize them. But they were only as good as the venture capital support that they had. And at all times, a traditional bank with the best access to its local market had access to the best credit customers at the lowest possible cost, because you already have the deposit base to be able to fund that. And deposits are always the cheaper form of funding than venture capital. Today, many fintechs are inspired by the idea that through valuations you can be a billion-dollar company and more, thinking that at some point you'll be able to monetize your investments and the work that you're putting in. But it's the traditional bank, the good old-fashioned bank with a good customer base and a good source of cheap funding that will be able to outpace you over time. And what we've seen in the buy now, pay later phenomenon is that many of them have failed. And the ones that have managed to succeed have been able to do so only because their venture funds were able to match the deposit base of their competitors in the respective markets. And buy now, pay later has evolved even further. Many of the buy now, pay later players have moved from the disruptor column of the definition of fintechs to the originator column, in that they now need to hand over the customers that they acquire to the traditional banks to be able to manage them on the balance sheet. And so that battle continues to be played in other parts of fintech as a phenomenon. Ten years ago, when I went to South Africa thinking, how was I going to build my business in Africa? The South Africans told me, go to Nigeria, because that's the future of Africa. And so I came here, and I met many bankers, and it was a very promising phase. But today, when I come to Nigeria, you have fallen down the ranks of the largest economies in Africa, from the second largest to the fourth largest. Countries like Algeria and Egypt have overtaken you. And it's a country that is finding it very difficult to build its own organic industries that can support the overall economy. There's another country that had a similar problem. It was called Bangladesh. In 1971, Henry Kissinger was reported to have built that phrase, basket case, to describe countries like Bangladesh as being nation states which have no hope of holding together over a long period of time. But Bangladesh went on a journey over a period of time from a country that is beset by typhoons, floods, and overpopulation, to becoming a country that kept working on its textile industry. At first, the textile industry was all but sweatshops, and there were hundreds of them, and many of them were not even safe. But then at the back of the textile industry were the NGOs of many different forms that were supporting them and trying to improve the livelihood of the local people. And over a period of time, through self-governance and through the role of NGOs, every time you hear a fire in a sweatshop in Bangladesh, they set out to improve the level of competencies, the level of security, safety, working standards, and so on. But the most interesting of the NGOs that contributed to the development of Bangladesh were the microfinance organizations. And this man, Muhammad Yunus, he went out and lent money to women in the villages in groups of 6 or so in order to be able to maintain the security of his credit. And the revenue generated became the liability side of the business. And through this secure relationship between the liabilities and the asset side of the business, he was able to build a formidable infrastructure, financial infrastructure, that helped millions of Bangladeshis out of poverty. And in 2006, he was awarded the Nobel Peace Prize for his work in economics. The Chinese online players in the period between 2010 and today learned from the Grameen Bank and the BRAC Bank experiences and digitized them. The information that Grameen Bank was able to secure only by sending field officers out into the village to take down the names and the identities of each villager was manual and labor intensive. And the Chinese players then digitized that and made it much easier for providing financial access to people in the villages and so on. And through that, you have financial players like Ant Financial and JD Finance, which have got lending platforms that goes out into the hundreds of millions of customers in order to be able to lend in 3 seconds to get an approval on the back of a supply chain network around a factory that sells milk to the local community and so on. So I hope that you're paying attention to the underlining theme that I'm getting at here. It's that connection with the local community that makes the whole difference, that you're trying to digitize and you're trying to monetize. Something very interesting happened in 2020. The per capita GDP of Bangladesh exceeded that of India. And the Indians were upset. They thought that it was going to be a temporary phenomenon, but the per capita GDP continues to exceed that of India. And not only that, a country that only produced cotton and then made the textile, which is then sent to other countries like Indonesia and Hong Kong to be made into fashionable goods and so on, started to go downstream and bring all of those value-added industries into Bangladesh. And that was one of the contributors to the per capita GDP going up. And today, Bangladesh is one of the world's leading textile manufacturers and of branded goods around the world. The interesting thing is, the Indians tried to copy the Bangladesh microfinance credit business, except that what the Indians did was to fund it with venture capital money. And they went into the villages, and instead of lending it to stable communities of 6 women, they lent to men who are migrant workers from the villages into the cities, which is a very unstable community base to lend to. It got so bad that the level of suicides went up so high that in the year 2010, the state of Andhra Pradesh banned microfinance in its state, in India. So what I'm trying to point out to you is that there's a fine difference between succeeding in finance by throwing money at it and throwing technology at it, and succeeding in finance because you're close to your community, you understand your people, and you have a very strong relationship with them. And that is why banking is beautiful. And when you have that vision, that's when banks and fintech players start to collaborate. The first basis of collaboration is that you have a shared vision of what the future can look like in the communities that you serve. In Africa right now, many of the fintechs are focused on payments. That's the easy part. In fact, payments is a very simple business. It's an information business. If I can send a text message to you for free, technically, I should be able to send a payments message to you for free. And that is the basis of a lot of the revolution taking place in payments per se. What's nice is the valuations of a lot of the payment players in Africa is very attractive. Except that realizing these valuations is not a done deal because many of the stock markets in Africa are not doing well. In fact, even the US stock market is not doing well in monetizing or listing fintech startups. This year alone, there's only been 2 fintech startups, and those were 2 delayed fintech startups from previous years in the US. So the valuations that you see here are paper valuations. We don't know where they're going to go. But what needs to happen is, what happens after you ace the payments business? And there's a phrase that I say in my book, of which I have several copies here that I would love to share with some of you, is that if the product doesn't change, nothing changes. And that is the essence of innovation in finance. If all you're doing in finance is replicating the products you already have, you are not making a difference to the society that you serve, and it's just as well that you didn't exist. For a very long time, Philippines has been exporting millions of its citizens out to the rest of the world as employees. And this whole remittance business of sending money back to the Philippines was a big industry that the banking industry just couldn't ace. Because with the hawala businesses and with the money remittance companies, which are able to remit money at a much lower cost, and even the telco companies here in Africa, it's an industry that the banks never quite understood and could not improve on to be able to be competitive. But the Philippines banks figured out something that they could do, which the hawalas and the remittance companies couldn't, which is to enable the remittances that are being created to buy homes in the Philippines, to create assets that generate wealth for these workers who are outside of the country. The Philippines today has a remittance industry of about $40 billion. India is at the very top at over 100 billion, 120 billion or so, then China, and one other country, Mexico, I think, and then comes the Philippines. And Nigeria is about $20 billion a year worth of remittances. What happens to those remittances when they come home? What are the banks doing to be able to finish that transaction and in asset creation at the local community level? This is the kind of thinking that needs to go in order to be able to be relevant to the local community that you serve. And once again, the per capita GDP of the Philippines rose almost double from about 2010 because the banks enable its workers abroad to be able to create assets at home. Someone was asking me yesterday, how do you be able to measure what the effect is in the local community? I said that when you go to any village in the Philippines today, the biggest problem they have is childhood obesity. In other words, children are living happily, and their problem is that they need to be healthy as well. There are other areas in finance where if the product doesn't change, nothing changes. Trade finance. Today, the Chinese companies like Shein and even TikTok, which I think is very popular in many countries around the world, are enabling village farmers and village handiwork craft people and so on to be able to sell their goods around the world and generate wealth in their local communities. And a lot of these transactions are today taking place using stable coins, because these farmers and these village workers cannot wait for the banks to reach them, cannot wait to be trusted by the banks to become a customer. And the technology that exists to be able to give them access globally is already opening the world to them, but the financial institutions are not reaching to them quick enough, fast enough. And another area where there's a huge revolution taking place right now, incentivized by the Bank for International Settlements, is that the humble deposit business itself is being revolutionized. I said to you at the beginning of this presentation that the bank with the strongest deposit base is a reflection of its relationship with its customer base. And that's why it has the lowest cost of funding with which it is able to make many decisions that other banks can't. But what the Bank of International Settlements want banks around the world to do today is to tokenize their deposits. We've already seen how deposits have become digitized. In the good old days, if you wanted to take money out of your bank, you needed to go to the branch, queue up with everybody else with your passbook, which is handwritten, and then you have access to your money. And today you have access to your money on your mobile device. That's digitization. And digitization comes with its own risks. Remember Silicon Valley Bank? What happened to Silicon Valley Bank? Just on the strength of a tweet from someone like Peter Thiel, $10 billion can leave the bank without any queue at the branch. One day. Another day, another $10 billion. The third day, the bank goes into insolvency. So digitization already introduces incredible risks to the banking industry. Imagine the incredible risk that tokenization will introduce to the banking industry when your bank is forced by your regulator to tokenize your deposit base, which means that your customers can decide how they want to use their tokens, how they want to interact with each other and pay each other, and the applications that they can add to those tokens. What is happening in finance today is that rules that have already been created and become a reality in decentralized finance are finding their way into traditional banking. Traditional banking already knows how ruthless the internet can be when you have access to your digital deposits. It's going to be even more ruthless when banks start introducing tokenized deposits. In decentralized finance, if you take a cryptocurrency, I know that's a bad word for some of you and you really hate it, but don't hate the technology behind it, because it's coming to haunt you very soon. In a traditional bank, when you process your transactions, you do it in a batch processing. You only know what your daily P&L is at the end of the working day after the P&L has been batch processed. In cryptocurrencies, you know your status instantly every second, and no one person controls it. It doesn't sit in a core banking system. It's 24/7. It's not leveraged. it's accessible, and the users of decentralized finance are able to create their own programs on it and direct it to any form of usage that they want without a financial institution being in the picture. That reality already exists today, and it stands alongside traditional banking, and it's setting the rules that traditional banking is trying to match, but with great difficulty. And there's one aspect of decentralized finance that traditional banks have not been able to match, which is the whole idea of APIs. Remember when APIs first came into being in the late 2000s? The central bank told the banks, be careful of your data. Keep it safe. Don't give it to your partners. Don't give the fintechs access to your data. And today, because of the cloud and because of the networked world we live in, the data that exists outside the institution has become more important than the data that sits in the institution. The data that sits in a bank is a general ledger data. It's historical, it's static. It doesn't tell you anything that you need to know about the customer. If you are a Grameen bank going out to the villages, you don't know when the woman's husband died, or son went off to school, or she didn't make a payment, or something of that sort, and you would not be able to run a village business with the kind of core banking systems that we have today. And today, the API revolution has gone even further. Many of you as fintechs here say, maybe we are the APIs for the banks. No. The APIs for the banks today are the little boys and girls sitting at home and building their own APIs on their gaming sets. They want to be able to decide how they interact with the banks. And so that revolution had already passed the banking industry, and the banking industry is trying to cope and understand how it needs to play in the future. In some parts of the world, they've introduced this idea of open banking, where corporations and non-bank businesses can have access to the bank's data, but that's only a halfway measure. The whole infrastructure and the technology exists for the end user to decide how he wants to interact with the bank. Another reality that you cannot deny is that the young people see wealth creation very differently from the rest of us. And I'm just assuming the rest of us are older. This is the story of a young Indian boy whose social media handle is Meta Kovan. He grew up in the south of India, so poor he couldn't afford a laptop. And finally he got his hands on a computer, and he was so in love with Bitcoin that he just spent all his time accumulating Bitcoin when nobody was interested in it. Today he's a billionaire. And he came to prominence because a few years ago, he bought one of the most expensive to this day, virtual art in the metaverse, this thing by a virtual artist called Beeple. And he bought it for $69 million. This boy moved to Singapore and now lives in Singapore, doesn't own a house, doesn't own a car, and still exists entirely in his mind in the virtual world. The young Nigerians are not interested in walking into your bank branch. They're not interested in accumulating wealth the way you and I have become accustomed to. They see a reality that you and I don't even begin to understand. And it is not our job to stop them from making that reality possible, even in Nigeria. The world has been moving in technology terms from platforms to a high degree of personalization. So some of you as fintech players, you want to ace the world as platform players. Platforms have several rules. Platforms is a winner-takes-all industry. Platforms are funded by venture capitalists who have all the money in the world to burn until you dominate that space. Personalization has a different set of rules. It's governed by the rule of customer-level profitability, customer-level ownership, and customer-level relationships. We are moving into that world, and in that world, there is no institution that's the winner. It's the end user who is the winner. And the rest of us as institutions, as service providers, have to figure out how we are going to function in that world of that individual. There has been so many technologies that have transformed the world to what we are today. Just looking at the list from 2007, when Facebook and YouTube and so on were first introduced, and how they have changed our lives. But even during that period of time, technologies like VMware, Hadoop, Watson were the precursors to AI as we know it today and the way in which it's being delivered globally. And today, we have already AI, the metaverse. Even simple things like battery life of your phone has been changing. It has been increasing, which means that your humble mobile device is being able to do much more than it did before. Imagine how much power it's giving to the individual to own the relationship and transact with all of the service providers around them. I put so many innovations that are taking place, autonomous vehicles, for example, that makes the car into a robot to be able to come and pick you up when you want to go home rather than you driving yourself home. And how does that change relationships with institutions and the way in which we live our lives? There is something that I want to say to regulators because I heard that there are regulators attending today's session. Yes, it's very important for regulators to safeguard the integrity of the economy and the safety of the end user. All of the possibilities that I've spoken about, they also come with immense risks because it opens up data, it opens up institutions to all kinds of frauds that can take place. But at the same time, regulators have to figure out a mechanism by which they follow the innovation rather than lead it. In the early 1900s, when Henry Ford introduced the automobile, or the popular form of automobile, the assembly line, the rules in New York were against the automobile because the automobile upset the horse carriages that were dominant in that period of time. The automobile was heavy, it was loud, it was noisy, it was uncomfortable, it damaged the roads because the pneumatic tire hadn't been invented yet, and it shocked the horses. So many rules put by the regulator were in favor of the horse carriage. And then the automobile became quieter, faster, more comfortable, and all of those rules started to drop away because they didn't make sense anymore. And that's how technology will take us. I started this presentation by talking about the balance sheet. The balance sheet itself has changed. Those of you who are senior bankers remember a time when your balance sheet was primarily mortgages or primarily corporate loans, 90%. And then it became retail. And then it became transactional in securities. And then it became interbank lending. And then it became global. The Basel regime itself evolved from a focus on mortgages that's set in the book to securities to derivatives. What will the balance sheet look like going forward? Because the BIS has already put in place the legislations or the rules required for banks to carry digital assets on their balance sheet in the future. And those will introduce new forms of risks that we are not aware of today. So I want to leave you with two thoughts. If there's nothing else that you remember from what I spoke about today, where there is no vision, the people perish. And there's another phrase that I learned from a long time ago. He is no fool to give up what he can't keep to gain what he can't lose. And that's what the future requires from us. Don't try to protect something that is going to go away anyway. Start to embrace the future that is coming, even if you are unclear about what it's going to be. Why is banking beautiful? Tomorrow it's because it's about the end user. Today it's because it's about your customers, your relationship with your customers. And that relationship shows on your balance sheet. Thank you.
Would you please wait? I think our keynote speaker deserves a bigger and better round of applause. He is an internationally recognized leader in the financial services sector, and he has been shaping conversations around digital transformation. I'm sure you'll all agree with me that that was a very, very insightful keynote address. It will honor us and oblige us by taking some questions, but before we get into the questions, let me just say a few things that I noted while you were giving that very eloquent address. And you also ended the same way you started. Banking is not a technology game. It's a balance sheet game. How many of us pick that? Because at the end of the day, it boils down to what? The numbers. The numbers. And another thing you said that I found very instructive is that for us to get the unserved, the underserved into the net, collaborations, partnerships are very important, which is why what FirstBank is doing with the annual Fintech Summit is very, very important because it highlights the importance of collaborations between traditional banking institutions as well as fintech companies in building an inclusive, customer-centric banking ecosystem. Thank you once again for the very, very, very beautiful presentation. We shall now have 10 minutes of questions and answers. So if you have a question, please raise up your hand. One of the ushers will come to you with a microphone. Just briefly state your name and the company you represent and go straight to the questions, please. Let's keep them short and brief. If you have a question, with a raise of the hands, and the ushers will come to you.
Okay, thank you so very much. My name is Suju. I work with FirstBank. So you said that right now we are focused on our customers, that tomorrow it will be the end user. So I want to know, what is the difference between the customer and the end user? Are they not the same? Thank you.
Very good question. In fact, every time I say that finance is becoming personalized, Bankers always say to me, yes, we understand what personalized is. We're going to make our customers feel special, and we're going to package products that is specific to that product, to that customer. When I say personalized means the customer no longer needs you. The technology exists today. If you take crypto, the transactions are between individuals without an intermediary. So the technology exists, whatever it is that you think about crypto. And the need for intermediaries are deconstructing. And the institution has to be reconstructed to figure out what role you play in a transaction. In any forms of transaction, whether it's payments, loans. There was this experiment called peer-to-peer lending, where there were players, Fintech players, who built platforms in order to be able to match the borrower and the lender. That's an area where there was no need for a bank. And in fact, the lending didn't even get onto a balance sheet. Now, that model has to go through a process of renewal with new AI technology and so on, and that will be another speech, again, entirely on the use of data and the amount of data that is coming at us from the conversations that ordinary people are having with each other. And when you put that amount of data on a platform and you put AI on it, you can start making sense of that data. And there, borrowers and lenders can meet each other without a bank in the story. So the whole idea of personalization is that the intermediary is no longer needed. That's the big distinction.
Hi, good morning. My name is Chike Okonkwo. I work with Gamic, co-founder. We're in the Web3 and crypto industry. I saw your presentation where you said banks can hardly keep up with DeFi. As somebody who is very decentralized, a pro-decentralized person, what's your advice to government in creating policies that will help DeFi companies work closely with banks rather than it being a problem to banks? Because we get faced with that friction when we're talking to bankers about DeFi solutions.
What some governments have done around the world is that if you don't understand something, bring them closer to you. Keep your friends close, but your enemies closer. So during the time when they didn't understand crypto, they invited the crypto companies to be incorporated in their jurisdictions so that they can learn from them. And over a period of time, they created the legislations that they now have in place. And these governments include Singapore, which is where I come from, and then Dubai and Abu Dhabi jointly, and then other jurisdictions around the world, Luxembourg, and so on. The thing that is happening in crypto is that it is so divisive in terms of opinions. There are people who believe in where crypto is taking us, and people who just think that it's a Ponzi scheme. It is in some ways, by the way. But the technologies that come behind it have to be understood and harnessed, and they are beginning to define how traditional banks have to behave. They're setting the standards for traditional banking, as I've described in my presentation. So the best way for a regulator is to onboard. You can have, you can have pools of experimentations taking place in your own jurisdictions.
Thank you very much, sir. Can we have another question, maybe from this side of the hall? Yes. Please, can you give the gentleman down there the mic? Thank you.
I was looking for the word sandboxes, which I don't like very much, but yeah.
Thank you so much, sir. My name is Odmiri Charles from Go Forward Farm. I actually love what you said. It's been a thought in my mind because we all understood that everything bank today is online. Most of the activities are online. And we also know that the internet is like the faculty of the human existence. So everything the bank does is on the internet. And we also know that internet actually began on a particular day. It's a window. So my question is, since all the banking activities are based on the internet, what will become of Fintech when that window that is called the internet is closed? Because definitely, if it began a day, certainly something could happen the next day. So what becomes of Fintech when that window called internet is closed?
I didn't get
Saying the internet started on a particular day, and he expects that sometime by some design, the internet is going to come to an end. I don't know if that would happen if we have an imminent end to the internet.
The thinking that you're applying to the end of the internet comes from the world of transaction as we know it today. In other words, when you try to sell me something, I have to buy it from you at the best possible price. And you have to sell it to me at the best possible price. And after we complete the transaction is over. You either win and I lose, or I win and you lose, and that's it. That's the world in which we operate today. The internet is a totally different universe. It's a universe where all of us are networked with each other. It's not going away. There is no end anymore. And the most important asset on the internet is information. And just think about this. If I buy a house from you, on the day we sign the transaction, you lose the house and I get the house. But on the day that I give you information, I don't lose the information. And then I give the information to someone else, and then I give the information to someone else, and someone else. And my value in the network grows the more I network with the community. Right? So the simple answer I'll give you is that the end of the internet is not ever going to happen. In fact, you can't find the end anymore. And the greatest safety and security for us on the internet is actually to be even more networked than we are. So I'm answering your question by not answering your question, because the reality that we are getting into is a wholly different universe than one we understand today.
Thank you very much. One final question, and then we close the session. Do we have one? Okay, the lady in the blue jacket.
Okay, thank you. My name is Ijoma, and I work for FirstBank. So my question is based on partnership with fintechs. So in the course of your presentation, you mentioned about Standard Chartered Bank having a venture capital arm to invest in these fintechs. So now I'm asking on behalf of the bank now, is it going to be a better deal to go the venture capital way by investing in these startups, or is it going to be advisable to adopt other means like creating our own in-house fintechs and then competing with the other fintechs? Thank you.
The challenge that traditional institutions have in any business, whether it's banking, airlines, telecommunication, is the incumbent finds it so difficult to absorb new technologies or even to create a new business line on their balance sheet saying, okay, this is a business that we want to grow into. One question I've always asked the telcos is, why is it that you guys have not been able to ace it in finance or financial services? You have all the data of your customers. You have their payment data of their telco bills every day. Going into financial services is the easiest thing in the world. And yet, there are almost no telco companies in the world that have a financial services division that is making money or that is significant enough. In the same way, some of the new revolutions that I'm talking about, the traditional bank will find it so difficult to understand. And so the huge struggle that all banks go through is, how do we absorb these revolutions that are taking place, help our own employees understand what's happening, and then create the divisions inside that can help mobilize us. This is the challenge that all banks have. And different banks have taken different routes. In fact, I've got slides where if you're a large bank in China, for example, where you have a development team of 10,000 people, the big four banks, that's the size. You don't need to work with fintechs. You have all the talent skills that you have internally. And then you go to an island in the Caribbean or in the Pacific Ocean, which has 300 employees. Every technology they have has to be bought from somewhere else. They are dependent on the IT vendors. So you have these two extremes, and then you have every other variations in the middle. So you have to decide for FirstBank where you play. There are benchmarks that you can use. How much do you spend on technology yourself? What percentage of your income is technology spending? If you're spending enough or too much, and that's also a decision that the CEO makes or the board makes, that we want to be a technology-driven bank, and therefore 60%, our technology spend will be 60% of our cost base at least, okay, or 30%. I think the number is, the banks that spend the highest on technology is about 5 to 6% of income, right? So there's a big difference between 5% and 3% of income spent on technology, and how much resources you can put aside to absorb the new technologies coming into play. And that's where the fintechs need to start thinking like a bank to understand how to work with the banks that are your partners. How much are they spending? What is the likelihood that this bank will be able to do this development work internally? And how fast? Because as soon as you get your application in place, it's time to compete on the next level. There was a time when just to build a swap account took a bank 6 years. Banks don't have that time anymore, that kind of luxury of time anymore. If you're not out to match your competitor within 3 days of the day that they put their advertisement out in the newspapers, you're out of business, or you will not catch that market share that you're looking for, right? So that's the range of different players there are. So what StanChart did, StanChart has the confidence and the bench strength internally of building its own applications on a global basis. So it has the confidence that it already knows what it wants to do. By adding the venture capital arm, it's doing two things. It is making itself one of the venture capitalists who sit in Silicon Valley. In other words, we are a player too. You know, we want to make the deals. We want to be in the know as to what's coming up and all that. So here, this is our money. We want to put that on. And so they learn things which are different from a bank like FirstBank, which is doesn't have a venture capital arm, but has partnerships, right? Now, then the determining factor of which banks move quickly depends on each market, how the regulator allows you to get into new businesses that didn't exist before, and how aggressive you are and all of that, right? So it's a decision that you make to deal with your own internal corporate culture. But what I'll say is this, that for most traditional institutions, this is a losing battle when you try to keep up with the fintechs, because the technology keeps changing. We are just on the verge of quantum computing. Almost everything I say is going to be invalidated when quantum computing becomes prevalent. Not just AI, right? So the question is, how do you as an institution create a culture that even if you are not making the right decisions, you have enough of a culture to absorb the new technologies as they come on board? That your people know how to respond quickly and then stay alive another day.
Mr. Manuel, we do have questions from our online participants, and I'm going to read that out shortly. This is a question from Babalola Ibrahim, and the question says, what's tokenization? What advantage does tokenization have over digitalization? Using the Silicon Valley example that you mentioned while you give your address. Thank you.
So what I'm saying to you, and this is maybe new to you, because the Bank for International Settlements has already put in place all the structures required for banks to carry digital tokens on their balance sheet, for corporates to carry digital tokens on their balance sheet, for central banks to carry digital assets on their balance sheet. That's 1st January 2025, okay? And the Bank for International Settlements went through this whole process of encouraging central banks in every country to introduce central bank digital currencies, okay, which is the central bank version of cryptocurrencies, in that this is issued by the central bank and therefore it has the certainty of the state and all that, right? Cryptocurrencies, well, at least Bitcoin is issued by no one. And that's the scary thing for a lot of countries. Many of the other cryptocurrencies are introduced or owned by, either venture capitalists or groups of people who have a technology to pursue. Then the Bank for International Settlement figured that a retail CBDC doesn't work because it bypasses the commercial banking industry. So today, the Bank for International Settlements is encouraging banks around the world to tokenize their deposits as an alternative to issuing a central bank digital currency. What I said about Silicon Valley Bank was that it was a victim of banks that have highly digitized their deposit base. So think about this. Deposit bases used to be physical, boring, sitting on the general ledger. It's just an accounting statement. And then it became digital in that you as the end user could decide when you wanted to use it, where you wanted to use it, how you wanted to use it, and how fast you wanted to use it. And so the bank has less control over when you can collect your deposit. And what happened in Silicon Valley Bank was that there was a bank run without queues outside the bank branch. And it was in seconds. Peter Thiel puts out a tweet on a Tuesday morning. On a Wednesday morning, $10 billion leaves the bank because just about every company in the Silicon Valley area withdrew their deposits. That was the digital part of the story. As you become more digital, you run the risk of being in exactly the same trouble in the future. But then a new story is now coming into play, which is tokenization. And here, your end user takes money out of the bank account, not as an accounting transfer, but as a real token. It can sit on his mobile phone, and he can then pass it on to another person without the bank being involved. So what banks now have to do is to make themselves even more attractive. How do banks make themselves attractive in the deposit business today? Interest rates, right? You give a higher interest rate than your competitor, your depositors come to you. But in a tokenized world, you need to add other forms of attraction. Applications, for example, interoperability, stuff like that. So the rules of the deposit game is changing dramatically. And maybe that I can tie to this point about innovation and investing in innovation. First, you need to already start thinking about it today. That's where it's going. Second, you need to start talking to the players who know what's going on and who are already doing things in the tokenized space. And some of them are stablecoin players. Some of them are players in other markets and so on. That's how you prepare your institution for what you think you need to do when the tokenized industry comes into play.
Ladies and gentlemen, can we give it up for our keynote speaker, Mr. Emmanuel Daniel? Thank you so much, sir. It is still the FirstBank Annual Fintech Summit 6.0. We say a big thank you to our audience seated here and to those joining us virtually as well.
Thank you so much for your attention and patience. At this point, we will take a 20-minute break. It's 9:54, no, 11:38 by my time.
Okay.
So let me just wait on. All right, so we will take a 20-minute break for tea break and leg stretches. We would like you to just use the time to network, get to meet partners, venture capitalists in here. Thank you so very much. Okay, great. I had to just be, increasing the decibel of my voice. All right, so we will take a short break at this point. We would like for you to please, get the blood flowing through your legs so that, there are no cramps. Network, there's tea break, grab something to eat, speak to somebody you haven't met before. Please engage. Say hello to at least 3 persons that you are seeing for the first time. If you are sitting on a table with people that you already know, maybe that is wrong, right? Because in this kind of summit, you should be able to interact. Ensure that you take phone numbers. I was on a panel, a session one time, and networking tips 101. Ensure that you get 5 numbers of people that you have not met before. So I'm sharing that tip with you. While to take the tea break, it is 11:39. We will be back by 11:59. So do enjoy your break, and we will be back. It remains the FirstBank Fintech Summit 6.0. Thank you very much.
Remember, we still have important panel sessions to come, so endeavor to return at 12, actually, at 12 noon. Let's return to the hall at 12 noon. Thank you very much.
Okay, so while we take the pictures, we would like the Chief Executive Officer as well as the keynote speaker to kindly come on stage so that we can take the pictures.
Mr. Daniel.
We would like to take a picture with you, the MD.
and round.
Come on.
Mavis.
I know a place, y'all. I ain't nobody crying.
Say it ain't no.
Help me, oh yeah.
I said it ain't no.
Smiling faces.
No, nobody worrying. No smiling faces lying to the graces. Help me now. I said if you're ready.
I'll take you there.
I said
Mercy, y'all. I'll take you there.
come on if you're ready.
Mercy, yeah. I'll take you there.
Simple way to come on, ain't nobody crying.
Lord, have mercy. Let me take you there. Lord, have mercy.
Help me, Lord. Say mercy, mercy now.
Help me, let me lead the way.
Come go, come go, baby.
Ready now. I'll take you there. Hey, if you think you're ready now, I'll take you there.
But good times and happy times.
Digital Hello there. Welcome to our Digital Experience Center. As you know, we Hello there. Welcome to our Digital Experience Center. As you know, we love putting you first in everything we do. We've got the ATMs, so you don't have to walk into any banking hall. And if you want to deposit, you can too with the Telecash Recycler. We have a self-service kiosk available for your personal banking services like your statement request, card block, PIN reset, and other requests. The self-service kiosk offers these various services for all your banking queries and needs. There is the card issuance machine for your new ATM card on the go with no hassles. For our trendy customers, we've got video banking available. With ease, you can sit and carry out all your banking needs. FirstBank Digital Experience Center is innovative, automated, and interactive. It's your one-stop banking solution to a fully digital banking experience. Step in and enjoy a world of possibilities. You first, FirstBank.
Here's a card we no go give you stress at all. Zero waiting, zero queue. FirstBank is Petra card. Here's a card we no go give you wahala. Zero trouble now for you. FirstBank is tell off it tell off it spoiler. Who won't break them? Where you want say now only you get them. Nothing fit do one. Sharp, sharp payment not the way. Swipe they go, you know go away. Veteran card with the sweet body. Veteran card with no the shame person. We put you first again. FirstBank Veteran card, we put you first again. Generate your virtual card, we put you first again. FirstBank Virtual card, we put you first again. Just generate your virtual card. Here's a card we no go give you stress at all. Zero waiting, zero queue. FirstBank is Petra.
Hello there. Welcome to our Digital Experience Center. As you know, we love putting you first in everything we do. We've got the ATMs, so you don't have to walk into any banking hall. If you want to deposit, you can too with the Telecash Recycler. We have a self-service kiosk available for your personal banking services like your statement request, card block, PIN reset, and other requests. The self-service kiosk offers these various services for all your banking queries and needs. There is the card issuance machine for your new ATM card on the go with no hassles. For our trendy customers, we've got video banking available. With ease, you can sit and carry out all your banking needs. FirstBank Digital Experience Center is innovative, automated, and interactive. It's your one-stop banking solution to a fully digital banking experience. Step in and enjoy a world of possibilities. You first, FirstBank.
Here's a card when no go give you stress at all. Zero wait and zero queue. FirstBank is better. Here's a card when no go give you wahala. Zero trouble now for you. FirstBank is better. Tell off it's tell off it's spoiler. Who won't break 'em? Where you want say now only you get 'em. Nothing fit do one. Sharp, sharp payment not the way. Swipe they go, you know the way. Veteran card with the sweet body. Veteran card with no the shape person. We put you first again. FirstBank Veteran card, we put you first again. Generate your virtual card, we put you first again. FirstBank Virtual card, we put you first again. Just generate your virtual card. Here's a card when no go give you stress at all. Zero wait and zero queue. FirstBank is better. Here's a card when no go give you wahala. Zero trouble now for you. FirstBank is tell off it's tell off it's spoiler. Who won't break 'em? Where you want say now only you get 'em. Nothing fit do one. Sharp, sharp payment not the way. Swipe they go, you know the way. Veteran card with the sweet body. Veteran card with no the shape person. We put you first again. FirstBank Veteran card, we put you first again. Generate your virtual card, we put you first again. FirstBank Virtual card, we put you first again. Just generate your virtual card. Here's a card when no go give you stress at all. Zero wait and zero queue. FirstBank is better. Here's a card when no go give you wahala. Zero trouble now for you. FirstBank is tell off it's tell off it's spoiler. Who won't break 'em?
Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions designed specifically for you, so that wherever you're banking from, home or abroad, you can be sure of the dependable financial support with First Diaspora. Open a First Diaspora account online today. Let's take giant strides into the future together. You first, FirstBank. Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions designed specifically for you, so that wherever you're banking from, home or abroad, you can be sure of the dependable financial support with First Diaspora. Open a First Diaspora account online today. Let's take giant strides into the future together. You first, FirstBank. Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions designed specifically for you, so that wherever you're banking from, home or abroad, you can be sure of the dependable financial support with First Diaspora. Open a First Diaspora account online today. Let's take giant strides into the future together. You first. FirstBank. Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions.
The state-of-the-art Hello, welcome to First Direct 2.0. The state-of-the-art corporate internet banking portal for FirstBank that is completely refining the way corporate manage their cash and trade needs. Let me show you how to navigate our platform seamlessly. First Direct 2.0 is a fully integrated internet banking platform designed for corporate. It provides a single interface for all your transaction banking needs. Let's explore the modules. Account services. Manage your account efficiently with real-time insights and a user-friendly interface. Payments. Initiate and track payments effortlessly. Our platform ensures secure and seamless transactions. Trade. Conduct trade transactions all in one place. Collections and receivables. Manage collections and receivables all at once. Supply chain. Optimize your supply chain with our integrated tools. Enhance efficiency and transparency. Finance and liquidity management. Efficiently manage your finances and liquidity with real-time insights and strategic tools. Host-to-host API integration functionalities. Seamlessly integrate your ERP to First Direct 2.0 using our host-to-host API functionalities. Virtual account services. Easily create your virtual account, view transaction details, and download your virtual account.
The FirstBank Fintech Summit 6.0 will gather thought leaders, innovators, and decision makers from across the financial services industry. Our program is designed to maximize networking opportunities among banks, fintechs, investors, original equipment manufacturers, big techs, regulators, and customers. Through curated panel discussions, breakout sessions, attendees will not only make valuable contacts, but also lay the groundwork for strategic partnerships that could drive business transformation and new growth.
Our panel sessions and masterclasses will address pressing industry challenges and provide networking opportunities for fintech startups, established banks, and other ecosystem players to develop meaningful connections. These interactions will facilitate valuable discussions on shared challenges and pave the way for long-term actionable collaborations.
Various sessions will address pressing industry challenges to generate transformative solutions, ranging from agile product development to regulatory compliance and digital-enabled risk management. These collaboration sessions encourage attendees to brainstorm and establish initiatives that can reshape the industry, fostering partnerships and inspiring collective strategies to tackle significant challenges.
Through collaborative workshops and panels, participants will discuss ways to integrate digital innovations that enhance customer journeys across all digital channels.
The summit is structured to foster collaboration among traditional banks, fintechs, and broader ecosystem players by facilitating discussions on groundbreaking digital innovations and emerging technologies like AI, blockchain, and open banking. The bootcamp session provides a platform for innovators to pitch their solutions to investors and potential partners, setting the stage for impactful collaborations that will advance industry-wide innovation.
The summit includes CX-focused sections to encourage collaboration between fintechs and banks on customer engagement strategies. Through roundtable discussions and best practice sharing, both groups will explore new methods to connect with customers and enhance brand loyalty. The aim is to facilitate joint efforts that deepen customer trust and satisfaction through meaningful CX innovations.
By fostering these partnerships, the summit will create a foundation for accessible and efficient digital financial services.
Participants can expect actionable takeaways, including frameworks for joint product development, cross-industry collaboration, and regulatory compliant innovation. Each session is structured to provide clear, measurable actions that drive growth, innovation, and enhance customer experience.
Attendees can expect actionable takeaways for expanding digital channels and increasing financial inclusivity. This will include strategic framework for multi-channel customer outreach, initiative to expand access to the underserved areas, and collaborative roadmap to ensure broader adoption of digital financial services. The goal is to leave participants with concrete steps to enhance digital access and streamline service delivery across emerging channels.
From innovative product launches to cutting-edge digital solutions, the strategies and collaborations formed here will lay the groundwork for meaningful progress across the financial services ecosystem.
We hope that even our practitioners, our investors, and even those who are interested in starting up fintechs will all come together, and together will continue to improve lives in Nigeria. And that's the business that we've been in since 1894. So welcome and have a good time.
Hello there. Welcome to our Digital Experience Center. As you know, we love putting you first in everything we do. We've got the ATMs, so you don't have to.
What will banking look like in the future? For over a century, we've been growing to meet the needs of an ever-changing world, delivering unique solutions to help our customers reach increasingly bigger dreams. Innovating to create an exciting new world of convenience and freedom, where what you can achieve is only limited by your imagination. Opening up new, more inclusive channels for commerce. Empowering a new generation to reach beyond their dreams and grow into the giants they were always meant to be. We're helping to create a future where there are possibilities and where the world looks up to Africa. Let's awaken the giant in you. You first. FirstBank.
Being a student means there's so much of life to look forward to. It helps to have people who support your desire to create a spectacular future. That's why we developed Explore First, designed to give you an edge in your studies and provide lifestyle solutions that make every day a cruise. Step into our world. Let's take giant strides into the future together. You first. FirstBank.
If home was a smell, it would be the scent of home-cooked meals. If home was a sound, it would be lively tunes of Afrobeat at a party. If home was a season, it would be the dry and chilly winds of Harmattan. If home was an emotion, it would be the vigor and perseverance of Niger. If home was a place, it would be the people I hold close to my heart. Which is why I am never far from home when I transact with First Diaspora.
Even if you can't be near your friends and family, you can feel at home every time you transact with First Diaspora. Open a First Diaspora account and you'll always be home, even abroad. Welcome home. visit www.firstbanknigeria.com. You first, First Bank.
Good afternoon, distinguished ladies and gentlemen. Welcome back from the break. We have a few people still outside. May I please request that we make our way inside, because we will be starting the panel sessions shortly. So please, those outside, make your way inside. In another 3 minutes, yes.
So please take your seats so we can proceed. We'd like to fill up the seats quickly so that you do not miss any part of this interesting conversation. We will give a few more minutes so we have more people seated back in the room.
Remember back of you and me, the story and the place where we belong. I know this world is heavy, but as long as you're with me, you're not alone.
Okay, so thank you so much, everyone. We would like to kick off the next segment of this summit. And before I do, we go dive straight into the conversations that we would have. It's important that we also recognize the presence of our distinguished guest. Everyone. A round of applause for him, please. In the house as well, we have Mr. Emeka Eje, the group executive, Commercial Banking South. Please, a round of applause for him as well. And on the list as well, we have Mr. Oluseyi Oyefeso, Executive Director, Retail Banking South. Please, a round of applause for him as well. Thank you very much. We'll recognize more dignitaries as they come in. Right about now, would like to invite to the podium a message from the Executive Governor of Lagos State, Governor Babajide Sanwo-Olu, is ably represented by the Commissioner for Science and Innovation, Mr. Olatubosun Alake, for the Governor's speech. You're welcome, sir.
Good morning. So I would like to stand on all the protocol that has just been established. When I was coming to this event, usually when I hear FinTech summits, I come in jeans and t-shirts, but I heard it was FirstBank. So I had to, because I didn't know what to expect. You know, if you are not dressed appropriately in a bank, your manager might have a problem with that. So for the managers here, I'm appropriate, aren't I? Thank you very much. So I bring you greetings from the governor of Lagos State, who is an avid technology lover. And he couldn't be here, of course, due to his very busy schedule. But I come with good tidings. I'll just basically go through his speech, but I'll wing most of it because I'm a very personal person. So it's an honor to stand before you today at the FirstBank Fintech Summit. I must commend the team at FirstBank of Nigeria for putting together such a thoughtful and impactful event. This year's theme, Banking on Partnerships, could not be timelier, especially when our industries, our economy, and indeed our society are in desperate need for more value-creating collaborations, innovations, and shared solutions. In Lagos, we have always championed the idea that our greatest strengths come from working together. This summit, with its focus on partnerships, is a testament to that belief. Today, we are here not just to discuss the future of banking, but of technology and finance, and also to explore how we can collectively push forward the boundaries of what is possible. In recent years, we've seen the incredible impact of technology in transforming industries, from agriculture to healthcare to transportation and finance. At the heart of this transformation is digital innovation, a powerful tool that has reshaped economies, reduced inequality, and driven social progress. Today, digital innovation has created and disrupted many sectors, none as much as the finance industry in Nigeria. Nigerian fintechs have, in essence, created more than $8 billion in value. And this is counting, by the way. They have pushed the boundaries of value exchange with different innovations and are helping democratize access to finance. Digital innovation is also driving healthcare, food systems, commerce. The list is endless. FirstBank, fortunately, has been together at the forefront of digital banking for many years, and we must commend their efforts in fostering an environment of innovation. Their willingness to lead these conversations, to bring us all together, shows a deep understanding of the importance of partnerships in this digital age. Whether it is in banking, insurance, technology, or government, collaboration is no longer optional. It is essential. We are all pieces of a larger puzzle, and our success is intertwined. As a government, we are committed to building a city that encourages this kind of collaboration. A city where innovators, entrepreneurs, and investors feel supported and where talent can thrive. In Lagos, through many partnerships, we have invested heavily in infrastructure. Our 3,000 kilometers of fiber optic cable through the city is helping to increase tele-density and de-risking the infrastructure spread for private sector players. In education, we strove to improve teaching instruction by helping teachers with technology-aided curriculum content through our EcoExcel project. In security, we have deployed over 450 intelligent video surveillance cameras for traffic and security monitoring. In traffic management, we have deployed intelligent transport systems that administers traffic issues, such as expired registrations. I'm sure some people have gotten text message that their inspection is expired or their registration has expired. That is just the beginning. Subsequently, we are going to have other intelligent transport systems such as red light cameras, speed cameras, which has actually started, and of course, indiscriminate lane change devices as well. That actually is going to be installed as we speak. In e-government, we are unifying Lagos State's disparate architecture across different ministries so that we have a singular window for government services for citizens. In startup enablement, we have funded over 70 startups across fintech, construction tech, agri-tech, climate change, and circular economy. And we funded about 75 R&D projects with 2 patents awarded in Lagos State. In the regulatory environment, we are formulating the Lagos Innovation Bill that seeks to incentivize innovation and R&D in the private sector. Ladies and gentlemen, we are all aware that we cannot do the aforementioned alone. We need partners such as yourselves in the private sector, banks, tech companies, and investors to help us build that ecosystem that drives innovation and empowers our people. I'm excited to learn about the distinguished speakers today and the subject matter experts that will share their invaluable insights at this year's summit. I look forward to the outcome of your discussions and your wealth of knowledge and perspectives that you will provide. In conclusion, I want to thank FirstBank once again for organizing this summit and for their continued commitment to innovation and growth in Nigeria's financial sector. To all of you here, thank you for your commitment, your passion, and your vision. Let us make today count. Let us make it a milestone in our journey towards a stronger, more resilient, and more inclusive economy. Thank you very much.
Keep clapping, please. Thank you so much. Thank you so much for that brief speech. I mean, my key takeaway from that is collaboration is no longer optional. It is essential, and that's why we are here. A round of applause for him again. So I need to apologize to our online participants. I mean, it seemed like we sort of just got carried away in the room. So this is a huge shout out to all our participants online. We recognize you and we thank you for tuning in. Thanks for being here and joining the conversations today. I'm sure that you would also get as much insight and value for your time as those of us that are on ground. So I'd like for everyone in the room to please appreciate our online participants. I don't know if you can say flash, but it would be great to just, acknowledge them for joining them in different places across the world. And it's a global village. We are all together here. I'd also like to quickly acknowledge all FirstBank group heads and every distinguished First Banker. I mean, it's a badge that I wear proudly. So if you're a First Banker that is proud to wear that badge like I am, I'd like for you to please give yourselves a round of applause. We are not plenty here. The clap is not resounding. I mean, that's more like it. All right, great. So as we dive into the conversations, this is why we're here. We know that collaboration and partnership is essential to be able to drive these conversations. There are different people in different sectors with different strengths, and as we bring them together, we are then able to scale up and do really great and mighty things. So this next panel session, rather our first panel session, I beg your pardon, scaling for success, building strong alliances between bank and fintech. That is the theme for this session, and there is no other person that should drive this conversation than the editor-in-chief at Tech Cabal, which is a Pan-African publication covering business and tech. They are a hub for everything business, tech, innovation, and everything that goes around there. They have the expertise to drive the conversations on what it really means to scale business. On that note, I'd like to invite to the podium Mr. Oluwamuyiwa. I beg your pardon. Muyiwa, it's so great, as it drives the conversation. Thank you so much.
Hi, and good afternoon, everybody. My name is Olumuyiwa Ologboyega. I'm the editor-in-chief at Tech Cabal. It's no pressure at all to moderate the first panel here. Luckily, It's with some of the people who are the most qualified to speak to you on the topic. So we're going to be speaking about building stronger alliances between banks and fintechs. So joining me to have this conversation first is Chijioke Dozie, who is co-founder of Carbon. Please can we give him a round of applause as he comes up? Thank you so much. Also in this conversation, we have Tomilola Majekodunmi, who is co-founder and CEO at Bankly. Please also give her a round of applause. Thank you so much. As an editor-in-chief, this panel is filled with people I want my reporters to be talking to. So this is really perfect for me. Feels like a good cheat code. I'm also going to bring up Akin Shokwe Roberts, who is Industry Solutions Executive, Central and Southeastern Europe, Middle East and Africa for Microsoft. Thank you. We also have Deremi Atonda, who is MD CEO at Remita. Please give him a round of applause as well as he joins us. Thank you. And then completing this panel, Olayinka Shitu, who is Head Corporate Transformation at FirstBank. I'm sure the applause will be louder now. All right, welcome everybody. All right, Olayinka is joining us now. All right, so I'll just go straight to it. When we talk about partnerships between banks and fintechs, it's always an interesting conversation depending on the side of the table you're on. For the fintechs, it's a different conversation. For the banks, it's a different conversation. So Chijioke, I'm going to have to start with you. Frankly, what's it like to be on this side of the conversation?
Thank you very much. I think it's challenging. There's definitely a power dynamic and power imbalance because when you're negotiating with a bank for a fintech partnership, lots of times you're not talking to a decision maker. You're talking to maybe a head of department, etc., and there are layers of approvals that need to happen. Versus with a fintech, you're probably talking to a decision maker who's itching to go, like she's ready to go. And in our experience, you know, I think any sort of institutional partnership has taken at least a year, from discussion to even, okay, let's start doing the work together. So like a year and a half. And if you're a startup or a fledgling company, that's a lot of time and a lot of focus on just one partnership that may or may not be the, the breakout product.
All right, thank you. Let's lob it to the bigger guys and say, Olayinka, I'm curious, what are for you some of the factors that make these conversations take a while? Because if we go to Chijioke's point, sometimes these conversations can go on for a year. So from your side of the table, what do these conversations look like, and what are your considerations?
Thank you, and good afternoon, everyone, once again. Very interesting question. Let's try and unpack it. One of the things I've discussed lately with people is what do we mean by partnerships, right? And I'll start with what it's not. There are a lot of fintechs that do approach banks and say, hey, I would like to be a partner, but in essence, they're coming in a transactional way. They want to be a service provider, or they want to be a vendor. And that's not a bad place to start to set up a partnership, because you need to build trust, build the relationships, explore the propositions. But partnership to me, and I think to a lot of my colleagues in this space, is co-creation of value. So you're bringing a proposition, and we believe there are some synergistic opportunities for us to explore and take to market, hopefully improving some of our strategic pillars, customer experience, and the rest, right? So if you take partnership in that sense, your approach to fintech partnership is not different from what a venture capitalist would do in investing in a business. So a lot of due diligence, right? So strategic alignment, shared vision, appropriate technology or tech. Do you have the IP? Even things as maybe soft as culture, right? So it does take a while. And so if you look at that framework to say, okay, if I was investing in this company, because that's really the approach you should use, but we want to do it in a more agile way. We have another layer of regulatory due diligence, right? So we do know we need to move faster, especially around the innovation agenda, agility. But then we cannot but take some of the propositions and do our due diligence properly. And also, a lot of the fintechs also do not come with complete propositions. So sometimes you do need to work together. So that's why it takes time. Does it take 12 months? I don't think so. I know we can, so for any 1 year, it's not going to take 12 months. Come with the right proposition or come early and let's shape the partnership or opportunity together. I think that also works a lot more. So I'll leave it at that. Thanks.
All right, thank you, Tobilola. I'm going to drag you into this now and say, what's been your personal experience? How have partnerships looked like? The ones in the situations it worked, what was critical to make it work?
Thank you. I think once you scale past what Mr. Olenka was talking about, and they are willing, they've done their DD, and there's mutual interest. I think the main thing is what Chijioke said, the imbalance of power and the lack of good faith. The truth is because people always maximize the leverage they believe they have in the moment. And I think I like to say sometimes, tables are not static. They can change, they can shift, they can turn. But so the first thing is you're not also talking to the person who, you were talking to me sometimes that companies come to Tech About and not the person, not the visionary, and not the person who is passionate about just one person sending you a press release. That also happens because the stakeholder at the top who wants to make it work has passed it on to people who just want to add on multiple layers of bureaucracy. And you're there and they are looking very short term. And so the terms of the contract sometimes can be so ridiculous, you're wondering, I might as well just hand over the company to you. Since there's no interest, let me just come and work for you now. Like, there's nothing of interest to my company in this. But in my personal experience, one of the, should I say, greatest success we did during COVID, where we had to transition just to learn and be very nimble. And I like to say that partnership saved us. It made us go in a direction we didn't plan to, but it saved us at such a time as COVID, as a company that was barely 6 months old. And it was with a financial institution, I won't say a traditional bank, but we went through that same thing, and when I've spoken to the stakeholders who were interested, we got stuck in the legal murky waters. And I remember I was much younger, less composed CEO, so I used to get very angry. I was like, I used to be so upset because I'm looking at the terms and I'm like, you might as well, so disrespectful. And I remember the stakeholder who wanted to make this happen called me, and because I was lucky enough to be able to have access to the person who felt like there was something here, and so I could navigate that. And we both agreed to say, you know what, why not let's run a pilot? You haven't done this before. I haven't done this before. Let's run a pilot for a few months and come back to the table to then decide on what the terms of the agreement will be. And we can also decide that maybe it's not working for both parties and walk away. And that saved me. And I would say that it was also good because we hadn't even considered multiple layers. And the non-business people, the legal, and they just layered on multiple stuff, and it would have been a messy collaboration. But that has made that partnership that started 2020 is still live till today. And so I want to say first is, please do not, the imbalance of power, please, people should be, it's a human nature to want to use all the power you have, but sometimes power is best reined in. The fact that you have power doesn't mean you have to show it in everybody's face. So try to balance that power, try to act in good faith, and consider yourself that what I mentioned one last thing. When, as an employer of labor, when people come to me and I'm about to hire, I'm thinking, how do I, it's not just about you slaving away here. How do I take you closer to your personal journey? And I've times when I've refused to hire someone because I can't see an alignment. I'm going to Aja. They are not even going to work. They're going to Ikeja. I can't take them closer to their personal journey. So the bigger partners should also look and say, what's in it for you? How can I help you achieve your vision while achieving mine? Thank you.
All right, thank you, Tomilola. Jeremy, I'm going to come to you because I saw you nodding in agreement at some point. And something I'm super curious about is something Tomilola mentioned, which is bad faith. How do you think about navigating bad faith?
Thank you very much. And when you said you saw me laughing, I was actually thinking and looking back. And that maybe I share something with FirstBank here. FirstBank is the elephant, right? And maybe those of us who've been doing this for some other generation behind FirstBank, the experiences are different. So when Chiyuke talked about maybe 12 months, you've now have to wait for 7 years, right? So talking about collaboration, really, just pray that the wind blows your way. Some ideas will come ahead of their time. And you can't actually engage successfully, no matter what you think of your insights. That partner cannot just see through. They're not being malicious, they're not being difficult. They've done business this way forever. And what you're saying is just not making sense to them. It doesn't mean it doesn't make sense. And since this is about collaboration and scaling, I can give practical examples. We've been in business over 30 years, right? And at some point, we're doing payroll and HR, and we're the number one in this market. And we're in about 80 banks, 80% of the banks at that point. So we had a pedigree. What actually got us into payments, which has become a dominant part of the System Specs Group business, was solving a payroll problem. People were running payroll, were very successful. The last mile was, why do they still need to keep sending checks to the bank? That was what got us into payments. And then you needed to start telling the banks themselves that open it up so that your customer can actually send salaries to another bank. That wouldn't make sense to any bank. Why should the money leave my bank? Because that's why I'm here. So it was comfortable for every bank to want to insist that their customers must just pay their customers who had accounts. In fact, they were insisting that they should open staff accounts with the bank. So you'll collect the corporate and put it back there. So it didn't really make sense. Then we persisted and we tried to go some other way. Some people then gave us an ear. Say, okay, if this is coming on, how will it not affect us? So we needed to think deeply to say, yes, you think you're solving a problem from the customer's point of view, but from the bank's point of view, is it making sense? So we needed to come up with incentives to say, this is the way it's going to make sense. You see, that customer is your customer. If you introduce him ahead of other banks, then you own that relationship, and even transactions across other banks will be to your advantage. One of the other things that then happened was, we want this your same customer, instead of calling every bank, let him just have a single place he can go to and see his balances across all banks. That was L. What do you mean? This was before anybody had defined open banking anywhere in the world. There was no PDS2. So we created it here. So when we saw on the global scene that happening 10, 15 years later, we're just laughing that we don't know what we've done in Nigeria collectively. The honest truth is no fintech will exist without a bank. So it's just a game of collaboration and passing the value message across. The one that really drove you, I talked about 7 years. When the government of Nigeria in 2011 was going to start TSA, the same problem we'd been describing to the banks was what eventually played out. Government wanted MDAs to see balances across all the banks. And it was only those guys who had believed in us, fortunately, Fortunately, FirstBank was one of them. Can we give them a round of applause? You know, the way the banks move is that one person makes a move and then others begin to take you seriously. But it didn't come easy. The elephants somehow danced to our tunes, and we're so grateful for that till today. And then other joiners came in much later. And today the remittance story isn't complete without all the banks supporting and seeing value from a common point of view. It doesn't mean it's always easy. And so when you are tapping that, like I said, some ideas will come ahead of their time. No matter how hard you try, the person you want to collaborate with can't see the value. At other times, you need to know that you need to go beyond the call of just logic. You need to have some emotional engagements that will help you get that across. Then there's credibility. There are others who believe in you and can be in a better position to help you project those propositions. So you need those kind of people around you. And then you just don't ever give up. Don't think you need all the puzzles to be in place before you move. Because once that whole puzzle is made, the next iteration has started and you are obsolete. So you just need to keep moving that notch, all that. So it's just a complete maze. There's no one way, certainly not a textbook approach that one thing one person has done will always work. And from the financial institution's point of view, and that's why we're having this. Who would have done this 20 years ago to say, call small boys like us to come to sit with the big guys, yeah? They're realizing that there's a value transmission. And there isn't anybody who can be called small anymore, because now a game of ideas and speed to deliver. You can't stand on any high horse any longer. And like Chijioke mentioned, the hierarchy that was stifling innovation, you need to be deliberate about delayering it. One of the things I do, there are hundreds of mails that will stream into our system every week. Don't take anyone for granted. Some person is looking for something you've probably thought of. And if you're not processing it, you just may miss a very big opportunity. Opportunities won't always present themselves the way you expect they'll come. So let's keep looking out for that, and then the conversation continues. Thank you.
All right, thank you so much. Akishakwe, thank you. I'm going to have to ask you, for you, what does value sound like? If I want to sell you on something and I say, oh, I want a partnership, what does value sound like? How do I sell you on this? What makes your eyes light up and say, we definitely should do this?
Thank you. I think in the context of the way I'll answer this question, we'll talk about the Microsoft story and then how that relates to what's happening in financial services today. So we're almost a 50-year-old company, but the idea of valuable partnerships to Microsoft in the past were people who could resell our services. So no matter how big your sales workforce is as a big OEM, you would need to extend that through partners as resellers. Now, over time and as ecosystems evolved, some of entities who were previously swear words in Microsoft now become some of your biggest partners. It was this year that Larry Ellison, the CEO of Oracle, sat with Satya to talk about a big partnership. 20 years ago, that was impossible. So some of our biggest competitors today are our biggest customers and therefore our biggest partners. And that's the evolution that has happened in the tech space, where one team is fiercely competing with another team within AWS, Microsoft, Azure is competing with them. And then the M365 team is collaborating with the Amazon team, who have just made more than $1 billion worth of purchase of Microsoft 365. And that's the way every entity needs to look about partnerships. There's no one definition of who a partner is. It could be a competitor on one side of your business and a very big partner on the other side. So if I look at it from a banking perspective, while one entity may be a direct competitor to your e-business side, it may be a big partner for the commercial and transaction banking side of things because of the value that they hold. So I think to answer the value question, what you then do is to think about the objectives of partnerships. And banks and fintechs typically may have some commonalities in those objectives, but they may be slightly different. So let me use simple examples. For a bank looking for a fintech partner, is typically, look, innovation moves a lot faster outside than inside. So I want to buy that innovation through that partnership to improve my customer experience and to reduce my cost to serve. Because if I try to do it, it would probably be more expensive. To the fintech is looking for scale because you already have an existing established business. And what scale means to them would potentially be the customers that you have. So if you sit on one side having the notion that a customer is solely owned by you as an entity, already that's value destructive because you can't see the value in that partnership. But where that orientation changes for you to come to the place of reality that I don't have a sole ownership of this customer, many of us in this ecosystem can have shared value of this customer to improve the overall customer experience, then those partnerships start to make sense and you can start to see the value. But I think a lot of these partnerships, and YS had said something earlier, is, the orientation first started that this is my service provider, it's not my partner. And my service provider cannot be now eating into my market share. But when you then realize that this is a partner of mine, and there's certain things out of the 10 things that they do, maybe 3 of them is where our partnership lies. And then the other 7, which may be competitive to me, can I live with that? And if you can live with that to the extent that the 3 are giving you the value of 1, significantly improving the experience of my customers at a significantly cheaper rate, which means my margin is higher as the institution. And on the fintech side, I'm getting access to FirstBank with millions, tens of millions of customers to scale my proposition on a larger data set than I could have ever done on my own. And I'm also getting the regulatory cover, which I don't have as a smaller entity in the eyes of the regulator. Then we've seen where the commonalities lie, and then that's where the value map is. And the other things which may not be the happiest across board, we also price that, and say the distortion or destruction of value from that I think are no-go areas. How much is that compared to those 3 things where we have the commonality? And when that is a lot higher and there's significant value from those 3, hypothetically, then that's a fantastic partnership. But in the past, the concept of partnership is we have to have a 100% match, and that's just not possible in the age that we are in today.
Thank you, Akinshokwe. I love your framework. Please give me a round of applause. So I'm going to start from this side of the room, and we'll move all the way down. But I'm going to ask everybody, if I give you a magic wand and you were creating the perfect world, what would create the stronger alliances that deliver a win for banks and fintechs? All right, we'll start at the other end of the hall.
So again, a very interesting question. I think Daniel spoke to this a little in his keynote address. There's always an exchange of whether it's data, IP, customers, and I think someone else had spoken through this around building trust, right? How do I protect that asset, but still make it available in that for that venture? So I think trust frameworks, IP frameworks may be one to look at, not in a protective sense, but because as a bank, Shopwell spoke through an exchange. So if you come to a bank, maybe you want to distribute a product or a service through us. You have whether it's consumer lending, you want access. So in this case, we're the distributor or we're the platform. So oftentimes is you and Tom Lala spoke to this around when you say you have imbalance of power and then you get these contracts that are just not fair on the fintech. No, but the key thing first and foremost is that the data usually, either data or access, are are very key assets, and the banks have that fiduciary duty on protecting. Also, we also need to look at the regulatory framework. So coming back to that question, so to me, it's what framework can establish real trust in the exchange of information or access. I'll give another example. When we look at open banking, for those that have looked at CBN, and I'm even bringing this home, for those that have looked through the open banking, central bank open banking framework, and the framework actually specifies a risk-based, tiered-based approach to how banks can partner with fintechs, right? You have to do some risk due diligence. So what you can share with fintechs is based on their own risk profile, almost a know your partner framework. So as long as the rules are set, risk-based segmentation of propositions, and both parties are incentivized to follow that, I think we can accelerate and deepen that partnership across the ecosystem. Thank you.
All right, thank you. Doremi, I'm giving you the wand. You're creating your perfect world. What do we get?
Are you still talking about the magic wand?
Yes.
Okay, thank you. You see, we just so much appreciative of this panel because we're bringing real life things into it. And that's why Chijioke took a deep breath. And that's just been real. The first thing is to know that the magic wand will not always do the same thing across different phases of the evolution of business. Like Emmanuel showed in New York, 1905 to 1920, from horse-drawn carriages to the first cars. Yeah, if you had a magic wand then, the horse carriage guys will say, let these horses go faster. Today, it will be let these jets move faster. It's still about speed and advancing. And so, different phases, different things will happen. Where we are now, we've gone so much, especially in Nigeria. I don't know how many people have seen the National Payment System Vision 2020 or 2025 document. And the things that are put in there, reflective of the entire market, banks, fintechs. That journey started from 2007. And now people are talking about licenses. The first time we even knew you needed a license to do payments, it was a shock that we even realized somebody was regulating the problem we're trying to solve. And at that point, guess what? There was even no license by any name to anybody called a fintech. The first paper we got signed from CBN today, we still treasure it. It was called RTGS Bulk Payments System. That was the name of the license. Because nothing existed as a framework. So we're lucky today that you have guidelines. So innovation will always be ahead of regulation. Some people need to be willing to move in there and say, yes, we're going to dare this as long as we're protecting everyone. So on both sides, there will need to be some concessions. More importantly, like Tomilola said, what you consider balance of power then is no longer what it is now. Then we are to do something to say, for this idea not to die, we're going to give up something. Because the banks were used to being in charge and calling the shots. And like my GMD will say, they said the idea, like Tomilola said, if you say you get upset, we got upset. But you won't go anywhere with getting upset because you still must cross this river. That the idea of banks equitable sharing is you divide the loaf of bread into two. The bank will keep the first half and put the other half on the table and say, let's share it equally. That if you don't understand that, you are not ready to deal because you are coming into their space. If you insist on equitable sharing at that point, you're not going to go anywhere. You have even lost the power to innovate or to thrive. So there's some way you need to understand that to go forward, you can stoop to conquer. So the story has changed now because you've been able to prove there's value. You've been able to prove you can do a lot more. And now doing a lot more means, if you could do one, then they can trust you and open up to say, show us 2, 3 other things you can do. So you are building a bigger pie. The magic wand will also go to the environment of business. There are times when it's just these collaborations that drive regulation rather than the other way. If the banks and fintechs and whatever you do, you're able to start something, the regulator has something to regulate. If it doesn't exist, the regulator doesn't create. You must create for it to be regulated. But the banks, because they are products of creation, hold back a bit. Things are just changing. So still advancing this issue of the magic wand, if you have an environment where there is a national vision of what we want to achieve, it stops being less about competition. I mean, if Nigeria sincerely, as we speak at the Landmark Event Center, there is a CBN Conference on Financial Inclusion. That's been owned at the national level. That already leverages access for fintechs and financial institutions. So this stops being just a private discussion. It becomes a national transformative agenda. You saw what he said about GDP, Emmanuel, about GDP per capita? India and Bangladesh. And Bangladesh moved. What happened? That wasn't a government initiative. The Grameen Bank was just a product of someone taking an initiative and became nationally owned to say this can happen. There's a scale at which you project things and it becomes nationally owned and frameworks will follow. So this our magic wand in this dispensation is about advancing global interests, creating frameworks that will support them, and making sure that we can tap everything in everyone's interest. Nobody should feel disadvantaged. And then you can have alignment of expectations. And I think the magic wand would have delivered. Thanks.
Thank you very much, Jeremy. Akishokme, I'm going to have to skip you and still come back because I really want to ask Tomilola your thoughts on, I mean, Jeremy said something interesting about compromise, sharing the bread into half and saying, how do we work with this? But how do you think about compromise when you're trying to make a partnership work?
I think it's important to say that you want to go to a partner to make sure you understand what they need. I think Mr. Olayinka Shito already mentioned that there's sometimes you engage a partner and you don't even waste your time because they don't have, and if I'm talking a bank with a fintech, a bank should review and instantly decide that they are not viable. And I don't think that's what we're talking about here. We're talking about when you've identified that this is something interesting, then how do you make it profitable? And I shared the example on, even when we went through that journey, it was a difficult journey. That's been one of the most important. So I'm sharing from experience that I went through that journey, but that's been one of the most successful partnerships with a huge financial institution. Now, if you say that, maybe I should actually look and say that what should be the magic wand on my own side. The magic wand for me was that trust is simple because we need to move away from basic level of collaboration. There needs to be a higher standard of collaboration in this market. And what do I mean by that? We've moved past, open banking, access to API, access to data. No, we need to start collaborating on going to market with products together. We need to start collaborating on infrastructure. But if trust is not there, a financial institution recently launched a core banking. There are many fintechs who don't need to go build a core banking, but should go and plug into this financial institution. But when you don't trust whether you were just a tool, is where that the role needs to be played, whereby even the one with the power needs to be able to attract a number of people who trust that their best interests will be taken care of. And finally, we also are losing a lot of market too. We're not being able to protect our infrastructure. Every one of us is using cloud services that exposes us as a nation. Now, fintechs might have the innovation or might have the talent. They don't have the resources. They don't have the regulatory relationship. How do we collaborate in a way? And Mr. Emmanuel Daniel mentioned something very critical. By the time sometimes an institution as big as FirstBank is deciding to compete, the 3 years time, it takes time, right? A mentor of mine once said that you don't say because you want to have a child in 1 month. you impregnate 9 women. You will still wait 9 months. It will that, okay, fine, if 9, so I will have a child. So there's a process or something to do that. If it will take 3 years, it will take 3 years, even with all the resources. All that to say that by the time you get to where some of these institutions have got to, they've also spent that 3 years to be way ahead. You always are playing catch up. But we also want to work with the institution, and I think that I've seen it work. I've seen it being successful, and I think we're on the right spot. For us to be on this platform, to be having a conversation, means that the next few years is going to be interesting when it comes to the big boys and the upcomings.
Thank you so much. Akishokwe. Akishokwe, so I'm going to come to you and going to hand you the magic wand. What does the perfect world look like where collaborations work between, in quote, the big boys and, as Tomiola says, the up-and-comings?
So I think from what Mr. Antonda said, I think it's not a singular magic wand, but a couple of wands that we need. One of the big factors for all players, the big tech, banks, fintechs, is our desire and wish that our regulators will move faster. Because some of the blockers to even partnerships with multiple entities, if you look at heavily regulated industries like banking, have to do with the fear of the regulator that they have. In the regulators, it's okay for the regulator to have a lack of understanding in the initial stage, like you said. If you don't create something, then it won't be regulated. So there's a time for the regulator to understand it. I think we've seen significant improvements in this market from always no to, okay, let's consider. But the time it takes between that consideration from the regulator and what we need in the market, it's still a very lengthy time. So even when we want to sell a piece of tech to customers, then there's a regulatory approval. So scenarios where we've gone live, like we're just waiting for the central bank to then approve something that, in our minds, the fintech, the big tech player, and the banks, is quite easy to understand. But then the regulator will appraise it in the most complex way possible. So if anything could change, I don't think it's that we want the regulators not to exist, but to create an environment where time to value can be significantly shortened. Because I think if that area is dealt with, faster, it's moving in the right direction, but we want it to be faster, then the inertia that traditional institutions or banks have, even from a point of third-party partner relationships, will be a bit more relaxed. Because I think some of why the compliance guys, the audit guys, the assurance functions within these institutions who have really important roles to play in terms of ensuring that the big institution is complying with the big regulator, has a downward implication on how the business teams can make these partnerships faster. So it may be frustrating on the fintech side because you're like, we sent this thing to these guys 3 weeks ago, but you don't know the layers of review, including some thought process around how would the regulator view this kind of relationship and this kind of product, and we need to build a product paper that then needs to be approved by board, and then it's only be considered by the central bank if it has the seal of the board, et cetera, et cetera. So a lot of myriad of things happen within that space that can then lead to frustration on the smaller guy side of things that I think that the regulator can help us to speed up.
All right, thank you. Chijioke, you're up.
Thanks. I want to take a different approach. When you ask for magic wand, I think it's every response has been accurate, and I agree. But I think also for the audience, it's so what? So what if banks and fintechs work together? For me, I want the magic wand is when everyone in the audience here can have a better life. I look at this audience, and I'm going to, go out in the dark and say most of you are underbanked. And what do I mean by that? When I was 26 years old, I moved to South Africa working for the World Bank. At 26 years old, a Nigerian in South Africa, I had a credit card, I had a fuel card, and I had a mortgage. And every major South African bank gave me a mortgage offer, and at 26 years old, I bought a house, my first house. How many 26-year-olds can say that in this country? At 26 years old, I had a car loan, I had a mortgage. When we talk about banks and fintechs having customers, you know, how sticky are these customers? One bank practically owned my life. How many banks, you know, as Carbon, you know, we have, all our customers are also all the bank's customers, right? But Standard Bank South Africa owned me because there's no way I was switching over. And if any bank wanted to switch over, take me, they would have to pay a price. So for me, when I look at Nigeria and I look at this audience, there is so much that we can do together if we collaborate to make everyone's lives better. And I think that we have to be honest that there's some parts of the country that banks can't reach. You know, like let's look at SMEs today. What is an SME? When you look at think of an SME, you think of brick and mortar. Some of you guys today came to this conference on Ubers. That's an SME. Because that individual, that's their job. You know, he or she that Uber car is funding his or her family. And then what's their working capital? It's fuel. If they go to, which bank today will give an Uber driver a loan for fuel, working capital? When my brother moved into his house, every piece of furniture was acquired by an Instagram artisan or a merchant. He didn't go to one single store. How many of those, we asked every single one of them, how many of you have access to loans? I mean, these are people who are building furniture, chairs, etc. How many banks will lend comfortably to an Instagram merchant? For some of you here today have probably bought your phones from an Instagram merchant. Some banks can't do this. We can. We don't have the balance sheet. Banks do. For everyone here to have a better life, we need to work together. It's not about, it really is, because that Chijioke that was 26 years old had a better life than people who are 40. And here's the irony. At 26 years old, I got a loan from every financial institution in South Africa. I'm not sure, even when I came back, I could get one from Diamond Bank. And that's the honest to God truth, you know? So, and then, you know, the keynote speaker talked a lot about a lot of fintech companies, but let's look at home. You have Paystack, MoneyPoint, Flutwave. Some of these great fintech institutions could have been from a bank. They could have been, you know, and let's look at Kenya. One of the biggest products in Kenya is a product called Mshwari, started by NCBA, a commercial bank that said, you know what, we're going to do this, but we're going to like hive it off and make it separate from the bank. And it's now one of the biggest credit products in Kenya. So if you can't, you know, if we get it right, if banks either partner with fintechs, buy fintechs, I personally don't think building internally works. That's my opinion. But I think if banks are willing to buy fintech companies, and I think if fintech founders are willing to be realistic about pricing, magic can happen. And if magic happens, I think all of us in this audience will be a lot happier. Thank you.
Thank you so much, Chijioke. So because we've overshot our time, we'll just take one question from the audience. So if we have a question from the audience, I think you could just, yes, I can see a hand at the back. Please can we give our mic, and we'll take that one question. And also, it would be helpful to say who your question is directed to. That could help.
Good afternoon. Can you hear me? Yes, good afternoon.
Yeah.
My name is Ade Atobatele. I've worked in this industry for, I think it's got about 21 years now. The problem is the banks are arrogant and the fintechs are naive. The truth is, they both need each other. As Mr. Daniels pointed out, no bank in Nigeria has 5,000 staff to be building anything. And that's what real banks around the world need to keep up technologically. The fintechs also have to understand that anybody who's got a distribution point is only going to need you if you're going to add value to their bottom line. It's quite simple. They're not charities. But the banks also have to remember that they also have a bigger boss, the telcos. They're coming to eat your lunch. And if you don't get on the train right now and figure out how to collaborate, they're going to have that lunch. And it's going to work. Jeremy knows how this works, as he said. Before, banks didn't want to work with each other, let alone work with vendors, let alone work with fintechs. Who are fintechs? A couple of small boys that used to be in my computer department. And that's where the arrogance all comes from. But then, InterSwitch turned up. Can you get out of my way, please? Excuse me. Yeah. Then InterSwitch turned up. And every bank that had tried to put ATMs on the ground and failed suddenly succeeded. They succeeded because they created a protocol. And any bank that wanted to join into that ATM network, all they had to do was get onto the protocol. It wasn't the bank that was going to stop you anymore. FirstBank couldn't stop any bank getting on. The only bank that did not join at that time was UBA. Every bank joined. But remember, those banks weren't the first. Societe Generale was the first bank in Nigeria to try and put ATMs down, but it was a silo. Banks want to be silos in their arrogance. We talk about the regulator as if he's some bogeyman. He doesn't come from Mars in the morning and go back in the evening. And so why is it that the Bankers Committee does not have a technical committee that is creating protocols and putting them forward to the regulator and saying, this is what we want? Not that we have a product, but that as an industry, this is where we want to go. The regulator is there to look after the general public, but he's not there to stop you from moving forward. It's just that you go fragmented. You don't go together. So this is what is going to happen. So if you don't figure out very, very soon that you've got to collaborate and that you need each other, the banks don't have the money for the R&D, no matter how much they think they do. The fintechs don't have the distribution channel where there's somebody bigger and better and has more cash flow and he's coming for your lunch.
All right, thank you very much. Although that was not a question, I think that was a pretty interesting way to wrap it up. Thank you very much, everybody. This was a fantastic conversation. Please give our panelists a round of applause. Thank you so much.
Hold on for pictures. Thank you, our panelists and the moderator. If we could just have... Great. All right, a round of applause for them as they exit the stage. Could you please take this side? Expecting some bank members and then we get done.
I can learn to love you a little bit less. I can learn to let you go in time. I can learn to love you a little bit less. I'm such a mess now. Love you a little bit less.
A round of applause again for our panelists as they exit the stage. To my left, please. Thank you very much. That was such an insightful session. I believe that it was very useful for us. Do I have any yes in the house? Yes, yes? Great. Thank you so much. So we do have something exciting. I mean, we were just speaking about collaboration between banks and fintechs. And I mean, it's just very apt that we then spotlight some of the fintechs who are doing great things in our country right now. And on this spotlight today, we have two fintechs that would be coming up. I would ask that the representative from Upperlink Digital Solutions, please get ready. They have some presentations to show for us, and then we would also see a video of their work. So at this point, if you could have the representative from Upperlink Digital Solutions, Paul Mosibale. I hope I got that right. A round of applause for him as he finds his way up the stage. Do we have Paul in the house? Mr. Paul Mosibale. Confirmations for me, please. Oh, okay, here he is. A round of applause, please. He's coming up stage. Thank you so much. I hope I got your name right.
Good afternoon, everyone. My name is Paul Mosibale. Mosibale, thank you. All right. My role here this afternoon is very simple, is to share with us our journey of partnership with FirstBank of Nigeria. Okay. So briefly, I'll tell us about who we are, our partnership journey so far, the solutions we've collaborated on together, the impacts and the results, and the lessons learned. Who are we? We are Upperlink Digital. We're a part of the Upperlink group. In the last 6-7 years, the division called Upperlink Digital was created to provide fintech solutions running B2B model of business and B2C. And in our B2B model, we work with FirstBank. We've created a couple of solutions from ground up as a fintech. We have services as well. Our vision as an organization is to make payment as simple as possible. And while doing this, we want to impact our society positively. Our journey so far, from 2017 till now, when we started this arm of the business, we had deployed the Biller aggregator platform. So everything I'll discuss here is relative to the partnership with the bank, not all that we do. So our journey so far from 2017 is represented here. This does not represent everything, but some of them. So one is that we built a Biller aggregator platform working with the bank. And what this platform does is to aggregate service providers from product and service owners into a box, and then make these services available across the bank channels. So it's an omni-channel platform that provides access to different services. We also have the checkout platform, now pay with account. And what we try to do here is to promote the use of account numbers as the instrument for payment on e-commerce, as against the use of destination, and of course our high cost of ownership, because for all of such solutions, the bank typically relies on third parties. What this also means is that most of the time, when it comes to how the services are priced, the bank does not have so much control over them. So essentially what we do is to provide this platform as a high-level platform to the bank, and we sit behind as a technology proprietor to support the bank in providing the services on the platform. So the bank owns it, label it whatever we want to call it, and provide the services to customers. And another issue also was that a lot of times for the bank to help the corporate customers to promote their businesses, it requires a lot of work around integration, service definition, and all of that. So what we've also done is to have some sort of tenancy service within the platform that allows the bank to extend, that allows the banks to cooperate with corporate, some of their corporate businesses, to bring their own product or services into the platform so that such services can then be available on the bank's channel. So what I mean is, you are a corporate customer of the bank, you have a product. How do you bring that product onto the bank's channel to make that product or service available to the bank's customer? So this platform tends to address that concern also. So speaking to specifics, what were the solutions that we worked on together? So I've mentioned some of them earlier, but I'll just brush them over again. So the first one is the bill aggregator platform, like I mentioned earlier. The second one is the payment pay with account. The payment gateway that promotes the use of account numbers for payment on e-commerce sites as against the use of cards. And then the last one is the tenancy service, like I explained a while ago. In terms of numbers, over this period, we processed transactions across cable TV, e-commerce, betting, power boat, grid and off-grid, and likes. We have processed over 462 million transactions, valued at over 542 billion during this period. So just to emphasize, this is what we processed. This is not the main amount. Just to be clear. Right? So what are the key impacts? We saw increase in transaction counts across the integrated channels. And by the way, we have all the channels integrated to the platform. With the tenancy service I mentioned, this helped the bank to deepen relationship with most of the partners, the corporate customers, and of course, monthly increase in revenue. And today we've seen some sort of stabilization around that ecosystem of bringing various services together and making them available on the channels. What are the lessons for us? What are the challenges why we went through this journey, and where are we going from here? So I'll just pick one or two of them to explain, to speak to. One major challenge we faced at the beginning was, I would say, the work ethics with Gen Z. A lot of times you work with someone today, tomorrow he wants to leave. And so at some point we said we'll identify bright minds that share in our vision to work with us. We'll train them from NYC and all of that. So we did that, but what happens is you expose people to what they need to know to grow and mentor them, and 1 year down the road, they are gone. So that was a big challenge for us. Don't forget that we have the client waiting for us to deliver. So you can't go back and make explanations of how someone left or someone came and left. You spend money training and all of that. It was all story. So we struggled a bit with all of that. But as time went on, we learned from what was happening. And today we are very strong and big on culture. And that's how we dealt with that issue. So for us, it's no longer enough to be technically capable. You also you need the right attitude to work with us. So I think that helped us a bit as we went on. But at the beginning, it was a major concern and a major issue. And we had, of course, learning curves along the journey. There were issues at some point where we needed to scale, move from what it was we were processing to what it should be and all of that. So we had some of those challenges and we learned over the period. But just to say that we are a testament of the fact that FirstBank believes in partnership with Fintech and believe in the growth that can come from that and the opportunities as the case may be. So as we go on, we hope to deliver a system that continues to improve to achieve the bank's objective of top-notch customer experience in terms of versatility, being able to process all that comes to it without issues. And of course, when there are issues, that turnaround time to make sure that we respond is there as the case may be. And right now, the Pay with Account platform, we are doing a total revamp and overhaul of that system to serve better. And as the year goes by, as we go into the new year, we're also thinking of introducing artificial intelligence into how transactions are processed. Thank you.
Applause. A round of applause for Mr. Paul Mosima Bale from Upperlink Digital Solutions. Please do it better. Appreciate the presentation. Thank you. Such great work. It was so impressive to see the numbers, the impact, and the journey. We appreciate you. Thank you so much. Moving on swiftly, we do have... Okay, we would like to take pictures. Thank you. With our organizers. Thank you so much for your work. Can we have the camera crew?
We spend our days in the moonlight with stars near. No need to wait till the sunrise at all, dear. I ask myself to be real with how I feel. Can't tell myself no lies. I ask myself to be real with how I feel. Can't tell
Great, a round of applause for him again. It was interesting when Mr. Paul mentioned and was showing us the numbers, 462 million transactions with a 582 billion in value. I'm like, that's not what I'm making. I had to laugh so that we don't think that is making all the money. Well, we do appreciate your value and the impact that you bring. Please let's appreciate him one more time. All right. I'm going to bring up quickly the rep for InterSwitch. I have with us today Mr. Akim Lawal, the Managing Director, InterSwitch Pure Pay, with over 22 years experience in implementation and management of projects within the financial sector, oil and gas, as well as ICT. A round of applause for him as he comes up on stage.
That it slips through our hands. No point at all watching time fall to the.
Good afternoon. It's such a pleasure to be here. I've been asked to talk about our partnership journey with FirstBank. And I've put together about 5 or 6 slides to tell what is a fantastic 22-year story. And I'll jump right into it because I think I only have a few minutes. For those of you who don't know, InterSwitch is arguably Africa's first fintech unicorn. We couldn't have achieved that but for the partnership that we've had with FirstBank. And that partnership started from the beginning of the organization in 2002. When the company was set up, FirstBank was one of our very first shareholders. And I remember then the vision that FirstBank had was to be the banker for the industry. You wanted to be the banker's bank. And therefore, you worked with other CEOs to champion the creation of this company, but more importantly, this collaborative creation that has resulted in the company that I work for now as InterSwitch. But the story today is really not about that. It's about what have we done with that partnership for the last 22 years, right? And I'm going to walk you through a journey of innovations and firsts spanning the last 22 years, right? Many of us today use a number of products and services that have become like industry standards. Some of those products you'll find out today were the result of these partnerships. And this is the slide I'm going to use. The very first interbank ATM transaction in Nigeria was done on a FirstBank ATM. It was a collaboration. It was a collaboration between InterSwitch, FirstBank, and UBA. And that transaction was done in October of 2003. From then until now, we have tens of thousands of ATMs. We've created an interbank network that includes more than 20 commercial banks, over 200 microfinance institutions, almost 140 different fintechs, all participating in that ecosystem that started from that one innovation. That was the beginning of the journey. Second was the creation of what is now a household name in terms of consumer brand called QuickTeller. The very first bill payments transaction that was done online was done on QuickTeller, and it was done with FirstBank as the partner financial institution. Since then, obviously, a lot of other solutions and products have come into the market and extended that functionality beyond what we even envisaged or dreamed of at the time. But QuickTeller, again, based on that partnership, is still Nigeria's one of the premier payment system, and is accessible across multiple channels. QuickTeller found its way into the ATM space, and again, the first QuickTeller ATM transaction was done on the FirstBank ATM. And it just tells you the story of innovation, right? In 2009, the central bank mandated the industry to migrate from magnetic stripe cards to chip and pin cards. And they gave us a deadline of, excuse me, they gave us a deadline of, if I remember correctly, about 6 months to do it. Just to put this into context, the United States had mandated migration from magstripe to chip and pin many years before that, and it took them 7 years before they eventually completed that migration, right? We were required to do this in 6 months, right? The first VEV card wasn't a FirstBank card, but the first VEV card transaction was also done on a FirstBank channel in 2009, September. Right. VEV today has become the most successful domestic scheme, more than 70 million cards issued, accepted locally and internationally. And that acceptance has extended into 26 other African countries, many of them on channels and infrastructure on which FirstBank kind of helped us lead the way in many of those countries as well. Going forward to payments collections, right? We also pioneered in our partnership with FirstBank the first online payments collections at bank branches for government, right? We had done a partnership with the Federal Inland Revenue Service to help solve their payment collections problems across the entire country, right? And that pioneering innovation was what resulted in pay direct collections for states. And again, we worked with FirstBank to deliver on that milestone, right? We worked with FirstBank more recently on the digital banking with the First mobile app. More than 10 million downloads now, and we're currently innovating in that app into the future. But I think perhaps the most amazing success story of our journey with FirstBank over the last 22 years was when we co-created agency banking about 7 years ago, right, with FirstBank. Again, the first agency banking transaction in this market was done by FirstBank in partnership with InterSwitch. Today, I think there are about 3 million agents across the country. We've transformed the lives of millions of people who now have that as a means of livelihood. We've helped using that infrastructure to support the objective of financial inclusion and transform the lives of many people across the entire nation. But none of that would have happened if that innovative, collaborative spirit that FirstBank brought to the table did not exist. I sat listening to the conversation earlier on, the panel that was here, and I thought, wow, our journey with FirstBank was very different. And I'm grateful for that journey, and I really just want to say thank you. But really what I'm interested in talking about today as I round up is what's in the future, right? What are the opportunities for us in our collaborative journey with the bank? And for me, really, there are three things, right? The first one is we believe that we can lead the way in innovating around digital contactless payments with tokenization, right? And I actually believe that we might be coming to the market again with another first, working with FirstBank on the First mobile app, creating the first digital wallet that supports multiple card schemes in the country. Thank you. The second area where I think we might be leading the way again will be in cross-border payments. The continent continues to struggle with making payments across African countries in African currencies. We continue to struggle with finding FX to do transactions. We continue to struggle with finding correspondent banking relationships to facilitate trades between African countries because we have to send money out of the country or look for dollars. We think that the next frontier of innovation will happen as we work together to create a Pan-African integrated payments ecosystem that positions FirstBank and other Pan-African players as the, I'm trying to choose my words carefully, as the global bank for African trade, right? And I think we have the right technology, and with the right partnership, we can deliver that as well. The final one is not as sexy, but I think it's just as important. As Nigeria evolves, as the market evolves, as we have more and more fintech players, we continue to struggle as an industry with risk, with compliance, with fraud, with operational challenges. And I think, again, this is where the leaders of the industry need to step up. We need the FirstBanks of this world, the InterSwitch of this world, and the other large players to step up and say, we need to sanitize the industry, we need to make it safe for customers and consumers, and we need to get back to doing the right things. And that is my vision for the next year in our partnership with FirstBank. And I think that will be the end of my presentation. Thank you very much.
I think we can do better. A bigger round of applause for Mr. Akeem Lawal, the MD, InterSwitch Pure Pay. Could you please hold on, sir, while we invite the FirstBank team to join for group pictures? Thank you.
I'm not a quitter, but I know when I'm out. Turn my TV off, chill the fuck out. I'm not a sinner, but I'm not a saint. Not here for a long time. Enjoy the charade. Don't let it get to you. Life is beautiful, don't care what they say. Chill out, don't let it get you down.
Okay, thank you very much. Another round of applause for them, please. So we now know that FirstBank doesn't only talk the talk, it also walks the walk, as we have seen the successful bank fintech partnerships as recounted by the partners Upperlink and InterSwitch. Distinguished ladies and gentlemen, it is still the FirstBank Annual FinTech Summit 6.0 themed banking on partnerships. We will soon be having our second panel discussion. They're just setting up. We want to thank our panelists. I see some of them, actually all of them already seated here. Would like to say thank you, and to you all for being such a wonderful audience. I think you deserve a round of applause. A lot of us came in very early today, and we have stayed till this very point. Would also like to thank our online audience. Can we put our hands together for our online audience as well? I think our... Oh, I've just been told to announce that lunch will be after this panel session, so please don't go anywhere. Lunch will happen after the panel session. We got off to a great start this morning with the keynote speech by Mr. Emmanuel Daniel, where he spoke on the theme, banking the future, how strategic partnerships can foster innovation and growth. And we explored that theme of strategic alliances better in our first panel session on the same theme of strategic collaborations, the collaboration between traditional banking institutions and fintech and technology players. In our next panel discussion, we will delve more into the practicalities of integrating new systems with legacy infrastructure. And to lead this discussion, we have with us someone who has helped very many businesses at business process optimization and product development. She is a problem solver and product consultant. Distinguished ladies and gentlemen, please join me as I welcome our moderator for the next panel session, themed Leveraging Complementary Strengths, Creating Structure for Fintech Synergy. Your hands together, please, for Yewande Sulaiman. A round of applause for her. Yewande Sulaiman, our moderator for this session. Do we have Yewande here with us? Okay, yes, Yewande is here with us. Please, a round of applause for her as she comes. I will shortly be handing over proceedings to Yewande, who would now introduce our other speakers and panelists for this session. Thank you. Over to you, Yewande.
Good afternoon, everyone. Thank you very much. My name is Yewande Sulaiman, as he said. So I'll be calling Obianuju Odukwe from InterSwitch. Uju is Vice President, Digital and API Ecosystems at InterSwitch Group. Then Dominion Uba, co-founder, Purple Gate Technologies. Dikbo Alabede, Regional Managing Director, West Africa, NI. Olani Yusuf, Managing Partner, Veraki Partners. Rachel Adeshino, CTO, FirstBank. Okay, I've just been informed we have Callistos Obeta from FirstBank. My apologies. All right, so let's get into it. Where's our topic? Okay, so today we're discussing leveraging complementary strengths, creating structure for fintech synergy. And I'm going to start with a personal experience, a very recent one. So as he mentioned, I work with a consulting company that works with startups. And what we basically do is, help startups take their products to market or, develop their products. And what this means is we work with banks a lot. Now, we had a very recent engagement where we needed to partner with a bank. It's the usual story. We wanted the very, very popular virtual account service. And we reached out to 2 banks. I don't need to mention their names, you already know them. The most popular ones for those services. It was very, very interesting because it was like night and day in terms of the engagement experience. One experience was so seamless where from get-go, they gave us all the information we needed. They gave us pricing, they gave us all the different services that could solve the problem that we were trying to solve. And we started the conversations. Everything was great, smooth. Communication, perfect. The other bank started with, so they started with the initial offering of the virtual account service that we talked about. Then at some point down the middle, it became a different offering entirely. Obviously for, again, I'm trying to choose my words very carefully, but for reasons best known to them. Usually because, so two major reasons most of the time. Either the motives were not aligned in terms of what we wanted was not exactly going to solve the problem that they were trying to solve, or the internal processes, bureaucracy, and the very top one, compliance. So my question, the first question, goes to Dominion. Hi, Dominion. In your line of work, you engage with a lot of startups as well and banks. How do you think that they can improve the engagement process where, generally, from the beginning, I have a clear understanding of what it is that is required to actually partner with a bank?
Okay, so the first thing is when you're talking about engagement, the very first thing you need to look out for is what are the objectives of the engagement, because, can you hear me? Okay. So what are the objectives of the engagement? Because if you are, getting into some sort of engagement and you don't have an idea of what, you're getting into, then there's an issue. So the very first step is have clearly defined objectives. And then at the end of the day, you get to now start knowing what exactly the strengths and the weakness of both organizations are. I'll give a very short story of how we got our first project, basically. So we basically Propagate Technologies is an organization that works with banks to help them innovate. And the first one we got was basically a very interesting application where the task we were given was something that was almost very impossible to do. And the very first thing that we came through with was ensuring that we could put together the right team to come up with that. Again, this is the difference between a startup and companies that have existed in a while. For the hiring process of FirstBank, for example, there's an entire process that you have to go through, from shortlisting and all that. But a startup is one that can hire and fire quickly. And sometimes it's very, very important to have that kind of flexibility when you want to innovate, because no matter how, amazing your hiring process is, most of the time you still make certain mistakes, in terms of the kind of people you hire and all that. And your ability to, quickly retrace those steps without, causing a lot of issues in the business is, something that you have to, that might make a difference at a point in time. So we had that flexibility to, first and foremost, build the right team for that kind of mission, and then we head out to it. So when it comes to going back to the question you asked me, the very first thing that you need to worry about is, like I said, the objectives, and then ensuring that everyone is properly aligned towards the goal, basically.
All right, thank you very much, Dominion. Okay, so what I hear from you is it's very important to be aligned.
Yeah.
So what I need has to be of some value to the bank and vice versa. Okay, so Uju, you run API ecosystem in InterSwitch. We've actually worked together on this specifically. So I'm very happy to ask you this same question. In terms of engagement process, how do you think that the processes can be improved to help the fintechs that we've established that, can be naive in navigating these waters?
So I think the key thing is compliance, right? And the thing is, banks are very heavily regulated. And us in the fintech space, we also are regulated, but then we find ways to innovate around that regulation. So I'll talk about the collaboration and I'll talk about the fact that we need to consider regulation. Like he said, clearly defined roles in collaboration. I find that the most ambiguous thing is, or the biggest issue is, there's a lot of ambiguity in whose responsibility is what. So you find that we have similar teams, right? And then we have people that are doing the exact same thing in both teams. I think it's necessary for us to, from the start of the project, from the start of the integration, from the start of the partnership, define clear roles. So as a fintech, this is what you're going to help me with doing. As a bank, this is your responsibility. This is the roadmap. If we can have project teams that are cross-functional, or across organizations that can say, okay, this is our roadmap, how we're going to go about it, and make sure that everything is met according to time. That would definitely help with making sure the collaboration is smooth, and then we can get true results. We also need to consider that, like I said, banks are very regulated. If from the start of a project we can listen to what regulation would need for that thing to go live, if we can listen to how we can innovate around the regulatory requirements for whatever it is that we're providing to the banks, I think that would also help to reduce delays. Compliance as well, getting the compliance team to review the process, review the project, review the product, and see that, okay, these are the possible loopholes, and prepare for them ahead of time, so we don't have to always roll back or always have issues with those kind of partnerships. Thank you.
All right, thank you very much, Uju. So basically, start from the beginning with all the stakeholders. Okay, so I'm going to draw back again on my bank example. So in the second bank's, in the second bank's conversation, like I was talking about, we got to a point where the guy then goes, okay, Yoande, I want to introduce you to my compliance team. And I asked, why? What's my business with your compliance team? There should be a standard process. You've been doing this for, at the very minimum, 5 to 6 years. These things, this is your bread and butter. This is something you know, number one. Number two, I find that a lot of times when both banks actually and fintechs are not particularly eager to go in a particular direction, they very quickly quote CBN. Oh, CBN says we can't do this. So when somebody says that to me, I'm very thankful for my fintech years of experience. Okay, I can't find the policy. Could you, it would be nice to actually see that policy and have a conversation around it, number one. Number two, I find that most of the time, interpretation, a lot of these things are open to interpretation. So when CBN says this is required or that is required, or this service is strictly for this kind of provider, or there's something called an unlicensed provider, or some other thing like that, what exactly are we doing internally to figure out how to balance that, to find that balance between the operational efficiency that we're looking for and the so-called regulatory constraints? Mr. Yusuf.
Right. I think to find the balance, it's important to start from a knowledge point of view. The fintech, the bank must be clear about what the regulatory or compliance issues are. They also must be clear about what the ultimate customers want, and then define a strategy to connect the dots. And in doing that, like we just mentioned, you must have cross-functional teams. So it's not just a tech team. It's not just a product team. You also will include your compliance team, you include your audit team, you include your design team, all of them to be a member of that team, so that from the get-go, all issues are well considered. And I think in addition to that, it's also playing to the strengths of the different parties. Like it was said in the first plenary, banks are good with risk management, with compliance. Fintechs are good with agility, with innovation. And so understanding those complementary skills and bringing them to play will then ensure that you are bringing the best of both parties. And thirdly, I would say, if you have the opportunity, engage with the regulator upfront. In 2000, when we were starting off InterSwitch, and then I was with Accenture, and Accenture was the project manager for the creation of InterSwitch. The central bank and the regulator didn't have an electronic banking guideline or standards. The first draft came out of that team, and then we now took it to the Banking Supervision Department at CBN. And so that proactive engagement, working collaboratively with the regulator, helping the regulator to build skills and capacity, working with them to come with the first draft, all of those things will ensure that you are able to balance your needs with regulatory compliance.
Thank you. Dipo, from an international perspective, I'd like us to explore this same issue. So, we're trying to figure out how to find the balance. So we've established compliance is very important. We all know that. But then, again, back to knowledge issues. So for example, I talk to people that come to me with, oh, we're trying to build this thing. And I'm asking you questions around transaction processing, and you're looking at me like, I'm thinking, okay. So if somebody like that is trying to build a financial product, what are the first things that they're supposed to do before even, so he's talked about, getting to know the regulatory landscape. What are the next things that they need to do before engaging a bank or whoever the license partner is?
Thank you very much. I think to answer that question, the fintech or the person should actually also try and seek more information around the product or the service that they're trying to build and the service they're trying to consume from the bank. The challenge, like Mr. Yusuf said earlier, is that the banks are highly regulated. Compliance is a big issue. And risk management for the banks is also a thing, right? And for the fintech guy, he has come up with a bright idea. He knows exactly what he wants to do, and he wants to go to market quick. He has not thought through all the implications of certain things, as little as onboarding. If you try to onboard, a fintech guy just wants to make sure that somebody onboards with a phone number, and then the guy is able to get a wallet and is transacting, all right? That's in his mind. He has simplified onboarding. But the challenge with that is that there you find the people I call benefit boys on the other side who have decided to take advantage of this and open an account in the name of Dangote Cement and start collecting cement money when there's no cement to be delivered, right? So there has to be a fine line, and that's where this cross-functional team comes in, and I think that's what's lacking. So in the banks, we have a partnership desk, and the person is just looking for fintech business, but that person on that partnership desk needs to be the champion of that cross-functional team, which has compliance, risk management, internal audit, all those kind of people in there that will guide the fintech. In the first plenary, they had mentioned that we've not solved half of the problem. So we need collaboration. The fintech guy is agile. He wants to build. In fact, he has built in his mind. He has deployed. But he has not thought through all the hurdles. And that is really what we need, that collaboration to handhold the guy and not stifle innovation. Thank you.
Thank you, Dipo. You're very correct. He has built. In fact, the one that I have in mind built a front end and told me, yo, Andy, take this product to market. And I asked him, please, where is the operational back end? I'm not kidding. Anyway. So, hi, Callistus. Yeah, very far away from me. I want us to explore this from a technology perspective, So where does technology come in here? How do we, beyond structures, beyond communication, how do we leverage technology to create processes that actually can be seamless enough to drive the very quick go-to-market that the fintechs are looking for?
Okay, I think that oftentimes we always think it's a technology problem, but it's actually not. I think the dilemma here is the fintechs, not all of them actually, but we have this feeling that banks are, archaic and ancient and all of that. And then the banks also think that the fintechs, you don't have balance sheets. If you create an exposure, the exposure, central bank will have to debit somebody. And it's not the fintech. They don't even have account with the central bank. What our approach really has been, just to answer the question specifically, is engagement, partnership actually, even before there's a transaction, right? So we are constantly, Paul spoke earlier from Upperlink. As a matter of fact, I had a call with Upperlink yesterday on something else. So it's to make sure there's partnership for the long haul, where the fintechs understand what the banks are about and the boundaries of how they need to operate. And then, of course, the banks also understanding how fintechs also behave. And then we work out, have a long-term view to things that we do. On the technology front, I think technology enables integration better these days with the APIs, the enterprise micro integrators. So in FirstBank, we are investing, we're making big bets on that because we know we're already very big on ecosystem banking, and we know that the future is going to go far into that. So I actually have a specific team building out the next-gen platform that will facilitate that interaction to happen and do it at speed, but also within the corridors of central bank. Because yes, we are not just a bank, we are a systemically important bank. And therefore, we have that responsibility to innovate, but at the same time, make sure that we are there for the long haul. So it's quite not as easy as the fintechs would think that you imagine once you've done the front end, you are up set to go. You have to tick quite a lot of boxes that will ensure that you are here for today and for tomorrow. And in the case of FirstBank, we have put 130 years behind us, and we are very, proud of our rich history. But we're now looking ahead for the next 130 years. That's what is uppermost in our mind. Thank you.
Thank you very much. Okay, so I totally agree with you. Most of the time, the problem is not with technology. The problem, most of the time, is with people, the people that drive the technology. But we all agree that, sometimes putting some level of, using technology rather, to put processes in place really makes a lot of difference. So there's a question that came to mind as you spoke, and it's customer ownership. One of the main problems we have with, what's it called? It gets discussed in the back rooms is access to customer information, access to customer data, actual customer ownership. What's the plan? How do we go from one person owning the entire data and giving access to another person to a point where we figure out how to build an actual partnership structure where we're actually co-creating together, co-owning the customers, and getting to a point where we're actually serving the ecosystem effectively?
I think, first of all, it's an interesting question. The reality is the data belongs to the customer fundamentally. So we are all custodians in the case of banks. And the banks recognize that the risk belongs to whoever that owns the relationship and also delivers the experience. And technology now enables that switching cost to be almost zero. Customers are at liberty to switch. So I think the path forward between the fintechs and the banks in relation to who owns the data and who owns the experience is to really recognize that, first of all, this is about the customer and solving customer problems. And therefore, each party, right, playing to their own area of strength. Fintechs are judged to have speed and innovation. The banks will provide the safety and structure that ensures that customer continues to enjoy the experience and the money remains safe. So I think it goes back to the same thing around collaboration. And I think that the pie is actually very big if we focus on just delivering the experience, with each party playing its areas of strength. Customers definitely need that peace of mind that their assets are very safe, but also need the convenience and the innovation and the experience that fintechs tend to help to create. So as long as we all approach this problem or this opportunity with that mindset that we need to collaborate to win, I think that's extremely very helpful. For FirstBank, for example, in partnering with the fintech firms, we've learned quite a lot ourselves. Indeed, collaboration is at the center of innovation, truly. You know, you cannot really innovate if you're not exchanging ideas on a continuous basis, which is one of the reasons why we set up this FinTech Summit as well, to create an avenue for fintechs to collaborate among themselves, but also for the banks to have an opportunity to know what's the latest thinking in that space. And I think we've done a very good job of that. Akim Lawal spoke about how, you know, FirstBank and InterSwitch have been at the forefront of introducing digital solutions in the market and over the last 20 years. So I think the path forward further reinforces the need
to enhance the adoption of open banking across all parties.
Right. So I'm not sure it's regulation or regulator, because I know we have the open banking
initiative.
Yes. We have the guidelines, the open banking act in UK, in the EU, etc. But I think, to Callisto's point, is around a different mindset, a mindset of growth. And I think second is also, we need leadership. And let me digress a bit. As Accenture in 1998, FirstBank under Mr. Bernard Longe as the CEO, asked us to help with a project called Century 2, looking at the next century for FirstBank. And one of the key concerns was you had an army of customers in the banking hall. And when we did the analysis, 85% of their transactions were below 5,000 naira. And it was clear that you needed to move them out of the banking hall into outside the banking hall. Back then, FirstBank had 9 offline ATMs. SGBN had 12 offline ATMs. And those were the only 2 banks that had ATMs that were offline. And so we said to FirstBank that we need to move them to the banking hall, and to do that, we need to have 1,000 ATMs. And 1,000 ATMs must be online. And my bank card should be able to work on any bank ATM. And FirstBank took up leadership and said, fine, help us develop a plan for that. At the same time, Telnet, as a technology company, came to Accenture and said, help us develop a business plan for this switch. And so FirstBank had a problem, Telnet had a solution that was looking for a problem, and Accenture was in the mix. And so we brought the two together. But what I found very interesting, and that's why I talked about leadership. We said to FirstBank, this cannot be a FirstBank product, cannot be a FirstBank company. Telnet cannot be a Telnet company. It's got to be a company for the industry. And to do that, we must allow banks to come in. And so Mr. Lunge said, go ahead. We went to Union Bank, UBA. I recall Union Bank particularly saying, my bidding is taller than yours. Why will I have a lower equity than FirstBank? And FirstBank said, fine, give all the big banks same level of equity, 10%. So your FirstBank, your UBA, your Union Bank, your AfriBank, and then the new generation banks, GTB, Standard Trust, give them 5%. Accenture also had a 5% equity. So FirstBank took that leadership. It was that leadership that led to the creation of InterSwitch that we are all benefiting from today, that redefined the entire industry. So I'll argue that for open banking to also be successful, it's less about regulation, but you've got to have somebody taking up the leadership to say, yeah, I don't mind funding this and having a small equity and even bringing my competition to have same level of equity with me, though their building is taller than mine, and all of that stuff. And so that growth mindset is important. I think the third thing would be for banks to also understand their mission. The mission of banking, of banks in my view, is to serve as an intermediary between those who want to keep money safe and those who want to take loans. And if you play to that mission, you then understand that it's not about your own branches or your own ATMs or your own products, but rather it's whatever product that can help your customers to save money, whatever products that can help your customer to get the best loan. If it's coming from him or from her, really doesn't matter. Your role is a financial intermediary. And so if you do that, then banks will play it bigger, and you can then have a bigger market to work from. I mean, if you think about Coca-Cola, Coca-Cola today has more than 500 brands. It's because they define their mission as refreshing the world and not just about selling Coca-Cola. And so I would say those three things are important. It's the growth mindset, is the leadership from some entity in the industry, and third is the understanding of purpose and redefining that purpose in a way that it allows us to collaborate and open up to then bake a bigger cake.
Okay, thank you very much. And on taking charge and driving innovation for open banking, I would like to shout out to the Open Banking Initiative of Nigeria. They've been exceptional. Okay, so we don't have a lot of time. Final words advice to fintechs that are trying to build and looking to partner with banks. Uju?
Okay, I will say focus on the collaboration. There's very strong value to get from building strong partnerships and strong relationships. Understanding what the other party needs and being sure you provide value is the ultimate thing. Once your solution provides value, like everyone has said, Mr. Nia and Mr. Kalistas have actually mentioned the same thing. Once you're providing value, you have exactly what you need to sell to that bank or to build on that partnership. So I would say open-minded collaboration and ensuring that you're providing value or something that solves a problem for the partner you're trying to serve.
Thank you very much, Uju. Mindset of growth, providing value. Dipo, from a banking perspective.
Okay, and thanks for bringing that up, because I used to be in the banking industry, and then I now exited, and I'm now on the fintech side, right? So I think if a fintech, I think somebody mentioned it earlier, and it said the banks are arrogant and the fintech is arrogant. I think everybody needs to drop their ego. That's number one. Number two is we also now need to say, what problem are we trying to solve? And we now need to collaboratively look at how do we solve that problem. And we have to be transparent with each other and open-minded. Some people are in the fintech business to cash out. And once they cash out, they don't care what has happened to the ecosystem, right? So everybody needs to be transparent. From a banking perspective, there has to be a tiered risk management framework where you don't assess every fintech on its same merits. You have to assess them based on the kind of risk that they're bringing to your portfolio, right? And then for the fintechs, you have to be clear around governance, because fintechs don't have governance. And I'm not saying not all of them, but majority of them. And it's because it's a startup. I'm one guy, and with a few of my friends, we've put money together to start this business. So you don't expect me to have a chief compliance, CRO, everybody like that. So governance is big. Compliance is also very, very big. So fintechs need to understand that when you are going to the banking environment, you also have to be compliant, because on the compliance side, the banks don't want to lose money. They don't want to expose their customers or the
Banks
funds.
practically own all of the risk anyway.
Yes, yes. So that's really, really. So for me, I would tell the fintechs to please always have the end goal in mind, make money, and do it responsibly, and then the banks will take you on board. Thank you.
Thank you very much. I think that's the end of our session. Thank you very much. Thank you, Mr. Callistus, Mr. Yusuf, Dominion,
Sir.
Dikbo. Oh, sorry.
With your permission, can we take just 2 questions from the
yes,
audience?
please. I was looking at
One
the
from
timer.
this side and one from that side, and then that will be it. Do we have questions? If you have questions, please show with a raise of your hand, and then just say your name and the firm you represent. No questions. Okay, I think we're good. No questions, so.
No worries. Thank you very much.
All right, once again, we'd like to thank our moderator, Yewande Sulaiman of Product Edge, the managing consultant. We thank Obianuju Odukwe, VP Digital and API Ecosystems at InterSwitch Group. Thank you, Mr. Alabede, Regional Managing Director, West Africa Network International. Thank you, Mr. Dominion Uba, co-founder, Purplegate Technologies. Thank you, Mr. Olaniyi Yusuf, MD, Veraki Partner, who also is the chairman of the Nigeria Economic Summit Group. Thank you also to Mr. Callistus Obeta, Group Executive, Technology, Digital Innovation and Services Division at FirstBank. A round of applause for them, please. Thank you very much. May I invite you to please use the stairs on this side so that you can take your... May we use the stairs on this side, please? Thank you. Thank you very much. Distinguished ladies and gentlemen, it is still the FirstBank Annual FinTech Summit 6.0. I would like to thank you for your patience so far. You deserve a round of applause. Please give yourselves a round of applause. We still have a panel session left, but before then, we are going to have a lunch break now. Lunch is going to be served here in the hall. We have 3 service points, one to my right, another to my left, and then another at the back. In another 15 minutes, we'll gather again together and we'll have a presentation and our final panel discussion for the day. Okay. 15 minutes, can we? What time is it now? 2:22. Okay. So we shall reconvene at 3:10. At 3:10, we shall reconvene at 3:10. Bon appetit, and see you back at 3:10.
Lie so low, lie so low. It's time to go. Lie so low, lie so low. It's time to go. Lie so low, lie so low. Lie so low. Lie so low, lie so low. It's time to go. Lie so low, lie so low. It's time to go. Lie so low, lie so low.
When the morning comes and you're always gone, and I don't see the reason why it should be different, 'cause I'm all alone and it just feels wrong. When I wake up feeling like there's something missing, why won't you stay, stay, stay a little more today, a little longer, just a little longer. Why won't you stay, 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 don't run away, wait, wait a little longer, a little longer. A little longer, just a little longer. A little longer, a little longer. When the morning comes and you're always gone, and I don't see the reason why it should be different, 'cause I'm all alone and it just feels wrong. When I wake up feeling like there's something missing, why longer, just a little longer. Why won't you stay, 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 don't run away, wait, wait a little longer, a little longer. A little longer, just a little longer. A little longer, a little longer. A little longer, just a little longer. A little longer, a little longer.
What's underneath the surface? The things that I don't know. Must be some kind of magic, baby, based on what you've shown. Could be the one that I need, but you're so hard to read. Are we gonna catch the wave? Or is the water too deep? You should know how I feel when I say, if you're an ocean, I swim. I swear I'm jumping right in. If you're an ocean, I swim. I swear I'm jumping right in. Right now we have the sunset. These moments are we are. The future is an open skyline, or written in the stars. Could be the one that I need, getting so caught up in all of you. But it's worth it. Feeling all these things when I see you. I fall more and more every time, and when I hit the bottom, I fall more and more every time, and when I hit the bottom. I'm hurting, but it hurts so good I can't resist. When you kiss me, I can feel the pain left on my lips. I fall more and more every time, and when I hit the bottom, I fall more and more every time, and when I hit the bottom. I'm not scared anymore, so let me touch the floor. I'll love you even from the bottom. I can see how badly this is hurting you. Oh, it hurts me too. Know that I'm the reason they feel like that. I can't take it back, but in my mind I do things right, and in my head I'm different. But I can see it in your movements, all your actions. Say you want me. No one else I've ever known has made me feel at home the way you make me feel at home.
stare at the horizon and think about all the ways that I could be wiser, that I could learn to love you a little bit less. I could learn to let you go in time. I could learn to love you a little bit less. I'm such a mess now. Love you a little bit less. Love you a little bit less. Every night in the ocean breeze, I feel like I'm coping, but it's just a fantasy. It's just all the hoping that I could learn to love you a little bit less. I could learn to let you go in time. I could learn to love you a little bit less. I'm such a mess now. Love you a little bit less. Love you a little bit less. That I could learn to love you a little bit less. I could learn to let you go in time. I could learn to love you a little bit less. I'm such a mess now. Love you a little bit less.
I walk through Berlin, got nothing to do. There's room to be me again. I feel so alive. I feel so alive. I walk through Berlin, the sun in my face, a sign that I dreamed about. I feel so alive. I feel so alive. The sun in my face. I walk through Berlin, the sun in my face, a sign that I dreamed about. I feel so alive. I feel so alive. You are the only reason I overflow, and you are the only reason I overdose. They say you and me are tonight, but who can prove us wrong? You are the only reason I overflow with feelings. With feelings. reason I overflow, and you are the only reason I overdose. They say you and me are tonight, but who can prove us wrong? You are the only reason I overflow with feelings. With feelings. With feelings, yeah. With feelings. With feelings, yeah. With feelings.
Baby, just leave, just take a ride. I can feel it now, it's time. I can feel it now, it's time. I know a spot not far away where we can let our dreams fall into place. In the middle of the Mojave Desert, let's just build a moment we can remember.
Hello, everyone. Okay, so apologies to disrupt the flow of your meal. Just a few announcements. We have, and this is also for our online participants. I do hope that they can hear me. There is a master class. We have 2 master classes that would happen at 3 p.m. for our online participants. There are 2 of them: design thinking for financial inclusion, strategies for innovative problem solving, as well as integrations complexities. So these 2 master classes would happen virtually, whilst for us participants present here physically, we have a session on emerging tech and financial services that would commence at 3:30. So do please enjoy your meals whilst all the sessions happen both virtually and physically. We'll see you at 3:30. Bon appetit. Thank you.
Road's gonna go. Sunrise will carry us home. We don't need nothing but time. Take off and enjoy the ride. You name the place and we'll go. Till sunrise will carry us home. I promise I'll stay by your side. Take off and enjoy the ride. Don't know where this road's gonna go. Sunrise will carry us home. We don't need nothing but time. Take off and enjoy the ride. You name the place and we'll go. Till sunrise will carry us home. I promise I'll stay by your side. Take off and enjoy the ride. You name the place and we'll go. promise I'll stay by your side. Take off and enjoy the ride.
Through curated panel discussions, breakout sessions, attendees will not only make valuable contacts, but also lay the groundwork for strategic partnerships that could drive business transformation and new growth.
Our panel sessions and masterclasses will address pressing industry challenges and provide networking opportunities for fintech startups, established banks, and other ecosystem players to develop meaningful connections. These interactions will facilitate valuable discussions on shared challenges and pave the way for long-term actionable collaborations.
Various sessions will address pressing industry challenges to generate transformative solutions, ranging from agile product development to regulatory compliance and digital-enabled risk management. These collaboration sessions encourage attendees to brainstorm and establish initiatives that can reshape the industry, fostering partnerships and inspiring collective strategies to tackle significant challenges.
Through collaborative workshops and panels, participants will discuss ways to integrate digital innovations that enhance customer journeys across all digital channels.
The summit is structured to foster collaboration among traditional banks, fintechs, and broader ecosystem players by facilitating discussions on groundbreaking digital innovations and emerging technologies like AI, blockchain, and open banking. The bootcamp session provides a platform for innovators to pitch their solutions to investors and potential partners, setting the stage for impactful collaborations that will advance industry-wide innovation.
The summit includes CX-focused sections to encourage collaboration between fintechs and banks on customer engagement strategies. Through roundtable discussions and best practice sharing, both groups will explore new methods to connect with customers and enhance brand loyalty. The aim is to facilitate joint efforts that deepen customer trust and satisfaction through meaningful CX innovations.
By fostering these partnerships, the summit will create a foundation for accessible and efficient digital financial services.
Participants can expect actionable takeaways, including frameworks for joint product development, cross-industry collaboration, and regulatory compliant innovation. Each session is structured to provide clear, measurable actions that drive growth, innovation, and enhance customer experience.
Attendees can expect actionable takeaways for expanding digital channels and increasing financial inclusivity. This will include strategic framework for multi-channel customer outreach, initiative to expand access to the underserved areas, and collaborative roadmap to ensure broader adoption of digital financial services. The goal is to leave participants with concrete steps to enhance digital access and streamline service delivery across emerging channels.
From innovative product launches to cutting-edge digital solutions, the strategies and collaborations formed here will lay the groundwork for meaningful progress across the financial services ecosystem.
We hope that even our practitioners, our investors, and even those who are interested in starting up fintechs will all come together, and together will continue to improve lives in Nigeria. And that's the business that we've been in since 1894. So welcome and have a good time.
The FirstBank Fintech Summit 6.0 will gather thought leaders, innovators, and decision makers from across the financial services industry. Our program is designed to maximize networking opportunities among banks, fintechs, investors, original equipment manufacturers, big techs, regulators, and customers. Through curated panel discussions, breakout sessions, attendees will not only make valuable contacts, but also lay the groundwork for strategic partnerships that could drive business transformation and new growth.
Our panel sessions and masterclasses will address pressing industry challenges and provide networking opportunities for fintech startups, established banks, and other ecosystem players to develop meaningful connections. These interactions will facilitate valuable discussions on shared challenges and pave the way for long-term actionable collaborations.
Various sessions will address pressing industry challenges to generate transformative solutions, ranging from agile product development to regulatory compliance and digital-enabled risk management. These collaboration sessions encourage attendees to brainstorm and establish initiatives that can reshape the industry, fostering partnerships and inspiring collective strategies to tackle significant challenges.
Through collaborative workshops and panels, participants will discuss ways to integrate digital innovations that enhance customer journeys across all digital channels.
The summit is structured to foster collaboration among traditional banks, fintechs, and broader ecosystem players by facilitating discussions on groundbreaking digital innovations and emerging technologies like AI, blockchain, and open banking. The bootcamp session provides a platform for innovators to pitch their solutions to investors and potential partners, setting the stage for impactful collaborations that will advance industry-wide innovation.
The summit includes CX-focused sections to encourage collaboration between fintechs and banks on customer engagement strategies. Through roundtable discussions and best practice sharing, both groups will explore new methods to connect with customers and enhance brand loyalty. The aim is to facilitate joint efforts that deepen customer trust and satisfaction through meaningful CX innovations.
By fostering these partnerships, the summit will create a foundation for accessible and efficient digital financial services.
Participants can expect actionable takeaways, including frameworks for joint product development, cross-industry collaboration, and regulatory compliant innovation. Each session is structured to provide clear, measurable actions that drive growth, innovation, and enhance customer experience.
Attendees can expect actionable takeaways for expanding digital channels and increasing financial inclusivity. This will include strategic framework for multi-channel customer outreach, initiative to expand access to the underserved areas, and collaborative roadmap to ensure broader adoptions of digital financial services. The goal is to leave participants with concrete steps to enhance digital access and streamline service delivery across emerging channels.
From innovative product launches to cutting-edge digital solutions, the strategies and collaborations formed here will lay the groundwork for meaningful progress across the financial services ecosystem.
We hope that even our practitioners, our investors, and even those who are interested in starting up fintechs will all come together, and together will continue to improve lives in Nigeria. And that's the business that we've been in since 1894. So welcome and have a good time.
The FirstBank Fintech Summit 6.0 will gather thought leaders, innovators, and decision makers from across the financial services industry. Our program is designed to maximize networking opportunities among banks, fintechs, investors, original equipment manufacturers, big techs, regulators, and customers. Through curated panel discussions, breakout sessions, attendees will not only make valuable contacts, but also lay the groundwork for strategic partnerships that could drive business transformation and new growth.
Our panel sessions and masterclasses will address pressing industry challenges and provide networking opportunities for fintech startups, established banks, and other ecosystem players to develop meaningful connections. These interactions will facilitate valuable discussions on shared challenges and pave the way for long-term actionable collaborations.
Various sessions will address pressing industry challenges to generate transformative solutions, ranging from agile product development to regulatory compliance and digital-enabled risk management. These collaboration sessions encourage attendees to brainstorm and establish initiatives that can reshape the industry, fostering partnerships and inspiring collective strategies to tackle significant challenges.
Through collaborative workshops and panels, participants will discuss ways to integrate digital innovations that enhance customer journeys across all digital channels.
The summit is structured to foster collaboration among traditional banks, fintechs, and broader ecosystem players by facilitating discussions on groundbreaking digital innovations and emerging technologies like AI, blockchain, and open banking. The bootcamp session provides a platform for innovators to pitch their solutions to investors and potential partners, setting the stage for impactful collaborations that will advance industry-wide innovation.
The summit includes CX-focused sections to encourage collaboration between fintechs and banks on customer engagement strategies. Through roundtable discussions and best practice sharing, both groups will explore new methods to connect with customers and enhance brand loyalty. The aim is to facilitate joint efforts that deepen customer trust and satisfaction through meaningful CX innovations.
By fostering these partnerships, the summit will create a foundation for accessible and efficient digital financial services.
Participants can expect actionable takeaways, including frameworks for joint product development, cross-industry collaboration, and regulatory compliant innovation. Each session is structured to provide clear, measurable actions that drive growth, innovation, and enhance customer experience.
Attendees can expect actionable takeaways for expanding digital channels and increasing financial inclusivity. This will include strategic framework for multi-channel customer outreach, initiative to expand access to the underserved areas, and collaborative roadmap to ensure broader adoption of digital financial services. The goal is to leave participants with concrete steps to enhance digital access and streamline service delivery across emerging channels.
From innovative product launches to cutting-edge digital solutions, the strategies and collaborations formed here will lay the groundwork for meaningful progress across the financial services ecosystem.
We hope that even our practitioners, our investors, and even those who are interested in starting up fintechs will all come together, and together will continue to improve lives in Nigeria. And that's the business that we've been in since 1894. So welcome and have a good time.
Here's a card when no go give you stress.
Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions designed specifically for you, so that wherever you're banking from, home or abroad, you can be sure of the dependable financial support with First Diaspora. Open a First Diaspora account online today. Let's take giant strides into the future together. You first. FirstBank.
Hello.
Managing your...
Welcome to First Direct 2.0, the state-of-the-art corporate internet banking portal for FirstBank that is completely refining the way corporate manage their cash and trade needs. Let me show you how to navigate our platform seamlessly. FirstDirect 2.0 is a fully integrated internet banking platform designed for corporate. It provides a single interface for all your transaction banking needs. Let's explore the modules. Account services. Manage your account efficiently with real-time insights and a user-friendly interface. Payments. Initiate and track payments effortlessly. Our platform ensures secure and seamless transactions. Trade. Conduct trade transactions all in one place. Collections and receivables. Manage collections and receivables all at once. Optimize your supply chain integrated tools. Enhance efficiency and transparency. Finance and liquidity management. Efficiently manage your finances and liquidity with real-time insights and strategic tools. Host-to-host API integration functionalities. Seamlessly integrate your ERP to FirstDirect 2.0 using our host-to-host API functionalities. Virtual account services. Easily create your virtual account, view transaction details, and download your virtual account. Direct debits. Create virtual accounts, single and bulk. Create mandates and automate debits. Get details to your transactions. Approve products and download products reports on direct debit. FCY payments. Initiate payments to foreign accounts, choosing the currency type you want with FCY payments. Pension. Initiate your pension remittance and get all the details of the payment. Experience real-time visibility into your transactions, account activity, and status update. FirstDirect 2.0 ensures seamless integration with industry platforms ERP for secure data exchange. Our platform prioritizes security with N-factor authentication and approval workflows aligned with your corporate mandates. Discover the endless possibility 0.0, first choice for all your corporate banking needs.
Have you downloaded the First Mobile app? First Mobile helps you do a lot more than banking. It's your banking and lifestyle app that gets you in front of queues every time. You want to go see a movie with friends? No more queues. You can now buy your movie tickets on your First Mobile app. Need to top up airtime or data? No qualms. Need to find the nearest FirstBank ATM or branch location? Easy does it. With First Mobile app, you can pay bills, transfer money, keep track of your finances, and even budget better. Plus, you can absolutely personalize the app to make it an expression of who you are. Check out the beneficiary management features of First Mobile app. Your most frequent transactions are automatically synchronized to ensure speed. 100% customizable. Just click and pay. What's even more cool? If you have a salary account, you can get quick loans too through your First Mobile app. Ditch the wait. Download First Mobile app now and experience banking that's woven into the fabric of your lifestyle. You first. FirstBank. Have you downloaded the...
We have created a future where financial solutions are more integrated into your world in exciting ways. From seamlessly managing your business to easily funding your lifestyle, First Mobile offers you an exciting bouquet of financial solutions that work seamlessly as you move up in your world or travel to expand your horizons. Let's take giant strides into the future together. You first. FirstBank.
Taking your business into the future will require a bank that supports you. That's why you need a partner delivering solutions tailored to you and your customers. With First Online, you can enjoy a seamless banking experience and a continually evolving financial platform to reach for even bigger dreams. Let's take giant strides into the future together. You first, FirstBank.
Check that. Looking for a business account like no other? We are proud to introduce you to First SME. With First SME account, you get to enjoy services such as zero account maintenance charge, access access to webinars and trainings, various creative facilities, access to SME Connect portal, directory provisional offers, and lots more. So, open your first SME account and start enjoying these benefits today.
You first bank.
What will banking look like in the future? For over a century, we've been growing to meet the needs of an ever-changing world, delivering unique solutions to help our customers reach increasingly bigger dreams. Innovating to create an exciting new world of convenience and freedom, where what you can achieve is only limited by your imagination. Opening up new, more inclusive channels for commerce. Empowering a new generation to reach beyond their dreams and grow into the giants they were always meant to be. We're helping to create a future where there are possibilities and where the world looks up to Africa. Let's awaken the giant in you. You first. FirstBank.
Being a student means there's so much of life to look forward to. It helps to have people who support your desire to create a spectacular future. That's why we developed Explore First, designed to give you an edge in your studies and provide lifestyle solutions that make every day a cruise. Step into our world. Let's take giant strides into the future together. You first. FirstBank.
If home was a smell, it would be the scent of home-cooked meals. If home was a sound, it would be lively tunes of Afrobeat at a party. If home was a season, it would be the dry and chilly winds of Harmattan. If home was an emotion, it would be the vigor and perseverance of Niger. If home was a place, it would be the people I hold close to my heart. Which is why I am never far from home when I transact with First Diaspora.
Even if you can't be near your friends and family, you can feel at home every time you transact with First Diaspora. Open a First Diaspora account and you'll always be home, even abroad. Welcome home. Visit www.firstbanknigeria.com. You first, First Bank.
Hello there.
The FirstBank Fintech Summit 6.0 will gather thought leaders, innovators, and decision makers from across the financial services industry. Our program is designed to maximize networking opportunities among banks, fintechs, investors, original equipment manufacturers, big techs, regulators, and customers. Through curated panel discussions, breakout sessions, attendees will not only make valuable contacts, but also lay the groundwork for strategic partnerships that could drive business transformation and new growth.
Our panel sessions and masterclasses will address pressing industry challenges and provide networking opportunities for fintech startups, established banks, and other ecosystem players to develop meaningful connections. These interactions will facilitate valuable discussions on shared challenges and pave the way for long-term actionable collaborations.
Various sessions will address pressing industry challenges to generate transformative solutions. ranging from agile product development to regulatory compliance and digital-enabled risk management. These collaboration sessions encourage attendees to brainstorm and establish initiatives that can reshape the industry, fostering partnerships and inspiring collective strategies to tackle significant challenges.
Through collaborative workshops and panels, participants will discuss ways to integrate digital innovations that enhance customer journeys across all digital channels.
The summit is structured to foster collaboration among traditional banks, fintechs, and broader ecosystem players by facilitating discussions on groundbreaking digital innovations and emerging technologies like AI, blockchain, and open banking. The bootcamp session provides a platform for innovators to pitch their solutions to investors and potential partners, setting the stage for impactful collaborations that will advance industry-wide innovation.
The summit includes CX-focused sections to encourage collaboration between fintechs and banks on customer engagement strategies. Through roundtable discussions and best practice sharing, both groups will explore new methods to connect with customers and enhance brand loyalty. The aim is to facilitate joint efforts that deepen customer trust and satisfaction through meaningful CX innovations.
By fostering these partnerships, the summit will create a foundation for accessible and efficient digital financial services.
Participants can expect actionable takeaways, including frameworks for joint product development, cross-industry collaboration, and regulatory compliant innovation. Each session is structured to provide clear, measurable actions that drive growth, innovation, and enhance customer experience.
Attendees can expect actionable takeaways for expanding digital channels and increasing financial inclusivity. This will include strategic framework for multi-channel customer outreach, initiative to expand access to the underserved areas, and collaborative roadmap to ensure broader adoptions of digital financial services. The goal is to leave participants with concrete steps to enhance digital access and streamline service delivery across emerging channels.
From innovative product launches to cutting-edge digital solutions, the strategies and collaborations formed here will lay the groundwork for meaningful progress across the financial services ecosystem.
We hope that even our practitioners, our investors, and even those who are interested in starting up fintechs will all come together, and together will continue to improve lives in Nigeria. And that's the business that we've been in since 1894. So welcome and have a good time.
Hello there. Welcome to our Digital Experience Center. As you know, we love putting you first in everything we do. We've got the ATMs, so you don't have to walk into any banking hall. And if you want to deposit, you can too with the Telecash Recycler. We have a self-service kiosk available for your personal banking services like your statement request, card block, PIN reset, and other requests. The self-service kiosk offers these various services for all your banking queries and needs. There is the card issuance machine for your new ATM card on the go with no hassles. For our trendy customers, we've got video banking available. With ease, you can sit and carry out all your banking needs. FirstBank Digital Experience Center is innovative, automated, and interactive. It's your one-stop banking solution to a fully digital banking experience. Step in and enjoy a world of possibilities. You first, FirstBank.
Here's a card we no go give you stress at all. Zero wait and zero queue. FirstBank keep it tracker. Here's a card when no go give you a holla. Zero trouble now for you. Tell off it's fam. Tell off it's spoiler. Who won't break them? Where you want say now only you get them. Nothing fit do sharp sharp payment not the way. Swipe they go you know the way. Veteran card with the sweet body. Veteran card we know the shame person. We put you first again. FirstBank Veteran card we put you first again. Generate your virtual card we put you first again. FirstBank Virtual card we put you first again. Just generate your virtual card.
Managing your finances can be simple with the right partner. That's why we are leveraging customer-friendly tech to offer borderless AI solutions designed specifically for you, so that wherever you're banking from, home or abroad, you can be sure of the dependable financial support with First Diaspora. Open a First Diaspora account online today.
Good afternoon, ladies and gentlemen. I hope we're enjoying our lunch. We will be reconvening shortly in about 8 to 9 minutes at exactly 3:30. So this is for those still having their lunch to please know that we will be resuming the sessions at 3:30. Thank you all once again for your patience so far. We have the master classes going on right now. We will be having a physical session in here, after which we'll have the last session for the day, which is the investor roundtable. So please don't go anywhere. In about 8 minutes, we will be reconvening to restart the sessions. Thank you.
Conduct trade transactions all in one place. Collections and receivables. Manage collections and receivables all at once. Supply chain. Optimize your supply chain with our integrated tools. Enhance efficiency and transparency. Finance and liquidity management. Efficiently manage your finances and liquidity with real-time insights and strategic tools. Host-to-host API integration functionalities. Seamlessly integrate your ERP to FirstDirect 2.0 using our host-to-host API functionalities. Virtual account services. Easily create your virtual account, view transaction details, and download your virtual account. Direct debits. Create virtual accounts, single and bulk. Create mandates and automate debits. Get details to your transactions. Approve products and download products reports on direct debit. FCY payments. Initiate payments to foreign accounts, choosing the currency type you want with FCY payments. Pension. Initiate your pension remittance and get all the details of the payment schedules. Experience real-time visibility into your transactions, account activity, and status update. FirstDirect 2.0 ensures seamless integration with industry platforms and customer ERP for secure data exchange. Our platform prioritizes security with N-factor authentication and approval workflows aligned with your corporate mandates. Discover the endless possibility that make FirstDirect 2.0 first choice for all your corporate banking needs.
Have you downloaded the First Mobile app? First Mobile helps you do a lot more than banking. It's your banking and lifestyle app that gets you in front of queues every time. You want to go see a movie with friends? No more queues. You can now buy your movie tickets on your First Mobile app. Need to top up airtime or data? No qualms. Need to find the nearest FirstBank ATM or branch location? Easy does it. With First Mobile app, you can pay bills, transfer money, keep track of your finances, and even budget better. Plus, you can absolutely personalize the app to make it an expression of who you are. Check out the beneficiary management features of First Mobile app. Your most frequent transactions are automatically synchronized to ensure ease and speed. 100% customizable. Just click and pay. What's even more cool? If you have a salary account, you can get quick loans too through your First mobile app. Ditch the wait. Download First mobile app now and experience banking that's woven into the fabric of your lifestyle. You first. FirstBank. Have you downloaded the...
We have created a future where financial solutions are more integrated into your world in exciting ways. From seamlessly managing your business to easily funding your lifestyle, First Mobile offers you an exciting bouquet of financial solutions that work seamlessly as you move up in your world or travel to expand your horizons. Let's take giant strides into the future together. You first. FirstBank.
Taking your business into the future will require a bank that supports you. That's why you need a partner delivering solutions tailored to you and your customers. With First Online, you can enjoy a seamless banking experience and a continually evolving financial platform to reach for even bigger dreams. Let's take giant strides into the future together. You first. FirstBank.
Check that. Looking for a business account like no other? We are proud to introduce you to First SME. With First SME account, you get to enjoy services such as zero account maintenance charge, access to webinars and trainings, various credit facilities, access to SME Connect portal, directory promotional offers, and lots more. So, open your First SME account and start enjoying these benefits today.
You first, FirstBank.
What will banking look like in the future? For over a century, we've been growing to meet the needs of an ever-changing world, delivering unique solutions to help our customers reach increasingly bigger dreams. Innovating to create an exciting new world of convenience and freedom, where what you can achieve is only limited by your imagination. Opening up new, more inclusive channels.
Good afternoon once again, ladies and gentlemen. It is still the FirstBank Annual Fintech Summit 6.0, themed Banking on Partnerships. We would like to thank you for your patience. A lot of us came in very early this morning and we have stayed till this time. We don't take that for granted. Thank you very much for being here. In another 2 minutes, we will be starting the next event, the next physical event. I'd like to ask those of us still outside to please make our way in. Those at the service points, please come back and get seated. Those still eating, let's be done with our meals. In exactly 2 minutes, we will restart the session. Thank you very much.
If home was a smell, it would be the scent of home-cooked meals. If home was a sound, it would be lively tunes of Afrobeat at a party. If home was a season, it would be the dry and chilly winds of Harmattan.
Just like my co-host announced earlier, we have going on concurrently 2 masterclasses, virtual masterclasses. One of them is themed Design Thinking for Financial Inclusion, Strategies for Innovative Problem Solving. And we have another one going on at the same time, themed Integration Complexities, Legacy Systems versus Fintech Architecture. We have listened to a keynote speech on banking on the future, how strategic partnerships can foster innovation and growth. And after that, we had a panel discussion where we delved deeper into this theme of strategic partnerships between traditional institutions and fintech or technology companies. And then we had the second panel where we moved from just the rhetorics to practical discussions about how to integrate fintech technologies into traditional banking architecture. And what we're doing at the masterclasses right now is continuing these conversations with regards to practical steps in integration between traditional institutions and fintech companies. And what we're going to be doing here this afternoon for our next session is to delve into the topic, emerging tech and financial services impact in the next 5 years. What next? We are privileged to have with us the Chief Technology Officer of NigerPay, who will be leading this conversation. Ladies and gentlemen, please put your hands together for our next speaker, Mr. Ayola Samagbeyi. A round of applause for him, please, as he comes. Let us encourage him. I know our time is fast spent. We will soon be done, but let's encourage Mr. Ayola as he comes to give this presentation. Remember that still to come after the presentation is a final session, an investor roundtable. That would happen right after Mr. Samagbeyi's presentation. Thank you and welcome, sir.
Okay. Good afternoon, everyone. Good afternoon, everyone. As I was earlier introduced, my name is Ayola Samagbeyi, and I am the CTO of NigerPay. NigerPay is a financial services institution, and it's my pleasure to be speaking at this event today. Thank you for the invitation. I will be talking about, sorry, can I slide, please? Okay. Emerging tech and financial services. Emerging tech and financial services, the impact in the next 5 years. So what is next? And before we go into what is next, I would like to even look at what is, right? And I hope that within the next few minutes, that I'm able to engage, so it doesn't feel like a lecture, it's a dialogue. And as we're discussing these different subjects, we have buy-in. So moving on, speaking about emerging tech and financial services, imagine in Nigeria, I wouldn't say a world because I'm trying to be specific here. Imagine in Nigeria where financial services was as accessible as the internet. I don't know if that is even the right measure, because internet is not necessarily as accessible as we want it to be. But imagine a world or a Nigeria where financial services was easily accessible to all the people that needed it, right? I believe that we'll find that I believe that is beautiful. And the market, right? The market for financial services and fintech in particular, right? If you look at the research from different people, DataCube and the rest, even some research from Forbes, says that it is set to hit over $500 million by 2027, right? And I think that is a significant amount, growing at 12% annually. If you look at the fintech companies and the entities that have come up in the last few years, once upon a time,
you had to walk into the bank, you had to engage your teller, you had to ask a few, if you needed support, you could call your account manager, or you had to walk in. But a few years ago, some people started, and you started seeing neobanks, digital banks, and we have seen the transformation that has happened in the financial services space, where now it's even difficult to say there's anything such as traditional and fintech, right? As is today, the reality today is that that barrier has even been broken, and the people we used to consider as traditional are no longer traditional, right? They are the ones leading, they are doing the research. You see the innovation. You see the growth, you see the research, structures are changing, and so on and so forth. Everybody is playing in the space now, and to a large extent, it has helped to push the people that thought they were the ones breaking boundaries, right? So yeah, 35% of Africa's total tech funding, I believe is more than 35%, right? Over 35% of Africa's tech funding, right, has come to Nigeria, meaning that Nigeria is the market. Nigeria is the market for this in Africa, and we've done a lot to show the people that have invested that we are the place to be, we're the space to invest in. So emerging tech and fintech, why it matters now. I've talked about the mobile penetration. Increasingly, people are getting access to mobile-first solutions. People are getting access to, mobile smartphones. People are getting access to banking services via mobile solutions, right? And then if you look at research, it also says that the median age in Nigeria is between 18 and 19. It means that, let's double it. If you are 36, between 36 and 38, you are double of the median age in Nigeria. I was looking at this when I was doing the research, and I said to myself, as much as I'm a young guy, I feel I'm old. For anybody to say median age is 18 years old. Actually, some research says 17.9, so it's not even up to 18, right? Some say 18.3, and so on and so forth. But the median age is between 18 and 19. And it says that Nigeria is the second largest mobile market in Africa. All these data points and all these things I'm saying, how does it make sense? How does it come together? It is showing the potential and what is available in the market. As much as it seems like, people will say, Nigeria has over 200 million people. Nigeria has over 250 million people, and it looks like we're just using those numbers for our benefit. They are not all superficial. These numbers show that there's value and there's the people, there's the market for the service that is being provided. The power of partnerships. Innovation alone does not create impact. Partnerships do. Collaboration amongst banks, fintechs, telcos, regulators help extend reach, reliability, and regulatory compliance. There is nobody amongst the guys listed here that is not important. The banks are important. The fintechs are important. The telcos are important. And the regulators are super important, right? We all know now, if we don't have the buy-in of a regulator, no matter how great your innovation is, you are trapped. And so constant engagement and collaboration with the regulator and other people playing in the space is super critical. We have seen newer companies, fintech startups and payment service providers build out products that ideally on their own they wouldn't be able to create. But based on partnerships, they have been able to create such products. So for example, I have one small company, I don't have money for license, I want to do this. I can partner with a commercial bank that can give me banking as a service, right? There are fintech platforms today that don't ride on any license outside of the technology infrastructure that certain parties are able to provide. That is partnership, right? FX remittances, the variety, a myriad of products that are created in the financial services space today have come as a result of partnership. And we cannot underestimate or overqualify the need for partnerships in a space, right? Innovation alone does not create impact. You can only say, I want to, I can build this, and then there's competition. But when there's competition, there's healthy competition and collaboration, there's a lot more impact that is created. Because everybody has their market share. So company A is doing this, company B is doing this, one person does this, one person does this. Their customers are fine. But then how do you make sure that you are collaborating more to get, to provide more impact, right, to larger markets? And I'm going to speak to some, once upon a time, there used to be buzzwords. So you hear some of these things, and you'll be like, oh God, why are these guys mentioning these things? It's not practical. AI and machine learning, artificial intelligence and machine learning. To a large, I wouldn't say to a large extent, to an extent, it is being used today, right? We have fraud detection platforms, fraud prevention platforms that use artificial intelligence and machine learning. There's some level of personalization that exists, right, using artificial intelligence and machine learning. And to an extent, there's some customer experience type solutions that people build, WhatsApp bots, and so on and so forth, that make use of artificial intelligence and machine learning. You have natural language processing, and it even goes beyond. Some people are looking at how they can use generative AI, right, and how it applies into banking and financial services. Where I'm going is the application exists today. But the question really is, as we look at these things, are we educating the customer base, the market? How many people actually buy into it? And how much are we digging deeper to apply these things into the things that we do, right? And the next question is, of the people providing these services, how many of them are local? So for example, we have fraud detection and prevention systems. I would ask, how many of those fraud detection and prevention systems are built by Nigerians in Nigeria for Nigeria? There's personalization, but how many of those personalization efforts using artificial intelligence and machine learning are done by Nigerians for Nigeria, and so on and so forth? Don't let me spend too much time on this. But where I'm going is, there is great value here because we have the data. The one thing we know is that we have the data. Ayola always sends 100,000 to Olamide, right? And then all of a sudden, Ayola is sending 1 million. The data is there. It has shown that in my transaction history, I've been sending 100,000. I've been sending less than 200,000 as my transaction value. Why am I all of a sudden sending 1 million? It should trigger a reaction. There should be a different level of authentication just to verify that it is Ayola. We've seen it a lot, with cards, where if you travel abroad, if you are using a card and your location changes, your card company might reach out to you. Your card transactions are just declined, right? But how do we apply this to all the other things that we do? Blockchain. Most times when we talk about blockchain, the first thing that comes to anybody's mind is cryptocurrency. I would ask true or false, but I don't know how many people will respond. But how many people agree that the first thing that comes to mind when anybody says blockchain in a room is cryptocurrency? But the truth is that there's a lot more to blockchain than cryptocurrency. Cryptocurrency is one application, right? It's the one way of using the blockchain. But then, today, there are a number of people that switch they process card transactions via the blockchain, right? At least I know of one switch that processes card transactions, and there's a private blockchain network. Card transactions are processed, and with this, the one thing I know that they have been able to achieve is fraud has gone down because chargeback frauds and all those things have reduced considerably. Number two is that because there's transparency, if there are 3 entities on the network and I'm communicating with entity A, for every transaction I'm doing, entity A knows that, the data is available to the both of us, right? Because we're transacting between each other. And what happens is that reconciliation is very, very straightforward, right? And then from an operational standpoint, it's easier to be lean, it's easier to be efficient. But the blockchain, applying the blockchain into a wide range of things, even the blockchain is applied in FX remittances, right? There are people that ride on the blockchain, of course, using crypto and different rails to give value for FX remittances. But the logic here is this is another way through which there's going to be a lot more value and you see a lot more adoption within the next few years, right? A lot more people are going to adopt it. A lot more people are going to believe in it. A lot more people are going to understand it. Open banking. Open banking. Open banking enables new financial solutions by allowing secure data sharing across institutions, right? One of the beauties of open banking is that, I don't want to use democratize because it's like I'm using it, but then it makes it easier. The barrier to entry for people that want to provide derivatives of the standard financial services that exist right now is lower. It's easier to come in. So for example, there's no reason why I cannot provide advisory services for you based on the way you spend your money, right? What platform, on what basis can I provide that, that service to you? The basis for providing the service to you is access to your data, access to your banking data. Your banking data is your data, right? And so if you give permission, if you give access, if you say you want to go ahead and, give this other company access to your data, there's no reason why they can't give you that, they can't provide the service to you. Where I'm going with this is, there's a lot that we can achieve with open banking. I think that we have made a lot of progress with open banking in the last few years, right? I know there are champions of the open banking initiative in Nigeria. There's a framework that has been developed, and people have been engaged, and it's growing, right? But this is one of the ways that we're going to see a lot of growth in the financial services space within the next few years. And like I said, all these things I'm talking about all still, bank on partnerships, right? Collaborating, making your data available, So yeah. Cloud computing. And I said speed and scalability. The reason why I put speed and scalability, I think there are a number of other reasons that one can attach to cloud computing, right? But I put speed and scalability because, especially in the fintech space, when your demand is ever evolving, today you have one customer, tomorrow you have 1 million customers. One person just goes on Twitter and says, I downloaded this app and it was so great, and this and that, and all of a sudden, everybody's downloading the app and trying to use it. The beauty of cloud computing, is that it is easily scalable. Scale up, scale down, vertical and horizontal scaling, and, security is also there, right? You don't have to worry. Of course, there are people that are providing it locally. I think with a lot of the things I've mentioned today, they exist. The question is, how many people locally are providing these solutions? And how are we encouraging the people providing the solutions, right? So for example, cloud service providers, how many local Nigerian cloud service providers do we have, right? But there's value here. But then the next question is infrastructure. do we have the adequate infrastructure for this? Meaning, internet service, are we going to, if one person is affected, it doesn't mean that all our services go down, right? So for example, imagine what happened with Microsoft, right, and CrowdStrike. That is a, how would I put it? It's a one-off event that will hardly happen. Maybe it will take another 100 years for that kind of thing to happen, right? But the question is, can we say the same about the base infrastructure that cloud computing will rest on if we're talking about doing it in Nigeria? The next 5 years. So I have spoken about, let me go back a bit. I've spoken about the power of partnerships. I've spoken about AI and machine learning, personalization, fraud detection, and enhanced consumer experience. Blockchain, thinking about blockchain beyond cryptocurrency. There are so many other ways, or there are other ways we can apply the blockchain into giving value to the customer without actually, it's more than cryptocurrency, right? That's the logic. And then open banking. We said open banking, with access to data, there are so many people, it is easier to provide value to the customer because then you have aggregated information, right, that you can then use in doing analytics and then giving advisory services or just even doing better for the customer and a wide range of things. There's no reason why if I want to do a transaction on my account, it needs to come from my bank. It should be able to start from somewhere else and complete at my bank and everybody is happy, right? So there's a variety of products that can come from open banking, right? And then I talked about cloud computing. And then the next 5 years, some of the trends to watch. Today we have real-time data analytics. It was very interesting as we were waiting for this session. I was seeing a few ads. And the ads I was seeing, I was just like, this is very nice, right? And it shows the growth that we have experienced in the financial services space, right? And I would say everybody is a fintech, right? It can be a problematic thing to say, or it might be, it might shake a few tables, but why I say so is that everybody in the space is providing financial services. This is my understanding. Technology is supporting the company to provide financial services. Be a bank, be, if you're a commercial bank, an MFB, whatever license it is that you have, you are providing financial services, and technology is playing that supporting role to help you achieve it. So in my opinion, we're all fintechs, right? So improvements in real-time data analytics. We have this already. There are people doing this. So for example, there are some apps you go to, you see your spend analysis, you see your saving analysis, your investment analysis, and so on and so forth, right? You spend maybe 25% of your money on groceries every month. Maybe you need to tone it down. I want to do my budget, and so on and so forth. There are guys that provide this. But we'll find a lot more coming up within the next few years. I believe that as more people adjust and more customers are inclined to it, I think one of the biggest challenges is that people do not want to embark on endeavors that the customers are not inclined to. Is this really my problem? I'm hungry. I can't be talking about analytics. I beg, let me transfer my money. But as more customers are aligned and inclined to services like this, you will find a lot more companies providing this as part of the service offerings. More AI-driven personalization. So Iola likes to spend money on sports. There's no reason why special products cannot be created for Iola based on that data. It's personalization. There's no reason why Iola, as a Chelsea fan, right, cannot, I'm not trying to get personal, but I hope everybody understands the logic. It's personalizing the service you are giving to the customer based on data that is available, AI-driven, right? And the data is available. Internet of Things, right? Applications of Internet of Things in providing financial services, we will see more of it, or we'll see it in action within the next few years. These are some of the things to watch out for. And we're going to have a lot more mobile-first solutions. Because as the mobile penetration increases, meaning as more people get access to smartphones, it then makes and creates great justification, right, for anybody to say the first approach I want to use to providing a solution is via mobile. And so you will have a lot more mobile-first solutions within the next few years. Yeah. Thank you very much. I don't know if anybody has questions.
Can we put our hands together once again for Mr. Ayola Samagbeyi of Naija Pay? I'd like to invite the FirstBank team to come on stage for a photo op with the speaker. May we have the FirstBank team to please join us on stage for photos. Thank you. Thank you once again. Another round of applause for Mr. Samagbeyi. Yes. We still have Okay, we still have one more session to go. Once again, I would like to thank all of us here seated and those joining us virtually as well. The master classes, virtual master classes are just about ending now because we would want everyone to be part of this last session, which is the investor roundtable. I understand there's a few things to be done logistics-wise, and then we would get to that session. But while they're trying to set up, just a quick recap of the day that we have had today. We began with a keynote address by Mr. Emmanuel Daniel of the Asian Bank, and he set the tone for our discussions, talking about the theme, banking on the future, and how collaborations between tech companies and traditional banking institutions can foster innovation and growth in the industry. And then we went into panel discussions. The first explored this theme even more. We had experts who have successfully built strategic alliances talk to us about how they did it and why these alliances are important. And then the second panel discussion, we talked about the infrastructure, technology infrastructure, and integrating those into traditional architecture. And the master classes we're currently having are also discussing these issues. We will be looking at a new topic for our investor roundtable, which my co-host will introduce in a bit.
Thank you very much, Godson. and we do appreciate the patience of our esteemed audience. So for the investor roundtable session, we'll be looking at from seed to scale, investor insights on growing the fintech startups. I mean, the conversations today have centered around what we currently have, what the future holds, and the possibilities that we can invest into. So this session is going to focus on how do we scale. I mean, we heard Mr. Samagbe speaking about scalability and speed and all the possibility with the Internet of Things, the improvements in real-time data analytics, mobile-first solutions, and all of those things. There is the investment part, and how do we ensure that this can happen? I want to believe that we do have a moderator in the house. Yes? 1 second, please. Okay, so while we wait for logistics to be sorted, could we have some music in the background? Thank you.
And it just feels wrong when I wake up feeling like there's something missing. Why won't you stay, stay, stay a little more today, a little longer, just a little longer. Why won't you stay, 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 don't run away, wait, wait a little longer, a little longer. A little longer, just a little longer.
Okay, thank you very much, technical team. Without further ado, I'd like to invite to the stage our moderator for this investor relations session, in person of Bola Lawal. Could we jam our hands together and welcome our moderator on stage? We've had lunch and we are not busy. Can we put the hands together? Thank you. Until the person comes on stage, please, can we keep clapping? Let's encourage them, do it better. It takes a lot of courage and confidence to walk up on stage, trust me. So can we just encourage our moderator as they come up? Do we have them in the auditorium? Okay, while we wait for them to come, if I can have some ushers, we will just sort of take quick recap. Can we take interactions from our audience? What has been your highlights of this summit? I mean, so many insights that we have shared. If we have anyone who would like to give a comment, can we have a microphone passed around the room? We can take that engagement. In the meantime, if I also can have the technical crew ready so we can also take comments from our online participants. I see a hand at the back there. Can we have the microphone to the person? Please introduce yourself, tell us your name, your organization, and one of the highlights you've been able to take away from this summit up until now.
Thank you so much. My name is Sheung Oluwabumi. I'm a lawyer. I'm also a consultant to the presidency. Now, I came in the morning, but I stepped out for a meeting and I came back. So I made inquiries because I spoke with one of the organizers and I told him that just an observation. Next time you're having a program like this, it's important for you to involve and invite NITDA. NITDA, NITD, Nigerian Information Technology Development Agency, is an arm, an agency under the Federal Ministry of Science and Federal Ministry of Digital Economy. They are the regulators of the internet space. Anything that has to do with fintech, technology, anything, startups generally, they are the regulator, and it's important that when next you're having a program like this, they're around to give updates on some of the fundamental and recent federal government policies, proposals, and initiatives. Because I know that FirstBank has 1 or 2 programs for the youths. They come up with some programs recently, about 2-3 programs. As a matter of fact, they partnered with Google, and right now they're giving grants to startups. Just last week, they came up with a policy that between now and January next year, They're going to be supporting like 3,000 startups. So these are just like a notice to the organizers. The next time, please involve the regulators, NITDA. They're the ones that regulate the fintech and the technology space. It's very, very important. And you can even partner with them. It's very important. Just an observation. Thank you so much.
Thank you so very much. Can we give him a round of applause? Do it better. Thank you for your comments. That is taken on board. I'd also like to just use this opportunity to announce that we do have an investor roundtable tomorrow, and the DG of NITSTAR would be present as part of that panel. The regulator roundtable, we would have representation. So we take your feedback, but this was it was put into consideration as well. But thank you. Do we have one more comment before we move into our next segment? Okay, I see a hand there.
Thank you.
Good afternoon, everybody.
Good afternoon.
Yinka Kolawole, my name. I'm an accountant. We've addressed a lot of things here today, but there's something I find lacking. There are times when a fintech service can suddenly become internet fraud, and the people involved may intentionally not have been fraudulent. Where do we go from here? There are times fintech service can suddenly become cyberbullying, when that was never the intention. I believe in a forum like this, the MBA, for example, should also have been present, because either their members or they as a body could be needed in situations like this. Thank you.
A round of applause for Mr. Yinka Kolawole. Your comments are noted. Thank you so much for the engagement. We do have Mr. Bola Lawal on stage. Please recognize him with a round of applause. So I'll leave this next session in his hands as he takes us through and introduces our panelists. Over to you.
Thank you very much. Just give me 1 second. Just give me 1 second. We have some of our panelists mix up the time, but they're on their way. So I can call up. So good afternoon, everyone. Thank you for being here. You could be anywhere else, but just to be here. So thank you very much, Jay-Z. Well, thank you very much for being here, and thank you to FirstBank and the organizers. It's such a great event, and thank you all for coming. Thank you to different stakeholders, fintech, ecosystem, everyone. Thank you for being here. So today, or this afternoon, we are going to be talking about something that, frankly, is top 3 or top 5 in all fintechs. Investment. Fintech is very unforgiving, and you need money to hire the best people, to get the best distribution channels, to protect your technology against fraud and things like that. So I'll go ahead and call on our first panelist, a friend of mine, and some folks like to call him the fintech daddy, or the ecosystem daddy, Mr. Olude Shirabo. They put one title here, but he's the Voltron Capital, amongst other things. The next person, I'm not sure if it's here, is Ovo Emokhopo here. Okay, I'll go to Ayodeji Aino, Head Enterprise Innovation, FirstBank. Welcome, Ayodeji. Yes, so that there. launch. Yeah, I guess we're. All right. So do we have Yvonne Johnson? Can you please come on stage? Yvonne, co-founder in the Sina. And can we also have the original moderator come on stage? Fola Olatunji David. Please come on. And can we have Maya Hogan Famodu come on stage as well? Maya, Fola.
Good afternoon, everyone. Can they hear me? Good afternoon, everyone. Yes, this is going to be the most interesting moderator you have. I woke up yesterday and I lost my voice. So I was wondering how I'm going to moderate today. But at any point, I believe I'm amongst friends and colleagues. So if I start the question and you cannot hear it, I'll text it to you. And you just respond. Delighted to be here today. Delighted to be hosting this session where we'll be speaking about insights from seed to scale. Hi, Maya.
Hi.
They're showing off their voice. You know, you don't know what you have until you lose it. So I'm appreciating people's voices today. Today's conversation promises to be exciting, and I would want us to jump straight into it without wasting any time. Olumide, I'm going to start with you because you're right here. What does investing look like for you? What do you typically look out for when you're looking for a venture that you believe is going to get from seed stage to scale? In about 2 to 3 minutes, I'd like you to walk us through that. And a quick intro about yourself and your investment activity.
Thank you, Fola. Good afternoon, everyone. My name is Olumide Shoyombo. As introduced, I'm the co-founder of Blue Chip Technologies and Voltron Capital. Blue Chip is an enterprise technology firm, and Voltron Capital is a fund backing startups across the continent. Quick background, been investing since 2014 in the market. I had the privilege to back over 150 companies. Many of the darlings in the ecosystem, including Piggyverse, Paystack, Lemfi, Moneypoint, and a host of others. Yes, Fintech cleaning, you would say. And so it's been very interesting to see some of those companies move from seeds to scale. I think what I look for, coming to your question on trying to look at companies that move from seed to scale, starts from the entrepreneur. So I'm looking at this entrepreneur, why this entrepreneur, and why this problem for this entrepreneur. What has this entrepreneur done before to warrant their boldness and effrontery to build here? So if you look at even Shola's journey with Paystack, he was working on a project in Access Bank. He had tried a few things and said, hey, this can solve a real problem. Or if you look at even Tosin's initial journey with TeamApt was from his time at InterSwitch. So for you to decide to build something, you must have a worldview of that problem that is different from what's out there. You must have some domain expertise, and you must have taken a risk on yourself. So what I tell everyone is, before you can ask anyone to take a risk on you in investing in you, you have to ask yourself, what risk have you taken on yourself to warrant that investment? So you can't be in FirstBank building a product and saying, I should come and invest while you're still working in FirstBank. You have not taken a risk to jump into the entrepreneurial world before you asking for a pre-seed or investment check. And then comes the market. So it's who's the team building, what's their domain expertise, and then the market, right? We then talk about what is the size of what this person is building? How big can this be? Not every company is a venture company, and not every company should be a venture company. So is there a possibility to create venture-like return in this firm? And in Africa today, right, we're at a pitch competition on the sidelines of this event, and we reiterated the point around solving for non-consumption. Many of the offerings that people have today are competing with food, right? Somebody has not eaten, you're telling him to come and pay for your app. So how do we lower the barrier to entry to solve for non-consumption, and how does tech help us do that? So those are the key things that I look out for.
Thank you, Olumide. I think it's very important to point out that Olumide is advising everyone in this room that has an idea to first quit their job. So before you go home today, resign. All right, I'm going to jump all the way to Maya. Yes, straight to you, Maya. So Olumide spoke about the character of the teams and the risk appetite. I also know that your portfolio has quite a sizable amount of fintechs, and you would have seen certain trends among the business models. So what would you say are some things that stand out in business models, even if they're not similar, but what are some consistent things you see among the business models of fintechs that you invest in? And the same thing, please, a quick introduction about yourself, your fund, and so on from there.
Okay. Hello, everyone. My name is Maya, despite my very American accent. I'm half Nigerian, been here the last 10 years, run an early-stage investment fund called Ingressive Capital. We invest in pre-seed and seed-stage technology companies. Fund 2 is about 75% financial technology businesses, so fintech startups. Fund 1 was about 50% fintech companies. Our very first investment was Paystack. We've done Bamboo, a number of the prominent fintechs in the ecosystem as well. I wouldn't say that over time there's a specific business model that we look for across all fintechs. I would say we break it down in a couple silos, and also these things change over time. As opposed to looking at it as like a business to consumer or a business to business model, we look at sort of the stack of financial infrastructure. Banking, I would say maybe when we started this almost 10 years ago, the main type of business model that we were looking for were things that just made payments more seamless. That just made payments more seamless for businesses, that just made payments more seamless for consumers. And obviously, very nice business like Paystack came to be. Now, I'd say we are more interested in, or where we are going, are businesses or fintech solutions that are focused on niche populations or providing their go-to-market. So maybe it's a digital bank, maybe it's a general remittance play, but their go-to-market are solutions that are focused on a niche consumer demographic. So whether that is a corridor play, so say it's East Africa to China remittance play, or say it is a type of payments, say it's a tipping solution, or say it's something else that caters to a specific population and specifically meets their need and is a market entry for a greater tech play. So as opposed to a specific model, I'm now most interested in initial go-to-market, niche businesses, solve their core issue there and can expand products and services and expand their TAM from that consumer demographic that is obsessed with this specific product.
I love it. So pretty much from seed to scale. So you look at businesses in the fintech space that can very quickly scale and can solve a core segment's problems as they occur. And I actually wanted to jump straight to Yvonne off of the back of that. Yvonne, you have I guess similar to every investor here, you operate sort of like a model where you get your hands dirty as much as you invest. Some challenges you've seen investing in this fintech space, and sort of, are there any words that people who are thinking about going into that space can be mindful of? So some of the biggest challenges you've seen with startups in the space, in the fintech space, feel free to use examples, don't mention names, And yeah, but as always, give an introduction, your name, the fund you operate.
Okay. No, thank you so much. Just in terms of introduction, my name is Yvonne Johnson. My former employer is the one organizing this wonderful conference. But now I am on the other side. I run a fintech focused on financial analytics. Now, so your question is from an investor perspective or from a founder perspective?
You have the unique perspective of having been an investor in the past. We met in the war fronts investing, and now you operate as a founder. So you sort of see both, and I believe you have portfolio companies that are seeing both. So what are some of the challenges that you've seen and some of the things that you expect? You know, there's certain problems. I could give you one. Fraud, for example. Fraud cuts across every fintech. Talent gap across every fintech. But what are some other common things that you've seen?
Yeah. No, it's a good question. And, you know, just like you said, before I became a founder, while I was still kind of employed, I did some angel investments, right? So, you know, looking at different ideas and, you know, putting kind of small money into it. And in terms of kind of challenges, especially from a founder perspective, it's really the business model. That's where I see like a bit of a gap. And even again, just being a founder, right? Because the environment we live in, right, you know, there's no shortage of big, audacious problems to be solved, right? You know, in any industry, you pick an industry and there's a big problem to be solved, right? You know, I mean, that's one of the advantages that we have. And these are real problems that once you solve them, you're impacting people's lives, right? You know? But then where it starts to get tricky and very challenging is what your solution is to that problem, right? And the business model. And because nowadays you think that, okay, if I just build this app, if I just write this code, I can solve this big, hairy, audacious problem. And one of the things that I've seen as a founder is that it's not always that, right? You know, when you think about your solution, it's really thinking deeply about what is the right solution. Yes, technology helps. It's a very important lever. But what I find that as a founder, and it's been a learning for me, right, is that, you know, that solution that you build, you know, it has to be the right one for the particular problem. And similarly with the business model, which in plain English means how are you going to get people to pay for this, right? You know, what are you going to charge for it? How are you going to charge for it, right? And the reason why that's also challenging is the environment we live in. You are competing against whether it's an established player that already has a similar solution that people are using, or whether it's just kind of non-consumption. So I find that those two things for me as a founder, there's been a lot of kind of brain power thinking about it, right? You know, it's never just, you know, I have stumbled on this, you know, problem that nobody knows, right? There are big problems everywhere, right? You know, it's really just to say, what is your solution to it, right? You know, what is the product? How are you designing it? And what's the business model?
Thank you, Yvonne. Adeji, I'm going to jump to you now. And what we're doing is we're going to do it like an exam. You know, where question 1, you use your answer of question 1 to answer question 2. So, does FirstBank invest in startups directly or indirectly? Question 2, if yes, why? If no, why?
Okay, so good afternoon, everyone. My name is Adeji. I head the bank's innovation function. To answer your question, so again, we invest. And when I say we invest, it might not be direct financial investments, but we provide all the support and tech needed to help, you know, startups scale and achieve their objectives. So, so for example, everybody here knows that FirstBank pioneered, you know, mobile money in Nigeria. First Money, it's our flagship, right? I think we're the biggest, you know, bank-led mobile money operator in this country. And if we go back to the history of how that was, you know, achieved, we had to work with a fintech from, you know, we will look at it from cradle to full development. We co-developed, provided the resource, the know-how, the market know-how, access to customers, provided our tech stack as well, right, to help reshape and, you know, design, make the product fit for markets. So that's our own form of investment. And you know, the result of that is our leadership in that space. So we do direct, so we invest, right, as FirstBank. But also we have we're part of a holding structure. We have First funds as well. We also put in capital. So we do both.
Thank you. I'm going to don't drop your mic.
Okay.
You're on the hot seat for now. So, and forgive me if this has already been said. I walked in straight from Abuja for this, but do they know what they're walking away with as a partner? So is FirstBank, I'm hoping FirstBank is going to be a partner in the journey of fintechs. And is there anything they can look forward to before I ask you my third question?
Okay, so
how does partnership look like? That's basically
partnership
with FirstBank. If fintechs in the room were looking for that.
So for us, partnership is, I think the first key thing is, and the very valuable thing is, our customer base. We have, I think, over 25 million accounts. So you can imagine if you are a startup with an MVP, that's been proven, and exposing that to 25 million paying customers. So that's very key. In addition to our customer base, for us is also our spread. Like, we're in every local government in Nigeria, but we're also in 6 other African countries. So you can also look at it from a geographical scale, what we can help you achieve, right? So for those that don't know, I can list out the countries. We're in Ghana, Gambia, Guinea, Senegal, Sierra Leone, and the DRC, right? So we're both in Anglophone and Francophone countries. So again, that gives you significant opportunity or leverage to scale, right? So those 2 key things is what we bring in. But in addition, also the product know-how and also the market know-how, right? It's very, very key. We know our customers. We have an extensive, library of insights, with respect to our customers, right? So, and that can also help, shape the product and make it fit for markets.
Thank you, Adeji. I'll come back to you. Let me let you rest a little bit. Olumide, back to you. You mentioned you've been investing since 2014. I remember reading your investment thesis back in, I think, 2015 and seeing the work you were doing. If you had to go back in time, 10 years ago, with everything you know now, what would you do differently? Or what would you double down on other than buying Bitcoin? What else would you do differently?
That's a very good question, and an interesting one at that. I think there's this saying that I've made my own, is that there is no good investment. There is none. There are only companies, there are only 2 outcomes. Companies you should have given more money, and companies you shouldn't have given money. So even when you win, you didn't win, right? Because at the time I gave Paystack money, I gave some other people money. I should have taken the money from all those people and given Paystack or giving Money Point or PiggyVest. But I'm saying you learn, and that's the whole reason. The reasons why certain funds are more successful or achieve success and others don't is because you get to see the good things. So what's your deal exposure and what does that deal flow look like? Because if you are saying a lot of good things, obviously you would invest in a lot of good things. I think if I look at the journey over the last 10 years, it's very, very interesting when people who've just started investing or who are looking at our ecosystem and start saying, hey, we are not doing these things, or these things are happening in the US. And I tell people that, hey, we've just started. You're comparing us to ecosystems that have existed for decades, right? There's this impatience that we have to get things done, and it's fine. But we need to understand that markets aren't just created that way. We are starting to see the key pillars and formations of a thriving ecosystem. What do I mean by that, right? You have seen companies being built from zero, exited, employees made money. Those employees have started investing in other companies. You have seen situations where super engineers, product managers from high growth startups have gone ahead to fund theirs or to start theirs. If you look at the likes of the founders from Mono, some ex-Andelas in Raynest, you're starting to see those kind of things happen in an ecosystem. As those guys also receive funding, they will grow people. Those people will go ahead and build theirs. So if you think about it, there are some roles even in our ecosystem that didn't exist. Many years ago, nobody said I was a digital marketer, right? Or I was a product growth specialist or a growth hacker, right? Those things existed because ecosystems were built and certain industries then existed. So I think we are it's still very, very early days. I'm very bullish about venture in Africa, especially when you think about what that future looks like, right? I always talk about 2050, for example. It's only 26 years away. If you can remember when Obasanjo became president, and I'm sure most people in this room can, you can think about 2050. Nigeria will probably be about 500 million people, median age of 20, born digital first. Who's going to build solutions for those people? Those people will not walk into a bank to open a bank account. Those people would do things digital first, and they would have a purchasing power. And that's really what the bet on the future of venture is in Africa. So for me, it's looking back at the last 10 years, it's been interesting, but I'm even more excited about the bets and the bull case for venture in Africa.
Yeah, and before you drop the mic, I want to ask you, would you have made more investments or less investments with what you know 10 years ago?
I think I've invested in the companies I really wanted to invest in. I probably should have invested in more money in certain companies than the others, but I don't think there's any company that I really liked that I didn't invest in.
Okay, fantastic question.
Companies that I should have invested in that I didn't know that I should have at the time.
One of the easiest metrics to help us determine where we're going to invest is where the amount of venture capital dollars are flowing into, because we're only pre-seed investors. We're not going to back the company through growth or exit. And if we're just investing in the pre-seed or seed, there needs to be somebody who comes in. And that's also how we realize liquidity. Is we'll exit, we do the pre-seed investment, come in at a 1 to 5 million post-money valuation, and then we'll sell at a Series A or Series B at 50, 100, 150, ideally more valuation. And so that's one thing. We need to make sure that there's later stage investment. We need to know that this is a key, these sectors where we're investing are key recipients of venture capital dollars. And also where you're generally looking at liquidity. Where realistically have the technology unicorns come from over the last 5 to 7 years in Africa, and where the companies that did become unicorns, how long did it take them from zero to launch? And it actually is fintech companies. As of 2022, it was about 3.2 years from the time of launch to time of exit of financial technology businesses in the ecosystem. And the majority of exits that are happening, we can talk about exits as well as just unicorn status, have been in financial technology companies. And so now to go back really quickly, and just on the rest of that, what we're predicting and what we're thinking, we don't do, of course we'll do speculations of the industry, but we are not going to define our investment strategy in Fund 3 or Fund 4 based on the activities of the market today, because things change really radically. If we were investing 10, 15, 20 years ago, we probably would have wanted to do telecommunications infrastructure or 0 to 1 banking technology services. Switching systems, That's not what's happening today. And so in order for us to remain really agile, we actually audit our investment thesis on an annual basis. I was mentioning top-down, bottom-up. We look at the actual GDP constructions of the countries across the continent. And in Nigeria, Ghana, Egypt, Morocco, where we're actively investing, what are the key contributors? And what are the governments doing in order to expand the GDP? And so if you look at Morocco, today, they don't have a massive electric vehicle manufacturing industry or battery industry, but that's where their government is actively investing. So if we're thinking about SaaS solutions for manufacturing industry, where potentially are we going to be thinking about investing? So that's the top-down approach. And the bottom-up is on an annual basis when we do our thesis audit, we literally go around to markets and ask, what technology tools are on your phone? Which phone are you using? How are you engaging with it? Like, I want to know. My father's a pastor at Mountain of Fire, and sometimes I'll just go to his congregation and be like, what's on your phone? What are people at the church using? How are people tithing? Like, that's actually the best indicator of consumer tech, consumer fintech. Do they have, when I knew MoneyPoint was a serious company, was when people are receiving tithe using MoneyPoint POSs. I was like, okay, it's over, show's over. I know what's happening in the future of this company. And to go back on your previous question, one more time?
So you've sort of answered it, which was what has informed the jump from 50 to 75, and then what do you predict? So you sort of answered it in a way.
And then the last question of what would I do differently? I'm gonna steal your question.
Go for it.
See, Shine, sorry. We actually only have an 11.5% failure rate in our Fund 1 companies. And so I actually, yes, I think the mistake of every pre-seed investor is not putting enough money into any one company. We all have small funds, we're all strapped, we're all like, oh, whatever, as long as I can get a ticket in there, it'll make big money. Okay, and then you realize dilution is really real. We're at the ticket that we put in, the initial ownership we have to anticipate like 75% dilution by the time we exit. Like, I didn't realize that. Now I'm like, that was big money, and now it's not. So yes, of course, ownership is very important. But something that we have changed to is actually I should be putting my money into every company that comes to investment committee. Like, it's not that, when we've actually analyzed this in our portfolio, it's not that we have lost more money investing in things that didn't work out. I mentioned 11.5% failure rate in our Fund 1 companies. But we've lost more money from not investing in the majority of things that we saw. So had we put even a small 25K ticket in every company that at least went to third conversations, the returns on the fund would be significantly, multiples higher than it is now. So actually, going forward, I want to put my money in everything. So if you have a good idea, come talk to me after.
Okay, Maya. See you after.
Okay.
I have a few. Speaking of ideas, I'm going to jump to Yvonne now. But just to note to the audience, we'll have time for one question, 2 questions, after this next round of questioning. So we have a little time left, but we'll have time for, one question, just one question. So Yvonne, your startup now looks at data, and you use AI to improve lending. Forgive me for simplifying it, but that's how I see it. That's my understanding of your business. Is there any, and I know that at the base of fintech, or somewhere around the base, maybe not the base, is inclusion and credit, access to credit. Is there more that can happen when people have access to credit, other than like changing their iPhones and whatnot? Are there actual true life things that you think can happen when people have access to credit?
The short answer is yes, absolutely. And you've seen that from other markets where they have, kind of a smaller credit gap, right? But even in our markets, you've seen the power of, credit, right? When you make it available, right? And I know that, when people think about credits, there's a negative connotation, right? But you've also, and because I used to work in a bank, I've seen that as well, right? When you see credit for non-consumption use cases, right? To be able to kind of, provide working capital to a viable business, right? For a lot of people, it's the difference between kind of, surviving or not, right? You've seen credit, help people kind of expand and whatnot, right? So yes, absolutely yes, right? In terms of, there's a lot of positives in terms of access to credit. Now, to your point about, chipping away at this problem, there's a lot of people trying to do it as well. And it's something that we see and we think about a lot. And one of the things that, I'm increasingly convinced about is, I guess, the distribution, being able to get to them, right? Usually you find that that's the first thing, right? And I think, it's very inspiring to be part of an ecosystem that has proven that. We've seen some of the successful fintechs, and one of the big things that they've done is just, expanded their distribution and gotten to the places where even some of the most established, enterprise companies couldn't get to, right? Whether it's the banks, right? Because, the first step is being able to kind of meet them where they are, right? And it's at that point that you then be able to get insights into their environment, how they live, how they spend, what they need, what they really need, right? And I think that solution of widening the distribution, whatever format that's going to take, it's not a traditional bank branch, right? We've seen that. Expanding that distribution, getting to them, that's really the first step, right? Because once you really solve that, everything else just follows.
I absolutely love that. In fact, when you said distribution, because I'm here, everybody's heads are like, yeah, distribution. There's a saying in the startup space that first-time founders focus on product, and then not just second, every other time founder focus on distribution, because that's what really matters. And so, Ayodeji, when we're speaking earlier, you said, as we think about partnership, part of the things you offer is a massive network for distribution, whether it be the customer base or the branch network. So how practically, what is the entry point to reaching out to FirstBank? If there are people here that have ideas and I want to, work with FirstBank to leverage the distribution, or just think about partnership generally. If I had to answer the question, I would have put your phone number and email address on this big screen. But I think you have a better answer.
So, okay. The easiest way is we have a link on our website. So if you don't know anyone in FirstBank, just go to the website. There's an idea portal there where you could submit ideas. But if
we don't want that one.
You don't want that one?
We don't want
Okay.
that one. We don't want idea portal on your website. We want the people that they can hold their shirts inside this room.
Okay, so let
you and who else?
I'm trying to look. So
can they stand up?
I'm trying to scan the room. Let me see if my guys are here. Okay, let me just...
Let them lock the door first.
So is Adewale here? Salami, I think he's just stepped out. Okay, so you have Adewale, Salami. Rachel has stepped out.
Is there an email address we can put on this board?
Yeah, but...
Technical. Do you know this man's email address? Can we get his email address on the board, please? Bola, Kumi.
They can give them my
put his email address. Aliyah, put his email address on the screen, please. Because of NDPC, we will not put your phone number, but your email address.
Yeah, but that's not an issue. But so in addition to me, like I said, we have quite a couple of people. But for us, typically, we don't wait for you guys, people to reach out to us. We also do market scans, engage with accelerator programs and also VCs to see what's in their portfolio, right? And I think the critical thing for us is product market fit. We have the customer base. We don't want our customers to go outside of our ecosystem to get service. Like Yvonne said, meet the customers where they are. So we're looking for products that help us meet our customers where they are, but within or by getting it through our ecosystem. So that's it for us.
Fantastic, I like that. I really like, so when you first said you don't want customers to go outside your ecosystem, I was looking at you like, is it a cult? But I think I understand it better, because when you have an ecosystem where all your needs are met, then it becomes, a partnership. Exactly. I have one cheek question for you, Olumide. As an investor who's also very involved, and I guess I'm throwing this to also you and Maya, when you think about investment and working with startups from seed to scale, what are 2 minutes insights, a fun story of you helping a fintech startup, something that you did, that you know that this particular thing you did improved and helped them get from seed to scale?
I think it's not anything. It's to go and double at CBN. I'm going to beg, because sometimes innovation goes ahead of regulation, and the hammer wants to come down, and you have to go and quickly beg someone. That's the real answer, actually. I'm not, but because it's the company that is alive that can pivot. But obviously, sitting down with many companies and many founders, especially most of the companies many founders, it's your first time, right? You've not done this before, right? So it's sitting down with the founder to go through the ropes, right? I was watching a video recently from Vinod Khosla, the Khosla Ventures, one of the biggest investors in the world, and he said he never puts MBA students on boards because what have you seen, right? What have you built? As payroll day come and you couldn't meet payroll, and how do you relate with the founder going through that? And that's really the parts of the kind of engagements that you help with the founder in going through the motions of building, of bouncing ideas, of critiquing ideas, of working together in that journey. So I think it's really being not therapist. Sometimes an investor is a therapist to founders, but being that sounding board and encouraging founders.
Thank you, Olumide. Maya, over to you. But just before you answer, we're still waiting for the email address, please. Bola, please, can we get Ayodeji Aina's email address on the screen? We will not leave this thing. It's not Fintech Summit we want. See these people. They put Fintech, Ayodeji Aina at firstbanknigeria.com. That's what we want. We don't want Fintech Summit. Do you want Fintech Summit? No. So they don't want, the no's have it. Please, Ayodeji's email address on this, big on the screen. Maya, over to you.
Wait, what's the question one more time?
What, as an investor and a partner, what thing have you done that you can say one of your portfolio companies has helped them move from seed to scale?
When we make an investment in a company, we always try to do something transformational for the company in their first 30 days. Ideally, we start before we even make the investment. And I realized, I was actually just having this conversation today with someone. I was like, oh, this company, we're looking at them, we might make an investment, but I want to help them connect to this investor and these potential channel partners. And they were like, why would you do that? Like, why would you waste your time if you're not potentially going to invest? Like, then it just gives access to the company to all these contacts, and then they're not going to take your cash. And I was like, actually, I think probably in majority of the companies we've ever invested in, the support starts before we actually write the check. Building trust, I would say that trusting relationship of the founder knows that they can come to you and knows that you're not just in it for the money. I'd say that's probably the most important thing that facilitated us in building a relationship that could help the founder get from seed to scale. And I mean, practically, we focus on access to later stage investors and biz dev relationships, so actual generating revenue for the company. And that will be like, I will go and sit in the office with the founder and help them pitch to their potential client. We've done that for one of our downstream marketing technology companies, other companies in our portfolio. Like, if there is no, there is, you just haven't found the way yet. Absolutely. And sometimes they need your encouragement and support to do that. And I would say the last thing is remembering that founders are people too. Like, when we have events, a lot of investors will be like, you're gonna come and, network and do this thing. Everybody does networking. But for us, we're like, you're not gonna do any work. Hang out. Come and hang out. Come and do yoga. You've been to them before. It's like, come, meditate, do yoga, like get a massage. Founders work.
In Elashe?
Yes, take nice boats. Yes, we like to give the time for founders to rest because they probably are not giving it to themselves in any other space. And it also builds that trust. Like, if you are having a hard time in your personal relationship, if you are having a hard time making rent, if you are having a hard time XYZ, you don't want to do this anymore, you want to give up, you can have a real conversation with us because we've been there consistently being like, call us when you're in trouble or let us know when you need to relax.
Perfect. Thank you very much. Since they don't want to put Ayodeji's email address on the screen, my last question to you is, what is your email address? What is the website of... So what is your email address? That's my serious last question. Last question. Spell out your email
And
address.
Twitter handle.
Your email address.
Okay, my email address is ayodeji.o.aino@firstbankgroup.com.
Slowly, please. Ayodeji.
Ayodeji.o.aino.
Aino is A-I-N-A at FirstBankGroup.com. Did we get it? Thank you very much. All right, we have time for one question. If there's one question in the audience, very quick question, general. Okay, I see one hand at the back there. Do you have a mic? Can you please? Oh, there's one coming to you.
Good afternoon. My name is Ekundayo Temitokpe. I run a company called Get Equity. Helps you invest in alternative securities across Africa. My question to the panel is regarding where you see the current ecosystem, right, in terms of investment opportunities. As we understand, the macroeconomic efforts are basically cyclical, right? More people are moving away from equity deal types to more debt and other alternative securities. Are you still, will I say, interested in the landscape, or it's a case of everyone almost doing the same thing right now, especially from a fintech perspective, or it's a case of there's still diamonds in the rough and we just need to find them harder? Thank you.
Thank you, Timta. Do you want to start, Yvonne?
Sure. I mean, again...
Can I just enforce like 30 seconds each?
Short answer is yes. I mean, we live in Nigeria. There's no shortage of problems, right? And as long as there's problems, there's always going to be a solution and a sustainable solution that you can turn into a big business, right? So short answer is yes. I think with what's happening, especially at the macro level, it means that the bar is higher in terms of those that would succeed, right? You know, so that's only. But in terms of, look, are there still investment opportunities? Absolutely, yes. There's a ton of problems that need to be solved.
Thank you, Yvonne. Maya?
And the dynamics of the market that we see today are not what they are going to be tomorrow. As much as we would like to think that the African market functions entirely independently, it is still highly correlated and highly tied to activities that are happening in the US. Trump was just elected. He's clarified very many times that he is going to drop interest rates. So all of this push towards safer investments, treasury bills, et cetera, there will be money coming back to venture capital and global markets that have higher yield. If you're strictly looking at making money, global investments, where are they putting their money right now? Makes sense, but next year, I would be willing to bet my last dollar that you lower interest rates, there will be more money coming back into the venture capital space, mark my words. So I'd say that is one thing, and yes, exactly as you're saying, things are really difficult in Nigeria right now. But what happened in the 2008 period in the US? What happened when there was the last recessionary market? What businesses came out of that? You know, Uber, Airbnb, et cetera, there are always diamonds to be made under pressure. Don't forget that.
Thanks, Maya. Olumide?
I think Maya and Yvonne really hit the nail on the head. I always say that to invest in Africa and to invest in Nigeria, you have to have a bad memory, right? You can't think of today. If you look at the reasons not to invest, there are 1,000,001 reasons not to invest. But any investor that is investing in the venture capital investor that is investing today in the early stage and is talking about 1,600 exchange rate, that's not a serious investor because that's not what it's going to be forever. And so you're betting on the long term and you're betting on a digital first young population that will have some spending power. So you have to have a bad memory.
You have to have a bad memory. I like that one. Ayodeji? Aside your email address, generous.
So the way I look at it is, if you take an Africa-wide view, right, Nigeria might, Yvonne said the bar is high in Nigeria, right? you might go to other countries. So you look at DRC, for example, which is like 10 years behind, right? So that could or will give you more opportunities, better returns than even if you're looking at solely Nigeria, for example.
And FirstBank is going to take us there, right?
Well, FirstBank is in DRC, so please, we can help you set up things there as well.
ayodeji.o.aino@firstbankgroup.com. Got it?
Yeah.
Panelists, thank you so much for your time. Please put your hands together for them. If we take photos. Okay, please.
Can we have the FirstBank team come up on stage? Lande, Wires, and any Manco member present? Okay, can we have Victor come up on stage as well?
Road's gonna go. Sunrise will carry us home. We don't need nothing but time. Take off and enjoy the ride. You name the place and we'll go. Till sunrise will carry us home.
Thank you very much. So can we have the panelists come down to my right? No, my left. Apologies, I'm ambidextrous. Okay, come down this way so we can give you. Thank you so very much. It's been a beautiful day, right? And for everyone in the room present at this moment, I'd just like that you please give yourselves a round of applause. You have stayed through till the very end. We appreciate you. We do not take your presence for granted. There is a part 2 tomorrow, certainly. And tomorrow we are going to have all of our events and sessions right here in the room. Today we had a lot more online sessions because we needed to be able to cater to our participants across the globe. Of course, we had much more numbers online, so there were online virtual master classes. But tomorrow, certainly, all of the concentration will be in the room. It will be a much fuller room and would have a lot more engagement right in here. So we want to implore that you please come early, bright and early tomorrow, ready for the next set of conversations as we tie this in a wrap tomorrow on day 2 of this FirstBank Annual Fintech Summit 6.0. Have you had a great time today? Have you had a great time today? Thank you very much. On that note, I'd like to invite to the stage Mr. Victor Asante, the MD FirstBank Ghana, to give the closing remarks. Thank you, and over to Mr. Victor. Okay, so for our online participants, we appreciate you. We didn't forget you at all. We look forward to having you tomorrow. I believe that the link remains the same to be able to join in on the conversations and engagement tomorrow. So please join in, get everybody in the industry, friends, regulators, everyone, investors, to join in on conversations tomorrow. And we will be here to serve you a beautiful bouquet as well.
Just to add that the online audience, we're looking forward to having you join us physically tomorrow. For those in Lagos, it will be great if you can join us in the hall tomorrow. Remember, we have the regulator roundtable and lots of other insightful discussions tomorrow. So please be part of it in person tomorrow. Thank you.
Thank you very much.
Well, I guess that does it then. The summary has been given. Thank you very much. I think it's been a very fantastic day, very engaging. Those of you got here at 8 o'clock and I stayed on to 5 p.m. We say a special thank you to you. We started off with, I think, the welcome from Yinka, who promised us a very fantastic day, and we've just had that. Incredible, fantastic day today. start to try it, then I can assure you that as a Ghanaian, eating Nigerian jollof and enjoying it means that it has been a good day. I understand that tomorrow is even better. I'll see you all. Like you've been told, please come in early and let's have a good time. Thank you for coming and see you tomorrow. Thank you.